हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल अगर आज देखोगे तो नेचुरल गैस कल एक अच्छा सेलिंग का ट्रेड बना था। फाइनल टारगेट हिट हो गया था। मार्केट वहीं पर एग्जैक्टली हुआ है, तो वहां से एक बाइंग का प्लान करते हैं। एंड क्रूड ऑयल में कल मार्केट वापस पॉइंट ऑफ इंटरेस्ट पे आया था, वहां से सेलिंग आई। आज गैप अप हुआ, वापस थोड़ी बहुत सेलिंग ही आ रही है। मुझे लग रहा है शायद फॉरेक्स में इस सपोर्ट पे ना आ गया हो। एमसीएक्स में नहीं आया है तो देखते हैं। बाकी नेचुरल गैस फ्यूचर की एक्सपायरी है, थोड़ा सा ध्यान रखना। तेज फ्यूचर एक्सपायरी इन नेचुरल गैस, तो वॉल्यूम हो सकता है नेक्स्ट मंथ के फ्यूचर में ज़्यादा। एंड एक बाइंग यहीं पर प्लान रहेगी। बाकी क्रूड ऑयल जब तक पॉइंट ऑफ इंटरेस्ट के ऊपर नहीं जाता, इट इज़ अ रेजिस्टेंस। मार्केट को भी देखोगे तो बैंक निफ्टी तो न्यूट्रली बना हुआ है। के ऊपर अगर जाना है इसको तो एटलीस्ट बैंक निफ्टी फ्यूचर को 61, 61,400 के ऊपर सस्टेन करना पड़ेगा 15 मिनट में, तभी कहीं भी ऊपर जा पाएगा। नहीं तो यहीं से वापस रिजेक्शन मिलता रहेगा इसको। तो इट इज़ ऑन रेजिस्टेंस काइंड ऑफ। ठीक है, वैसे तो मेरे को लग रहा है न्यूट्रली बना हुआ है, बट या जब तक 61,400 के ऊपर नहीं निकलता, इट इज़ ऑन रेजिस्टेंस। इसके ऊपर सस्टेन किया तो ऑल टाइम हाई के ऊपर चला जाएगा डेफिनेटली। नहीं जाता है तो ये रेजिस्टेंस ही है इसमें 61,400 के अप्रॉक्सीमेटली 15 मिनट टाइम फ्रेम पे। यहाँ से कल भी मार्केट ने रिजेक्शन लिया था। मार्केट ओपन हुआ था, रिजेक्शन लेके नीचे गिरा था। आज उसी लेवल पे वापस आ गया 15 मिनट टाइम फ्रेम पे बैंक निफ्टी। एंड निफ्टी को देखोगे, निफ्टी थोड़ा सा ज़्यादा प्रेशर में है। गैप डाउन ओपन हुआ, उसके बाद से थोड़ी बहुत सेलिंग ही चल रही है। कल एक रेजिस्टेंस था 5 मिनट टाइम फ्रेम पे, मार्केट वहीं पर क्लोज हुआ था। आज गैप डाउन ओपन हुआ 25,700 के अराउंड 5 मिनट के अकॉर्डिंग। 15 मिनट में तो रेजिस्टेंस दूर था 25,000। 870 टू 890 के अप्रॉक्सीमेटली। अभी फिलहाल अगर देखें तो नीचे एक सपोर्ट है 25,400 के अप्रॉक्सीमेटली आई थिंक। ठीक है, ये एक चार्ट है आपका। ये 15 मिनट का फ्यूचर का चार्ट है। तो इसमें कल ये रेजिस्टेंस पे क्लोज हुआ था 5 मिनट के। 15 मिनट में तो रेजिस्टेंस दूर है जैसा मैंने बताया, बट 5 मिनट के एक रेजिस्टेंस एरिया पे ये क्लोज हुआ था कल एग्जैक्टली। वहां पर क्लोज होने के बाद मार्केट में गैप डाउन ओपन हुआ है। अभी के लिए 5 मिनट टाइम फ्रेम पर ये एक सपोर्ट भी है शायद इसमें। वैसे तो वो सपोर्ट मल्टीपल टाइम टेस्ट हो गया, बट अभी भी है, ब्रेक नहीं हुआ है। तो इट इज़ अ सपोर्ट इन अ 5 मिनट टाइम फ्रेम। तो ये 5 मिनट की एक रेंज लग रही है। 15 मिनट में तो लेवल जैसा मैंने बताया दूर है, काफ़ी दूर है। ऊपर रेजिस्टेंस 25,870 टू 890 के अप्रॉक्सीमेटली देखने के लिए मिलेगा। ठीक है, वो 15 मिनट का रेजिस्टेंस, मेजर रेजिस्टेंस जहाँ से रिसेंटली सेलिंग आई थी। और ये जोन देखोगे 5 मिनट टाइम फ्रेम का, ये भी मल्टीपल टाइम टेस्ट हो गया है। देखना पड़ेगा मार्केट अब होल्ड करता है नहीं करता है इसको। अभी 1:30 न्यूयॉर्क लंदन सेशन की ओपनिंग होगी शाम को। 6:30 न्यूयॉर्क सेशन ओपन एंड डेटा भी है आज। आई थिंक यूएस प्रेसिडेंट का स्टेट ऑफ द यूनियन का स्पीच भी है। 8 बजे यूएस मार्केट ओपन। 8:30 कंज्यूमर कॉन्फिडेंस और रिचमंड मैन्युफैक्चरिंग इंडेक्स गोल्ड और सिल्वर को मेनली इंपैक्ट करेगा। गोल्ड और सिल्वर भी देखो। फॉरेक्स चार्ट में थोड़ा सा गैप अप के बाद कंटिन्यूसली प्रॉफिट बुकिंग में ही चल रहे हैं अभी। ये देखते हैं निफ्टी 50 यहाँ से रिकवर करता है नहीं करता, इंपॉर्टेंट जोन है। इज ऑन सपोर्ट नेचुरल गैस, रिमेंबर कल का ही सपोर्ट जोन है। सेलिंग का ट्रेड था उसमें से निकल गए होंगे, आई होप सो कल ही। उसको कंटिन्यू मत करना, नीचे सपोर्ट है तो थोड़ा रिवर्सल यहाँ से एक्सपेक्टेड है। वॉल्यूम देख लेते हैं फ्यूचर के चार्ट में, क्योंकि एक्सपायरी है तो हो सकता है वॉल्यूम थोड़ा सा कम रहे करंट मंथ की एक्सपायरी में। सिल्वर ऑप्शन की भी एक्सपायरी है आज। देखो वॉल्यूम कम ही है, यस। फ्यूचर चार्ट में देखोगे नेचुरल गैस के करंट मंथ के फ्यूचर में थोड़ा सा अब वॉल्यूम कम है एज कम्पेयर टू नेक्स्ट मंथ फ्यूचर। ऑलरेडी ऑप्शन की तो एक्सपायरी हो गई है, तो चाहो तो नेक्स्ट मंथ का फ्यूचर भी यूज़ कर सकते हो, वैसे भी आज लास्ट डे है फ्यूचर का। तो नेचुरल गैस में अगर ऑप्शन ट्रेड कर रहे हो तो मार्च मंथ का ऑलरेडी ऑप्शन चल ही रहा है, उसमें 29 डेज अभी भी हैं। बट फ्यूचर को देखोगे तो फरवरी मंथ की एक्सपायरी है आज, तो थोड़ा सा वॉल्यूम हो सकता है कम दिखे, या फिर एसिमेट्रिक वॉल्यूम देखने के लिए मिले फरवरी मंथ के चार्ट में। मार्च मंथ में तो खैर अच्छा वॉल्यूम है, बाइंग साइड सेलिंग साइड दोनों साइड आपको प्रॉपर लेवल देखने के लिए मिल जाएंगे, वहां पर प्राइस भी थोड़ा सा आपको चीप मिलेगा। करंटली ट्रेडिंग एट 267, 267 टू 68 रेंज। बट जो फरवरी जो मैंने चार्ट लगा रखा है फरवरी मंथ का, दैट इज ट्रेडिंग अराउंड 272 273, और थोड़ा सा वॉल्यूम कम है। ठीक है, सेल साइड के ऑर्डर ज़्यादा लगे हुए हैं इसमें, बाइंग साइड पे बहुत कम वॉल्यूम बचा हुआ है। ऑलमोस्ट कह सकते हो 8 to 9 टाइम्स ज़्यादा सेलिंग ऑर्डर लगे हुए हैं नेचुरल गैस के फ्यूचर में, करंट मंथ में, करंट लेवल पे। सो थोड़ा सा एसिमेट्री है चार्ट में, तो ध्यान रखना। एक्सपायरी है आज नेचुरल गैस फ्यूचर की, एज वेल एज जो लोग सिल्वर में ट्रेड करते हैं एमसीएक्स में, तो सिल्वर में भी आज ही एक्सपायरी है, तो वो लोग भी ध्यान रखना। एमसीएक्स में जो लोग ट्रेड कर रहे हैं सिल्वर को, सिल्वर ऑप्शन एक्सपायरी आज रहेगी। इंपॉर्टेंट रहेगा आज स्टेट ऑफ द यूनियन स्पीच, क्या बोलते हैं ट्रम्प। आई थिंक आज इंडियन प्राइम मिनिस्टर भी चले जाएंगे इजराइल के विजिट के लिए, तो वहाँ से कुछ डेवलपमेंट होती है तो वी विल सी दैट एज वेल। और परसों आई थिंक 26 को, 25 या 26 को यूएस और ईरान की फिर से एक मीटिंग है, दैट विल आल्सो इम्पोर्टेंट फॉर अस। नेचुरल गैस करंट मंथ के फ्यूचर में इस लेवल को होल्ड नहीं करता है, तो फिर अगर यहाँ से कहीं ब्रेक डाउन हो गया, इन केस ये 270 का लेवल होल्ड नहीं कर पाता है 15 मिनट टाइम फ्रेम पे, देन वी कैन सी प्राइस शुड मे बी फॉल टुवर्ड्स 250 254, वो जो प्रीवियस एक लेवल था हमारे पास, वहाँ पर भी प्राइस अभी काफ़ी टाइम से आया नहीं है, तो पॉसिबिलिटी है कि वहाँ पर भी प्राइस एक बार आने की कोशिश करे उस पर्टिकुलर जोन पे। इस मंथ का फ्यूचर थोड़ा सा ज़्यादा वॉल्यूम के साथ है और प्रॉपरली ट्रेड कर रहा है। निफ्टी भी वापस सेलिंग में आ गया। निफ्टी तो मुझे लग रहा है आज कुछ ज़्यादा ही गिरेगा। ओपन इक्वल टू हाई अगेन। इसकी मंथली टाइम फ्रेम कैंडल देखोगे ना, ज़्यादा ठीक नहीं लग रही है। कंप्लीट वॉलेटाइल कैंडल लग रहा है मुझे, कोई बड़ी डायरेक्शन आने वाली है। इतनी परफेक्ट स्पिनिंग टॉप कैंडल या फिर आप कह सकते हो डोजी कैंडल बन रही है। 3 दिन और बचे हुए हैं मंथली टाइम फ्रेम की कैंडल पे। अगर इसी तरह से ये क्लोज होती है ना, तो देयर इज अ वेरी हाई चांसेस कि एक बड़ी डायरेक्शन मिल सकती है। इस तरह की कैंडल नॉर्मली बहुत रेयर देखने के लिए मिलती हैं निफ्टी या फिर किसी भी ट्रेडिंग सेगमेंट में इन अ हायर टाइम फ्रेम। ठीक है, इस तरह की कैंडल एक यहाँ पर देखने के लिए मिली थी। ये इलेक्शन से एक दिन पहले मार्केट ने उसके बाद एक बड़ा मोमेंटम अपसाइड किया था। ठीक है, एग्जैक्टली आप कह सकते हो बहुत ही माइन्यूट सा डिफरेंस। इस गेन को अगर ये लगभग 50 पॉइंट या 30 पॉइंट के अंदर एंड करती है इस मंथ, बेस्ट रहेगा। इस तरह की कैंडल यहाँ थी ये आपकी फ्यूचर चार्ट में, मई 2024 की कैंडल। नेक्स्ट डे मार्केट ओपन हुआ था, नीचे गया, पहले ऐसे उड़ाए और उसके बाद फिर मार्केट ने रैली दिखाई थी। तो ये कैंडल मुझे लग रहा है इस कैंडल का हाई लो बड़ा इंपॉर्टेंट हो जाएगा। अब क्लोजिंग देखनी पड़ेगी बाय द वे कैसी आती है। उससे पहले देखोगे इस तरह की कैंडल एक यहाँ पर भी है, ये आपका मार्च 2023। बाकी यूएस में भी कोल्ड वेव वहां पर भी इंक्रीज हुई थी, उस वजह से नेचुरल गैस थोड़ा सा बुलिश हुआ था पिछले 2-3 दिनों में, वापस लग रहा है मुझे वो न्यूज़ का इम्पैक्ट भी चला गया है। न्यूज़ की वजह से बुलिश होना था, आई थिंक ऑलरेडी डन नाउ, टोटली बेस्ड ऑन द टेक्निकल। बाकी गोल्ड को भी देखोगे, गोल्ड रिट्रीट किया है, 1 आवर टाइम फ्रेम का एक रेजिस्टेंस जोन था, 4 आवर में तो अभी तक हिट नहीं हुआ, 1 आवर टाइम फ्रेम पे 5250 टू 300 के आसपास रेजिस्टेंस था, वहां से रिट्रीट किया है। देखो इसी तरह से चलता रहा तो मुझे लग रहा है प्राइस अगर प्रॉपरली रिजेक्शन लेता है तो एक पुल बैक दे सकता है वापस, 5030 टू 5040 के अप्रॉक्सीमेटली, वहां से एक वापस बाइंग एक्सपेक्टेड रहेगी। गिरे तो बढ़िया है वापस बाइंग के लिए। यूएस वेदर फोरकास्ट देखोगे, वार्म वापस किया गया है, पहले कुछ ज़्यादा ही ठंडा कहा जा रहा था होगा, बट ऐसा हुआ नहीं। ऑलरेडी न्यूयॉर्क में देखोगे तो वहाँ पे काफ़ी डिस्ट्रप्शन हो चुका है, एंड इफ़ यू लुक एट द यू नो टेम्परेचर फोरकास्ट, नेचुरल गैस देखो रीच करने वाला है सपोर्ट पे। यहाँ पर एक बाइंग का प्लान करेंगे, कैंडल देखते हैं पहले। नॉर्मल कैंडल ही होनी चाहिए, ओपन इक्वल टू हाई बनेगी तो बाई नहीं कर पाएंगे। थोड़ा सा मैंने कहा ना वॉल्यूम थोड़ा कम है, तो कैंडल थोड़ा सा गैप अप गैप डाउन नॉर्मल हो सकती है, ध्यान रखना इस फ्यूचर चार्ट में। नेक्स्ट मंथ में वॉल्यूम ठीक है, यहाँ पर थोड़ा सा इम्बैलेंस है, किसी एक साइड पे कुछ ज़्यादा ही वॉल्यूम है, अभी सेलिंग साइड पे ज़्यादा ही हाई वॉल्यूम वॉल्यूम बना हुआ है। क्रूड को भी देखो कि घूमे जा रहा है एक ही जगह पे, इस रेंज पे कुछ ज़्यादा ही कंसोलिडेशन में फंस गया है। याद रखना कल का लो थोड़ा सा सपोर्ट की तरह काम कर सकता है, देखना पड़ेगा प्राइस वहां पर किस तरह से रीच कर रहा है। क्रूड में देखोगे कैंडल ओपन इक्वल टू लो है, इसमें भी सडनली ओपन इक्वल टू लो बनी है। देखोगे रेजिस्टेंस दूर ही है, मेजर रेजिस्टेंस। अगर ये निकल जाता है इस पॉइंट ऑफ इंटरेस्ट के ऊपर तो फिर ऊपर ही जाएगा। लेकिन नीचे सपोर्ट बना के जा रहा है, आ नहीं रहा है सपोर्ट पे वापस बाइंग के लिए, इतना रिट्रेसमेंट ही नहीं आ रहा है। ये एक रिट्रेसमेंट था एग्जैक्ट लेवल से थोड़ा सा दूर, फिर ये हाफ ही लेवल तक आया है। देखोगे तो बुलिश ही है, क्रूड ऑयल बेरिश तो नहीं है खैर, बट ये आप कह सकते हैं न्यूज़ बेस्ड ड्रिवन ज़्यादा है। Afternoon, US Secretary of State Marco Rubio will brief the Gang of Eight on Iran, a State Department official told News Nation. Who is Gang of Eight? Okay, they are talking about the Democrat Party. The Gang of Eight refers to a group of eight congressional leaders in the United States who are briefed on classified intelligence matter and play a critical role in overseeing the intelligence community. And minority leaders of both the House of Representatives and the Senate. तो आई थिंक यूएस सेक्रेटरी ऑफ स्टेट कल बताएंगे यूएस के मेनली जो लीडर्स हैं उनको, कि वो करने वाले क्या हैं यूएस में। अभी भी होल्ड किया हुआ है 5 मिनट के उस लेवल को, 25,450 टू 460, दैट वाज अ 5 मिनट टाइम फ्रेम जोन, स्टिल होल्डिंग। बैंक निफ्टी आना थोड़ा सा पॉजिटिव हुआ है, देखना पड़ेगा ये निकलता है नहीं निकलता है 61,400 के ऊपर। 61,400 के ऊपर अगर ये सक्सेसफुली सस्टेन कर गया 15 मिनट टाइम फ्रेम पे, ऑल टाइम हाई के ऊपर जाना, फिर ऑलमोस्ट 99.99% श्योर हो जाएगा। अगर ये सस्टेन नहीं करता है 61,400 के ऊपर और यहीं से रिजेक्शन लेता है तो इट विल कंटिन्यू फॉल। ऑलरेडी यहाँ पर मल्टीपल टाइम रिजेक्शन है, कल मार्केट डीप लेवल से रिजेक्शन लेके आया है, तो देखना पड़ेगा क्या करता है। ऑलरेडी 120 पॉइंट पॉजिटिव बैंक निफ्टी फ्यूचर। बैंक निफ्टी को भी देखोगे, इफ यू लुक एट द बैंक निफ्टी फ्यूचर मंथली चार्ट, इतना ज़्यादा बुलिश है। Nifty future is completely bullish in a monthly time frame, weekly time frame it is super bullish as well। इस मंथ थोड़ा सा डोजी टाइप कैंडल बनी है कह सकते हो। 3 दिन बचे हैं वीकली टाइम फ्रेम की कैंडल की क्लोजिंग में, अगर इसी लेवल के आसपास क्लोज होती है, ज़्यादा बड़ा मोमेंटम नहीं करता है प्राइस अब डाउन साइड पे स्पेसिफिकली, तो फिर हम एक्सपेक्ट करेंगे बैंक निफ्टी में ये जो वीक का हाई और लो होगा दैट इज़ वेरी इंपॉर्टेंट। इस वीक के हाई या लो की किसी एक साइड अगर कैंडल क्लोज करती है बैंक निफ्टी फ्यूचर में, देन वी कैन एक्सपेक्ट कि प्राइस फिर उसी डायरेक्शन पे जाना चाहिए, स्पेशली अगर डाउन साइड पे क्लोज करी इस वीक के लो के नीचे, अगर ये वीक की कैंडल इसी लेवल के आसपास कहीं क्लोजिंग में आती है तो फिर हो सकता है एक डाउन ट्रेंड स्टार्ट हो, अप साइड पे क्लोज करेगी तो फिर कंटिन्यूएशन में जाएगा मार्केट। तो डायरेक्शन विल क्लियर कि प्राइस मूव किस साइड करने वाला है इन बैंक निफ्टी फ्यूचर स्पेशली। निफ्टी गिरता है 30%। नेचुरल गैस में भी कोई रेजिस्टेंस नहीं है बीच में, ठीक है। अभी यहाँ देयर इज नो रेजिस्टेंस। कल का जहाँ से सेलिंग जोन था वही एक रेजिस्टेंस है फिलहाल के लिए। नेचुरल गैस में भी कैंडल ओपन इक्वल टू लो है। प्रसाद जी, कैन क्रूड बी स्कैल्प ऑन डाउन साइड? स्कैल्पिंग मैं करता नहीं हूँ सर, तो मैं इस पर कुछ कमेंट नहीं करूंगा। नॉर्मल ट्रेड ऑन द लाइन। इन क्रूड ऑयल एज वेल एज इन नेचुरल गैस। ठीक है, ये कोई रेजिस्टेंस जोन नहीं है, दैट इज अ पॉइंट ऑफ इंटरेस्ट। परसों से वहीं रुका हुआ है, परसों भी सेलिंग आई थी, कल भी सेलिंग आई है, वो भी उसी लेवल पे रुका हुआ है। निकलता है इस लेवल के ऊपर तो फिर वही 6380, 6400 ही रेजिस्टेंस है। नीचे कल का लो और उसके नीचे 5840 45 इज अ सपोर्ट जोन इन 15 मिनट। बाकी नेचुरल गैस में एक सपोर्ट जोन यहाँ पर ही है आपका 268 270 एंड देन 250 टू 254 इन 15 मिनट टाइम फ्रेम जोन। स्कैल्पिंग आई विल सजेस्ट यूज द स्मॉलर टाइम फ्रेम लाइक 5 मिनट और 1 मिनट टाइम फ्रेम। 15 मिनट में स्कैल्पिंग तो बहुत रिस्की हो जाएगी। स्कैल्पिंग कर रहे हो तो फिर स्मॉलर टाइम फ्रेम पे 15 मिनट इज वेरी हाई। US Senator Lindsey Graham on Iran. If the Ayatollah goes and the people let the people take him down with our help, Hamas, Hezbollah, Houthis, all the terror proxies fall. Saudi Arabia will get back to the table trying to normalize with Israel. The entire Middle East will be a new place. The world will be a lot better. क्रूड ऑयल की इन्वेंट्री कल आएंगी ना, एक बार फोरकास्ट देखें जरा। हाँ नहीं, फोरकास्ट भी नहीं दिया इन लोगों ने। बिटकॉइन को भी चेकआउट करोगे ऑलरेडी काफ़ी लो आ गया है। अकाउंट सबमिट्स हायर ऑफर फॉर वरनर ब्रोस। लग रहा है अभी भी नेटफ्लिक्स का इशू रिजॉल्व नहीं हुआ। The new bid improves on the $30 a share all cash proposal that Paramount took directly to Warner Bros. Shareholder on December 8th and addressed some of the company's concern with previous offers.
Financial crisis when a rush to make loans ended disastrously. Speaking to investors, Diamond responded to a question about fierce competition in the financial industry.
Unfortunately, we did see this in 05, and 06, and 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business or something like that.
And coming up, Standard Chartered announces a $1.5 billion buyback. We'll be joined by CEO Bill Winters for a full conversation next. This is Bloomberg.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. President Donald Trump's new 10% global tariffs kick in as the White House seeks to preserve the president's key economic policy. Stocks in Asia shrugging off the AI scare trade that dominated Wall Street as investors snap up chipmakers. European futures pointed to a higher open. And the European Union fails to agree on a fresh round of sanctions on Russia as the war in Ukraine enters its 5th year. All right, let's take a look at these markets because, boy, did we see a little bit of a jolt yesterday. That's the Trinu report plus more comments from Nassim Taleb. As Ed Yardeni says today, we still believe AI is artificial but not intelligent. That's not what the market thought yesterday. The S&P was down 1%. The Nasdaq 100 was down 1.2%. It looks like we might be seeing a little bit of relief today, although that 10-year yield is down at 4.04 and change. And the 2-10 spread is now at 58 basis points, so we're really narrowing there. We also, of course, had Anthropic saying that its Claude code can help modernize COBOL. And that really caused a sell-off in IBM shares, a bit of a scare to IBM, which came out and said, look, we're not just a COBOL platform, we're also a mainframe platform defending itself to investors, I guess. And then the tariff uncertainty might be receding now that we know it's going to be 10%, at least for now, and not 15%. So all that's going on in these markets. Let's get a look now at your front page news. Beginning with the Wall Street Journal, the headline is Viral Doomsday Report Lays Bare Wall Street's Deep Anxiety About AI Future. As that hypothetical report by Citrini sparked concerns about AI disruption, causing pretty tumultuous stock moves. The Financial Times leading with former British ambassador to the US, Peter Mandelson, being arrested by UK police on suspicion of misconduct in public office. And finally, French newspaper Le Figaro leads with the war in Ukraine entering its 5th year. The headline roughly translating to 4 years after the invasion, the Russo-Ukrainian conflict is at a standstill. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers do go to DayBgo. Standard Chartered has announced a fresh share buyback as it reported weaker than estimated fourth quarter earnings. We're joined now by Bill Winters, CEO of Standard Chartered. Bill, very pleased to have you in studio. Let's start off with that fresh $1.5 billion buyback. You must think the shares are pretty cheaply priced.
No, our shares are a lot less cheaply priced than they were a year or 2 years ago, which is really good news. And I think we've got very strong momentum. But we believe in the company. We've actually produced a great set of earnings in 2025. Q4 was strong in almost every regard. I mean, really all of the key elements of our strategy are firing on all cylinders. And while the share price has appreciated a lot, we think there's a lot further to go. So we're very happy to buy an additional $1.5 billion back. We also significantly increased our dividend in the fourth quarter, so for the full year of 2025. And that's a further sign of confidence in our ability to grow our earnings from here.
Now, the shares have been a little bit all over the place. You were at all-time highs earlier this year, but then, of course, earlier this month, your CFO left. And I'm curious, is that a sign that investors really want a succession plan in place? And sorry to ask you this, but, do you have one?
Of course we have one. We always have one. First of all, I don't think our shares have particularly reacted to the departure of any one person. It's a team. And you'll see, in fact, today when we announce our earnings, I'll be sitting with our interim CFO and our head of investor relations, who had been working for the CFO, who are absolutely outstanding. And so we're not missing a beat in that. But of course, the market now wants to know, you had several internal successors. One of them, possibly, seems to, he definitely left, possibly a successor, is gone. What's next? The good news is we've got a great bench inside our bank. It's the best management team that I've worked with in my 11 years at Standard Chartered. And I think it's a highly desirable job for people outside the bank as well. So should the board, of course it's a board decision, not mine, my job is to develop the internal candidates. I think they're in great shape, and I'm not worried at all about our future.
You've been there 11 years. How long do you want to run the bank for?
We've got a strategy day or a capital markets day coming up in May. I'm definitely going to deliver that, and I want to deliver the strategy, right? I want to see that strategy through. Now, how long that takes, we'll see. I work at the behest of the board, but for the time being, I think investors should be confident that, one, we've got great momentum in our business. We've got a really, really strong 2025 behind us. We've indicated we've had a strong start to 2026. Early days, but nevertheless, nice to be able to say. We're going to have, I think, a quite compelling investor day in May. And Yeah, we're going to see it through
Okay,
from here.
you have my interest peaked now because you keep saying it's going to be compelling, and of course, all investor days were compelling. But you also said that you want to deliver the strategy. It's about to expire, and does that mean we might hear something in May about your future?
Oh, I don't know what's going to expire. You know, we set out a bunch of financial targets 2 years ago that took us through 2026. We've actually hit all those financial targets in 2025, or so a year ahead of schedule, on every single front. So this is a good time for us to refresh that guidance, which we'll do in May. We gave some guidance for 2026, which is quite encouraging. We upgraded our guidance for the remainder of this year, based in part on the strong start, but substantially on the really good momentum that we had through 2025. But in the Capital Markets Day in May, we'll give some longer term guidance. But more importantly, we'll talk about the strategic themes that are really sweeping the economy, but also finance. We know about the fragmentation of financial markets. We know about AI. We know about we have some ideas about the digitization of money. These are big things that are sweeping finance, and we're extremely well positioned on all of them.
So what will you be telling investors? And give us a little sneak preview.
Well, I can't give you a sneak preview.
Well, just a little bit. Will you be talking about maybe you want an M&A strategy from here on out? You haven't really done much M&A in your tenure, at least.
No, we haven't needed to. And, you know, all of our growth has been organic. And when we're growing our wealth business, which is an absolute jewel, you know, fastest growing wealth manager in Asia, third largest overall, closing the gap to 1 and 2. We've done that entirely organically. And, you know, this year has been a 20% plus growth year. I don't know that we can always do 20% plus.
So are you looking for targets?
You know, if there was something that was additive to our organic strategy, that was accretive, of course we'd look at it. But when you're growing the way we're growing, you definitely don't need to distract yourself with an acquisition, unless it's very compelling. So we're just full speed ahead. We're investing substantially. Yeah, I mean, we're returning a lot to our shareholders, but we're investing very substantially in the business, and we'll continue to.
Have you been looking at any books or doing any due diligence on any companies?
No.
Okay, well, that's fair enough. Talk to us a little bit about your idea that, you know, Hong Kong and Singapore, you wouldn't want to have to choose between them. But if you really, really did, if you had to choose one, would there be one that would tip?
Yeah, thankfully we don't. So it's really is hypothetical. And of course, it's London works for us. I mean, London has been our headquarters from inception. It works for us in a number of regards. One, it's quite a sophisticated regulatory regime. I think the fact that now successive governments, Tory and Labour, have both endorsed this competitiveness as a secondary objective for the regulators means that the regulators are becoming less assertive in terms of, I would say, eliminating some of the disadvantages that we've had historically in the UK, but also Europe. So you've got a sophisticated regulatory environment. You've got we're a global bank. London has always been a good time zone, super infrastructure, et cetera. So thankfully, we don't need to choose, and I don't expect we will anytime soon.
What about China these days? It feels like there was a time maybe a couple of years ago when everyone was saying it was uninvestable, and then it went through, you know, quite difficult periods. It seems to be on the up again now, and even, you know, the global regulatory environment and the global sort of trade environment is maybe even more favourable. What are your thoughts on China?
We're super bullish on China, and that's not to say that we think the market's going up tomorrow or that commercial property prices are going to increase. I mean, China has its challenges for sure, but the technology investments that China has made in leading edge technologies, the super high savings rate in the country, which is actually a drag on GDP growth, but it holds a lot. It tells a lot about their future in terms of the ability to deploy that capital into productive resources. These are very encouraging things. We've seen that the trade flows on the back of the tariff back and forth, and it's obviously not just been tariffs. There's also been, you know, protectionism going in all directions, industry arguments, etc. Trade is still very strong. Global trade is up. The Chinese trade surplus is up overall. Although it's down with the U.S., it's up with the rest of the world to a greater extent. So, you know, China is going to be fine. The U.S., I think, will also be fine. Both have economic challenges to address. I hope that the summit that the two leaders have in April will be one that sets an entente for how they can cooperate, or at least not destructively compete.
Yeah, well, so a bifurcated question then, you know, does somebody win out in the AI war? Or, you know, just the globe win in general? And then also on the trade war, does one win out?
I don't think anybody wins in a trade war. We know that trade increases productivity and overall prosperity. We also know that trade can leave people losing, leave people behind. So I hope that as we reset the global trading agenda, we're more aware than we were during the industrial hollowing out in the U.S. and Europe about the people that will otherwise be left behind. And of course, that will be very relevant in the case of the advent of AI. I think in AI, there will be winners and losers as well. And I think what we're clearly seeing right now is that the winners are companies that are transforming themselves faster than their competitors using these very powerful tools. The people that build the tools, we'll see. It's very hard to tell whether the massive investments in AI will be good for the people that are.
Sell-offs, though, are scary, right? I mean,
well, but the run-up was scary as well. So, I mean, we're selling off from a very high level.
I do want to ask you, because you said income growth will be around the bottom end of the 5 to 7% range. You had previously guided at the top end. You also said net interest income is going to be flat this year. You know, you could quibble that this is not a huge range and therefore it's not a big difference. But what is causing that little tiny bit of weakness?
No, well, it's not weakness. It's strength. Because we've had such strong growth in 2025, we're calibrating what we can then carry on to do in 2026. We call it the base effect. So you know, we've had super growth in 2025 across all of our lines of business, and we expect that to continue. The fact that we think we can produce flat-ish net interest income next year despite interest rate headwinds, and we'll have a tailing off in the Hong Kong interest rate, which is HIBOR, which is very relevant for us. The fact that we think we can go flat there is already quite a good outcome, and I think the market's happy about that. But to get to that 5% plus income growth, that means that our non-net interest income is going to be growing in double digits, which the market is quite impressed by, and I think they're reacting favorably to that.
Well, Bill, congratulations. I know the bonus pool has grown by 10% as well, so you're keeping your employees happy very much as well. That is Standard Chartered CEO Bill Winters. The ECB President Christine Lagarde has warned of the importance of central bank independence in dealing with inflation expectations. She was speaking after being awarded the Paul Volcker Prize at the National Association of Business Economics in Washington.
Without that independence being protected, being cherished, and being celebrated, as well as protected by accountability, I don't think that we would be capable of responding in the way we have, I think, to tame inflation, to control and respond to inflation expectations in the way we have. I think it's in the DNA of efficient central banking, and it's not a recipe for perfect success, and it's not to be seen in isolation. I think that it doesn't go without accountability. And if I look at my own central bank, the ECB, on Thursday, I'll be in front of the European Parliament to answer any question that the members of the European Parliament have on our monetary policy, on key themes that they select to discuss. And I think it's a critical component of that independence. So it's not unchecked independence. It's independence with the strong consideration of accountability to the representatives of the people.
Yeah, so independence does not mean isolation. I think you said that to Parliament as well. I'd like to ask you about a few weeks ago.
By the way, sometimes people think, oh, okay, well, the central banks are in this ivory tower and they have no understanding and no clue about what's happening in their economies. I think that is vastly unfair and not true. If I look at the institution I know best, the ECB, number one, we have constant contact with the corporate world, whether it's financial or non-financial corporates. Number two, we go out a lot and do a lot of reaching out. And I really command my executive board members to, go to basis, go to the grocery store and understand, the fabrics of life. Because it's always tempting to, retreat to academic work and to reading forever. No, it has to be grounded and rooted in real life. And I think that's part of the accountability as well.
ECB President Christine Lagarde. Coming up, new measures on healthcare and drug pricing. What can we expect from President Trump's State of the Union address? This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. Bloomberg understands that Anthropic is offering some current and former employees the ability to sell shares in the company at a valuation of about $350 billion. Sources say that would allow them to cash in at the same level as the recent $30 billion funding round. Bloomberg has been told that Paramount Skydance has raised its offer to buy Warner Brothers Discovery. Sources say the new bid improves on Paramount's $30 a share proposal made in December and addresses some concerns around financing. If the Warner Brothers board decides the new offer is superior to its current deal with Netflix, the streaming giant will have 4 days to respond. Trials of Novo Nordisk's next-generation obesity shot have disappointed after it delivered less weight loss than a rival drug by Eli Lilly. Novo's shares fell as much as 16% on the news, while Lilly shares gained. U.S. President Donald Trump will speak to Congress later today in the first State of the Union address of his second term. The speech will showcase the Republican president and his party's agenda ahead of crucial midterm elections later this year. To discuss further, I'm joined by Bloomberg Politics editor Laura Davison. Laura, first, do you think the speech was frantically rewritten in the last 24 hours?
It's very possible. Trump always goes into a lot of these speeches with talking points. There are sort of key measures that are inserted into the teleprompter, but then he does a lot of riffing, what he calls the weave, in between some of these key points. So it's likely that he will have some prepared remarks, but also do a lot of speaking off the cuff. His advisors really want him to stick to speaking about the economy, his record of tax cuts, as well as some of these plans that he's touted going into the midterms to lower the cost of living, things like housing affordability, the decrease in energy, some of the AI investments, as well as having technology companies pick up the tab for some of their energy bills as it relates to AI. But it's also possible he could speak on a whole wide range of things. One close thing to watch for in particular is tariffs. What does he address in terms of what his next steps are there? He also, has recently attacked some of the Supreme Court justices who struck down this his sweeping tariffs just last week. Many of those justices will be in the room right in front of him in the front row in the Capitol tomorrow, and so this will be a big question about whether he will sort of directly address them, and particularly if he will insult them to their faces.
Right, it's going to be so fresh in his mind, right? But he does have other concerns, as you say. He has to think a little bit maybe longer term. And I'm curious, will all of his pledges hinge on corporate America, or will he also be reaching out to Congress in a way and asking for Congress's help?
Yeah, this is a huge, audience that he has. He, of course, has the public watching. He has the members of Congress in the room, as well as, kind of corporate leaders looking for signs here on what happens. Trump's tariffs that went into effect at midnight, just a couple hours ago in the U.S., that 10% levy is only in effect for 150 days. He needs Congress to renew that. So if he wants to move forward, he needs to build support in Congress. It is, at least right now, looking highly unlikely that will happen. You have, Democrats united in opposition to his tariff agenda, and as well as some Republicans who have recently voted against at least portions of the tariff agenda. So this, is going to be a hard sell going in. Republicans, who are facing an uphill battle headed into these midterms, want him to stick to talking about things like tax cuts, things like, future plans to lower the cost of living. They are not at all excited for him to talk about, things like, perhaps higher tariffs in the future, or, going off script on new controversies that could create problems for them back in their districts at home.
Yeah, and you mentioned it. It's a massively wide gap at the moment between his approvals and disapprovals, right? A 16-point gap, a 57% disapproval rating on average. What can he do to narrow that, Laura, given that even his fervent supporters have been thrown off recently by things like Epstein, the tariffs and so on?
Yeah, this is, sort of a huge question that his advisors are grappling with right now, particularly on what were his signature issues, the economy and immigration. He is now underwater on his approval there. So, his advisors are asking him to pull back on some of the most aggressive stances on immigration that he's taken. He's done that in Minneapolis, pulling out officers, on cost of living. This is sort of be the most important issue. The question is, is there anything that he can do to get consumers feeling better about the economy? There's been tons of uncertainty. While job data has been, relatively strong, there's been some concerns there. Prices, particularly in some sectors, looking at beef and energy in particular, continue to rise. This has all really vexed voters, and they're just not feeling good, as they're headed into 2026 and elections later this year.
All right, Laura, we will be eagerly watching, even if we have to stay up all night. Bloomberg politics editor and Washington Deputy Bureau Chief, Laura Davison. Plenty more coming up. This is Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
But if the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that a 25 basis point reduction in the policy rate was appropriate, and that such a cut should be made at the March meeting.
Fed Governor Chris Waller speaking at an event in Washington with the National Association for Business Economics. All right, let's have a look at some charts that might illuminate your day for you. This was the picture for IBM yesterday, a really poor picture. In fact, it caused IBM to actually come out with a blog post saying, we are not obsolete. We are not just a COBOL language or a platform for COBOL. We are actually a mainframe platform as well. And this, of course, after Anthropic came out and said, it's Claude Code can maybe do COBOL better than COBOL itself. So that'll show you this is as big a drop as we've seen since the year 2000. Don't want to suggest that there's any echoes there, but a lot of people are suggesting it. Let's move on to the next chart because we are also seeing this rush into safe havens. So this mainly on the tariff uncertainty, but you can throw in AI in there as well. That's been having a huge impact. Gold has continued its incline. So remember, we had a bit of a drop off. Well, we are well off our 50-day moving average now. We're not even that far off the record that was set January 29th at 51.70 there on the price of gold. And then maybe to illustrate it even further, let's take a look at Bitcoin because the diamond hands are folding, it seems. We just keep continuing to drop for Bitcoin. 60,000 is the next level to watch. Open interest is also fading. But of course, a couple of years ago when we were at 70,000, it was, a huge price. So we'll just see how all of this shakes out. To access all of these charts, do have a look at the Chart Go function on your terminal and save them. Now we have the Chicago Fed President, Austin Goolsbee. He's coming up on open interest at 2:30 p.m. London time. The opening trade is next. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you
you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning, everybody. It is Tuesday, February 24th. Here is what is on our agenda. The AI scare trade eases through the Asia session. US 10% tariffs are on. And we hear from Kaya Kallas, 4 years into Russia's full-scale war in Ukraine.
Well, as that AI scare trade eases, we are seeing futures pointing higher on both sides of the Atlantic this morning. We saw the S&P closing down 1% yesterday. And as traders pull away from haven assets, gold is on the back foot after a 4-day rally, but it does seem to have found a floor at $5,000 an ounce. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade. It is Tuesday. It is Tuesday, Lizzie, and another AI scare grips the markets. Certainly that was the story of yesterday. A little different into the Asia session, but let's linger on the negativity around this Citrini report and indeed the update from Anthropic. So it was the Citrini report that this time took aim at food delivery stocks, credit card companies, some of the private market players as well with exposure to private to credit and software businesses. So that was one part of the story. Then you added onto that Anthropic out with an update on Claude that talked about modernising the COBOL programming language, a dated programming language that IBM uses, and that sent the IBM share price down by 13%. And so it prompts lots of questions about where you can hide, if anywhere. Into the Asia session, things do look a little bit different. There have been some people talking about moving into emerging markets. Morgan Stanley talking more and more about that. The Asia trade on this has always been different. It's always been more about the hardware than the software. And so we see some of those markets opening up after the Lunar New Year holiday, benefiting from that kind of narrative. That's not the case everywhere, though, with Hong Kong having been open, actually in retreat this morning.
Yeah, fascinating to hear from the author of that Citrini report on Bloomberg TV. So essentially, it was a thought exercise in their words about what 2028 is going to look like, and saying that when AI gets cleverer and cleverer, it's going to replace more jobs. It's going to therefore not consumer spending. That will hurt the economy. And so governments need to tax the AI gains in order to help people when they're jobless, right? That, as you say, hit the delivery companies, the payment companies. But the next sectors that are going to be hit is the question. And he's saying that it could be insurers and banks and indeed the ECB looking at European banks' AI exposure. Interesting to hear from Jamie Dimon on this as well.
Yeah, absolutely. Really interesting from Jamie Dimon because he's on the search for cockroaches connected with the credit markets. He's been talking about that for some time. He's drawing parallels now with the GFC, saying people are doing dumb things for money, basically, lending for net interest income, for NII, in his words. And are there links with AI here? Well, on the one hand, he is saying that maybe there are going to be cracks coming through from the AI trade, and that's what everyone's talking about. But he sees no major impact on credit losses as a result of AI. So that is certainly something that we're going to keep in focus this morning.
And, of course, the private credit, the link here is partly that private capital got caught up in that sell-off because of the loans to software companies. And interesting on the equity side, Paul Davis, one of our columnists, had the note that software is the biggest single industry among private equity-backed businesses. So a lot of ramifications of all of this.
So there's clearly that link. The other preoccupation for markets over the past 24 hours has certainly been around tariffs. And just 2 hours ago then, Lizzie, we saw those 10% tariffs come in, those global tariffs from the Trump administration.
Yeah, and now we look ahead to President Trump's State of the Union address. Of course, we're going to hear about tariffs. He had threatened to raise that 10% to 15%, but we should note that he didn't officially give a directive to do that. So we're still waiting. We report that the White House is working on that formal order, but the timeline hasn't been finalised yet. And then the US looking at a range of new trade probes to impose new tariffs, but none of them are going to be as flexible as the IEEPA tariff powers originally.
Yeah, absolutely. So the Wall Street Journal reporting lots of sectors that could be in focus. So we'll keep this in mind as we go towards the European Open. So batteries, power grids, telecoms, chemicals and the like. And lots of other parts of the world, the rest of the world, you know, caught in whiplash on this trade policy change from the imposed by the Supreme Court and responding accordingly. Now, President Trump wants things to stay as normal as they've been, or at least wants other countries to stick to the deals that have been on the table. But the EU's paused its ratification process. India has postponed talks on the prior deal. Japan says they're still talking to the United States, but they've warned that they don't want any worsening of the deal on the table. And that's what's difficult for trade partners here, is the US is changing its side of these deals. And so doesn't that leave them then justification or at least room to pause, to think and to wait for clarity.
Yeah, the UK likewise saying nothing's off the table if the US reneges on its deal. But then look at the market reaction as well. So we've got gold now pulling back. That's partly because of the AI story, but also because the tariffs news has been digested a bit. Interesting to come back to China back after the Lunar New Year holiday, and base metals like copper have been rallying on the prospect of potentially lower tariffs for China. So look at that when it comes into the ramifications for the European Open. Could be good for oil prices as well. If you've got Chinese exports growing, that could feed into oil too.
Yeah, we'll certainly keep an eye on all of those commodities. With that in mind, let's think about our third topic on the agenda this morning, which is 4 years since the full-scale invasion by Russia in Ukraine. Of course, war predates that, but the full-scale invasion 4 years ago. Talks have been stalling in the most recent history, of course, and fighting seems to be at something of a stalemate. The current conversations seem to be around territory, obviously, about Russia's demands in the east of Ukraine, on control of Zaporizhia and the nuclear power plant there, but so many other questions about how, if any kind of ceasefire can be reached, how it would be enforced. Europe, in the meantime, really trying to find the money, still trying to find the money and trying to find the sanctions and implement those sanctions against Russia.
And yet Europe kind of on the sidelines here. As you say, the EU failing to approve that fresh round of sanctions against Russia because of the opposition from Hungary and Slovakia. It also meant that that €90 billion loan to Ukraine was upended. And then we have EU foreign ministers meeting in Brussels to discuss it all. We've got our chief Europe correspondent, Oliver Crook, sitting down with Kaya Kallas, sitting down with Kaya Kallas later on in this programme. But when does this war end? The big question. And it seems like the hopes that it would be wrapped up by the 4th of July 250th anniversary celebration that Trump is going to be hosting is extremely optimistic. And on the one hand, you could have Russia giving in on some of its red lines. That seems a distant prospect. Or on the other hand, the US abandoning Ukraine.
Right, so yeah, there's still a lot of questions to answer. And according to our reporting, some of the most recent fears that Ukraine has is that even if you get the Russians to a place where they agree on a ceasefire, which is not it's not today's reality, but even if you get there, then how long will that really last? And will that be a ceasefire that actually features sabotage, hybrid war, election interference, and all of the rest that they have come to suspect? So we will certainly keep that in focus and build our focus on that story as we get towards that interview with Kaya Kallas, who speaks on foreign policy for the Europeans. Of course, that coming up a little bit later on in the programme. What else do we have coming up on the programme? We'll, of course, keep AI very much front and centre. Daniele Antonucci will be with us, CIO at Quintet Private Bank. So we'll dive into the AI conversations there, the latest in the AI tantrum. Eric White-Ennis will be with us, JP Morgan Private Bank, EMEA Head of Investment Strategy. He's not seeing any sell America sign across markets. So what does that mean in the current rotation environment out of software? Brent Hoberman will be with us. Also great to get his view on what's been going on with AI and selling of software stocks. Co-chair of Enterprise Britain and executive chairman of Founders Factory. He's got a lot to say on how we kickstart tech within the UK context this morning. And Sandra Horsfield, Investec economist, will be with us to think about the US and global economy then, Lizzie, as we head into 2026 proper and as we wait for the State of the Union address, what the focus will be from President Trump.
Well, speaking of what's on the agenda for today, let's have a look. It is, as you have said, 4 years since the start of the war in Ukraine. And so Ursula von der Leyen is going to be in Kyiv as that war enters its 5th year. She's, of course, the European Commission president. And we have EU foreign ministers, meanwhile, meeting in Brussels, discussing in part how to end the war, but also, of course, how to handle President Trump's latest tariff threats. Meanwhile, we've got Apple's AGM and we've got an ear out for Fed speak from Chicago's Austin Goolsbee. He's on Bloomberg TV at 2:30 p.m. London time. And we'll be hearing from Governors Christopher Waller and Lisa Cook. But the main focus today, as we say, is President Trump's State of the Union address.
Yeah, absolutely. A Tuesday event if you're in the United States, creeping into our Wednesday morning here in Europe. But this will, tomorrow morning, be front and centre for us. Of course, this is a prime-time address. It's a chance for him to speak to the country. And the expectation is that economic policy and tariff policy will get some substantial mention during this. What that involves, we don't know. But he has, as you said, our White House reporting has suggested they are trying to move to that 15% global tariff. So we'll see whether there's any further update on that. But cost of living, affordability, clearly a policy priority as we head towards the midterm.
Which makes selling that new tariff policy even harder. President Trump's poll ratings, the lowest of this second term. we have a great column out actually this morning saying it's more about what President Trump doesn't say than what he does say in this address. Think about the use of tear gas against protesters, the impact of AI on the economy. How much does he actually want to say about those?
OK, absolutely. So matters economic and otherwise in focus for the State of the Union address. Let us get to some other news reports that we need to keep under review this morning. PA Media reports that Peter Mandelson has been released on bail after UK police arrested the former British ambassador to the United States on suspicion of misconduct in public office. This comes after the US Department of Justice released emails allegedly showing him forwarding government information to Jeffrey Epstein. Police also searched 2 properties linked to Mandelson as part of their criminal probe. His arrest deepens the crisis engulfing Prime Minister Keir Starmer over his decision to appoint Mandelson as US envoy despite his known links to Epstein. Mandelson has not been charged and his lawyer has declined to comment. President Donald Trump is pushing back on reports that the Pentagon is concerned that an extended military campaign against Iran could prove difficult, adding that his preference is still to strike a diplomatic deal. US and Iranian diplomats plan to meet for a new round of talks. That's on Thursday. And China has blacklisted 20 Japanese companies and tightened scrutiny on a raft of other firms, signaling Beijing's pressure campaign on Tokyo is not slowing. The curbs mark the latest escalation in a dispute over comments on Taiwan by the Prime Minister of Japan, Sanae Takaichi, last year, when she suggested Tokyo could deploy its military if China uses force to try and seize Taiwan. Takaichi has refused to withdraw her comments on the island democracy, which China claims as its own territory.
Well, coming up, Standard Chartered unveils a fresh $1.5 billion share buyback after reporting weaker than expected fourth quarter earnings. CEO Bill Winters tells Bloomberg the bank isn't missing a beat after the exit of its CFO. Plus, Jamie Dimon says he's starting to see parallels to the era before the 2008 financial crisis, when a rush to make loans ended disastrously. We'll bring you more from those comments. But up next, we check in on markets following yet another AI scare trader out on Wall Street. If you've got any questions of your own for our guests, please send them to us on IB+BB TV Go. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
I thought there was going to be a small reaction. It was definitely larger than we expected. But I think it's not that surprising when you take a step back and consider kind of where the markets are in the U.S. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
That was the Lotus CIO, Alap Shah, importantly the co-author of the Citrini report, the field of scare trade sell-off. That, of course, was dominating Wall Street in yesterday's session, and there he was speaking to Bloomberg overnight. Now, the bearish report outlined potential risks to various segments of the global economy due to AI disruption, dragging down shares in delivery, payments and software companies. IBM also dropping with its worst plunge in 25 years. That was driven by some news out of Anthropic, but still fitting in with that overall theme of concerns about what AI will and won't do to tech businesses. Let us speak to Daniele Antonici, co-head of investment and CIO at Quintet Private Bank, who's with us this morning. Daniele, nice to have you with us. Thank you for joining us. So that was the author of the report that's been much talked about, much cited over the past 24 hours, talking about what he sees as the losers from AI, or at least what could be, because it was just one scenario that got a lot of attention. Do you think we have a good sense of where the losses from AI will fall at this stage?
I think we are looking at this too much at an aggregate level. We need to be much, much more granular when you look at these things. So for me, there's going to be losers, but winners as well. We talked a lot about the enablers within the tech sector, then the risk, the valuations by be demanding. Now we're talking about some of the sectors and the companies that might be impacted that are going to be also beneficiaries from AI. And so we need to do more work and go deeper and to separate those who could benefit from those who will lose from
Okay, I mean, yes, so will any of those beneficiaries, will they be in the sectors that have been beaten up? Software or white-collar jobs in general? Because I suppose the end answer can't be that all software loses and all hardware gains. Otherwise, why is hardware gaining? So I mean, where will some of those gainers be?
Yeah, that's correct. So first of all, I would talk about size. For instance, I think that for the smaller, less profitable, unprofitable, more indebted firms, there's a problem there. Valuations are frothy. We might be in a bubble, after all. But for the more dominant ones, I think the picture is different. For firms that have an economic moat, quasi-monopoly, duopoly, oligopoly, they could be the winners. And when it comes to jobs, I think the picture is more nuanced. It depends on lots of different things. One is the pace of this structural change. Then, secondly, the practical utility of this technology, and there's a lot to figure out when it comes to that. So I think it's not all bleak. The reality, like we have seen from your interview with Lotus CEO, there I think the problem is that these headlines are created a lot of uncertainty. The trade has gone on for quite some time. It's been a multi-year trade. Valuations are elevated. So to me, the top-down dimension is much more important. And to our clients, we talk about diversification. We talk about hedging the dollar exposure. We talk about combining long-term AI exposure with other sectors as well.
So for you, this idea that 5% of white-collar jobs could be gone in 18 months because of AI is just hyperbole, right? But when you talk about the winners and losers, I get that there'll be winners, but how many losers do you need to have to pile up before it's a broader drag on the market?
I think it's hard to answer that. My point is that pinpointing a number, is it 5%? Is it a very small percentage? Is it higher than that? We'll see, but I think we need to differentiate. So when we look at investing, in my view, if the question is where long-term growth will come from, I think it will come from U.S. equities, the U.S. market, the U.S. economy. But obviously, valuations are a bit on the demanding side at the moment, and so we like to diversify geographically, sector-wise, and across a lot of other dimensions as well.
OK, so it's not a sell America narrative for you, even though we had all of that tariff drama over the weekend. I also want to talk about the impact of that, because you're underweight treasuries. Are you even less confident in the U.S. fiscal position because there's going to be less tariff revenue?
Yeah, I think a little bit. I think that fits into the story. So if you look at our equity strategy, it's quite global, effectively. But because the U.S. represents 2/3 of the total, we typically take some of that and reallocate, diversify to other geographies. Emerging markets, for example, is one of our highest conviction call. You have more attractive valuations. It's one way to diversify the AI story too. Remember, DeepSeek could benefit from dollar weakness, so we like emerging markets, for example, alongside the US. Then when you look at fixed income, it's the opposite. We are quite local. We're mostly European investors or UK investors. So we are underweight. We maintain a reduced exposure to US treasuries. If you think about it, that the GDP in Germany is in the 60s. So much, much lower. There's capacity to spend. The fiscal picture is stronger, is more under control. So we have an overweight position in European government bonds or UK gilts and variants of that, but a much reduced exposure on treasuries.
And you, Daniela, you say you are mostly European or largely European investors, and yet you're worried about inflation. I wonder where your inflation concern is coming from right now.
Well, inflation, I think, comes, or the inflation concern comes from the fact that we don't see interest rates coming down that aggressively. That is global. Obviously, the European Central Bank has been leading this. In the Eurozone, inflation is more under control. It's below 2%. The key policy rate is 2% as well. But in the US, especially, I think when you try to look at the AI themes, there's two time horizons that are very relevant. One is the near term, but could still span quite some time. And what these technologies have in common is that they are energivore technologies. They consume a lot of energy.
Yeah.
There's a lot of competition for resources as well. They tend to suck up a lot of these resources. And so I think that actually that could be inflationary.
Yes.
There could be capacity in the short term. There could be capacity constraint.
So AI, how the AI ties into your view then on inflation?
That's right.
It boosts inflation in the short term.
That's right.
But in the longer term, is it deflationary or disinflationary? I mean, we've seen technology over time often has been.
Yeah, exactly. So it could be disinflationary at longer horizons. Try to buy a plasma screen and you need to adjust for quality. But there could be more a disinflationary bout. But if it comes, I think it will come later on at longer horizons.
What if we see more euro strength? We saw it yesterday off the back of the tariff drama. How does that affect the ECB's rate path going forward? Would you be expecting to see more cuts, for example?
Well, if you ask me, first of all, I thought actually, in general, if you look at the overall market, the reaction to the tariffs itself was fairly limited. There were more redistribution effects. For instance, you could say that because of this, it's a flat tariffs, you have the emerging market complex that benefits where the average tariff level is actually lower than it used to be. We'll see if that's maintained. While if you look at the Western world, Europe, the UK could be another example, Japan as well. If you look at developed markets, that level is a little bit higher. So there's a redistribution effect, and that plays into our view that emerging market benefits are an overweight. They might benefit. But generally speaking, the euro, we think there is more to go when it comes to dollar weakness and euro appreciation. Obviously, we've already seen quite a bit last year, so I think it's going to be moderate from here. We're not at the level that would suggest that the ECB needs to lower interest rates, but I would disagree with the view that the next move will necessarily be a hike. I don't think it's a given.
Do you think that it's undermined Christine Lagarde's credibility at all, where she's been accused of not rebuffing the speculation that she's going to quit early for political reasons? She has said just yesterday that her baseline is she'll serve out the rest of her term, but some have said that she hasn't done so quite as vehemently as when this speculation has risen before.
We'll see, but I think the ECB has done a really good job at taming inflation, at lowering the rate path. Actually, I think the ECB and its president has a lot of credibility.
You make a point in your notes, Daniele, of saying that you don't trade geopolitics, and it's easy to see why you might come to that conclusion. I mean, things around Iran remain very unpredictable. You instead load up on some inflation protection, maybe on commodities, I think is part of the argument there. But where does trade fit into that don't trade geopolitics mantra? That's something kind of separate, surely. Do you have to trade around the trade theme?
Look, I think it's more nuanced, and I think you see that when you have risk-taking responsibilities. Obviously, we all understand rationally that crystallizing a loss in a real portfolio because markets are down to get back in at a higher level later on is obviously not a winning strategy. So when I say don't trade geopolitics, I mean don't trade the headlines. Yes, we have a geopolitical view, and that view is expressed in geographical diversification. We used to live in a much more unipolar world. Now it's multipolar. The US is more inward-looking. So diversification helps because when you have a wobble in one part of the portfolio, European equities, because of the situation in the Middle East, maybe your commodities or gold position benefits, and vice versa. That's what I mean. But trade policy, geopolitics, they do matter for markets, and so we need to have a view.
So, position around the volatility, but maybe don't lean into it. Daniele, great to have you on. Daniele Antonucci, co-head of investment and CIO at Quintet Private Bank. Well, coming up, as the war in Ukraine enters its 5th year, the EU's Foreign Affairs Chief, Kaja Kallas, joins us to discuss the European security strategy. We'll be bringing you that interview with our Chief Europe correspondent, Oliver Crook, next, as we look at futures as we inch towards the cash session in Europe, ever so slightly higher. Euro Stoxx 50 futures up 0.1%, but FTSE 100 futures flat to the upside. Meanwhile, a lot more positivity as we look stateside. S&P E-mini futures up 0.3%. So that AI scare trade appears to be falling back. Stay with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
30 minutes from the start of the opening trade, you're looking at futures inching higher on both sides of the Atlantic this morning, more so stateside. It looks like that AI scare trade is easing yesterday, and already in the Asian session. We had seen the MSCI Asia Pacific Index up a bit, but it's now completely flat, Anna, as we look to the Asia session.
Yeah, absolutely. So the Asia session giving us a very different take on AI winners and losers as it reopens in large part from the Lunar New Year holiday. Some of it, of course, was fully operational already. Let's have a look at what we've got on the European bond market story then. We're waiting for some of these bond markets to get fully into their stride, but just opening up. And again, there, things looking broadly pretty flat, really. The big story in bond markets overnight, perhaps coming through from Japan. Well, there's a couple of things. We're watching what's going on in the States, watching the fiscal impact of the tariff policy. Will we get any more on that as we get towards the State of the Union or during that address? Perhaps not the time for it, but that is the focus for Treasury markets, it would seem. And when it comes to the Asian session, the focus for bond market traders has been around Prime Minister Takaichi apparently voicing some apprehension to the BOJ on more rate hikes. So how that filters through into JGBs is interesting to watch. And we do seem to see some movement downwards in some of those yields in JGB markets overnight. So we'll keep an eye on that.
Well, let's get back to the geopolitics. EU leaders, including European Commission President Ursula von der Leyen, are in Kyiv for a day of remembrance as Russia's war on Ukraine enters its 5th year. Despite President Donald Trump's pledge to end the conflict within 24 hours of taking office last January, there is no end in sight. Multiple rounds of talks have taken place since then, including the Ukrainian president's very public Oval Office clash with the US president and Trump's summit with Russia's President Vladimir Putin in Alaska, when they spoke for more than 2.5 hours. The sticking point remains territory. 3 rounds of talks so far this year alone have failed to deliver a resolution, and Putin has given no sign that he's willing to roll back on demands that include territory his forces have failed to conquer in Ukraine's Donetsk region. Well, let's bring in Bloomberg's chief European correspondent, Oliver Crook. He's in Brussels with a special guest.
Yeah, Lizzie, there you sort of cataloging the last 4 years that we have been living here in Europe and, of course, in Ukraine, fighting that war of Russian aggression and trying to repel that invasion, which now marks the first day of the 5th year of that war. And we're joined now by Kaja Kallas, the European Union's High Representative, to get your sort of assessment of where we are now for 4 years, 1 day into this war. How do we prevent, and what is the European role in preventing us from having this conversation 12 months from now?
Well, I think it's important that we stick to the basic principles that there's one aggressor and one victim. Why is it important? It's important because at the negotiation table there should be clear demands on the Russian side. Right now we see a lot of pressure on Ukraine, who's the weaker part, to concede territories, to give in what the aggressor wants. But actually we don't see much pressure on the Russian side. Of course, the European position has always been very clear to put the pressure on Russia, and we are working on that. But also around the negotiation table, there should be very clear demands to Russia.
So the European position has been clear. European action has become less clear, particularly over the last 24 or 72 hours, in which we had a failure to deliver the 20th sanction package yesterday. Over the weekend, we've heard from Viktor Orban basically now stepping out of line with the agreement for the 90 billion euro loan to Ukraine. Where do you see the path forward for both of these initiatives now, given where we stand?
Well, this is a very unfortunate development because all the leaders agreed around the European Council table in December to provide the loan, and also we have been working on the 20 sanctions package. Now there is a veto on both of them. Of course, we are working with Hungary and Slovakia on different levels to find a solution, but this is very, very unfortunate. Of course, on the positive side, we have seen this before, and we have always come to outcome and solution in the end.
And there's also a sort of deadline looming. We understand that the loan package was going to begin to be dispersed in April of this year, and that was sort of seen as the critical moment to get some of this funding to Ukraine. If there's not a resolution by then, what are the options? Does this put, for example, the Russian assets back on the table?
I think so, yes, because this loan was a plan B, actually, because, there were some countries that were opposing to the frozen assets, but it's clear that Ukraine needs this funding in April, and like many analysts have said, this could be a game changer for this war, to send a clear message to Russia that you can't outlast us, and we are supporting them to defend themselves.
And do you think there is going to be the legal framework to try to move on those Russian assets? Obviously, that was the point of failure last time, particularly with the Belgians still objecting to that. Do you think that that has evolved? Has there been legal work happening in the background to try to make that more viable?
No, there hasn't, because there was this 90 billion loan, and we were moving quite well on this track, also on how this, there's flexibility for using this money, considering the Ukrainian priority and urgent needs that they have. So of course there has not been any work regarding the frozen assets in meantime, and we should right now, focus on solving this issue on the 90 billion loan. There is discussion on the leaders level and different options on the table, but if that's not going to work out, then of course the frozen assets is a possibility.
And so sort of Hungary and Slovakia to a certain degree is not a new dynamic within the European Union, particularly on the question of Ukraine. That being said, there's one thing that these two nations share, and they both had a visit from Marco Rubio in days after the Munich Security Conference. I wonder what your perspective is on that, not to sort of enter into potential conspiracy or anything like that, that this is the U.S.'s influence. That being said, it does give these two nations a direct line to the United States and potentially emboldens them to go against European policy because they have the United States as a very clear sort of stated ally. What is your perspective?
Well, America has been very clear that they want this war to end. So if you want this war to end, then we should really do everything to put the pressure on the aggressor. And what the 20 sanctions package would do, in addition, we see that Russia's economy is not doing well at all. Their approach has been to put pressure on the victim, on Ukraine. It hasn't really delivered in 1 year. Results, so maybe we should focus now on the other side. So clearly it would be also in their interest that these things go through.
And sort of appraising the European kind of stick and carrot in terms of being able to put pressure on Russia or help out Ukraine. Obviously, there's the funding question that is now in sort of jeopardy. There's a question of sanctions also now reaching some issues. There's also the idea of joining the European Union and this being part of the framework for a peace agreement from the Ukrainian side. Given how much difficulty there has been with the two sort of former, where do you see the sort of path in the discussion around accession to the European Union for the Ukrainians, particularly given the resistance we're seeing from these member states?
Well, there have been some ideas circulated how we can approach this question, and then we really need to have these discussions on different.
Guys, natural gas में ध्यान रखना, candle open equal to high है. Candle is open equal to high in natural gas. Current candle is open equal to high in natural gas 15-minute. काफ़ी इंपॉर्टेंट रहेगी करंट कैंडल एंड इसके बाद की एक 15 मिनट की कैंडल इन नेचुरल गैस विल डिसाइड द ट्रेड। बाकी क्रूड ऑयल को देखोगे साइडवेज ही चल रहा है, कुछ खास नहीं। अभी भी पॉइंट ऑफ इंटरेस्ट के अराउंड ही रिजेक्शन है। थर्टी होने वाला है, थोड़ा ध्यान रखना। 130 की कैंडल इंपॉर्टेंट रहेगी। इस कैंडल के बाद सिर्फ एक कैंडल और है। लंदन सेशन विल ओपन एट 130। लास्ट कैंडल भी ओपन इक्वल टू हाई थी, ये भी ओपन इक्वल टू हाई है। तो कर रहे हैं नेचुरल गैस को ये बेरिस करने का। फाइट होने वाली है लग रहा है। अभी ट्रेड इनिशिएट नहीं हुआ है, ठीक है, होगा, मैं लगाऊंगा लेवल, डोंट वरी, इन नेचुरल गैस। माइट पॉसिबल, अगर थोड़ा सा फाइट हो गई तो लेवल ब्रेक भी हो सकता है, तो वी नीड टू वेट एग्जैक्ट लेवल पे। सेम सेटअप बना रहे हैं जैसा प्रीवियसली इसी लेवल के आसपास आई थिंक रिसेंटली बनाया था। कहाँ पर था वो? 275 के आसपास रिसेंटली एक लेवल पे बनाया था, वही सेम सेटअप बन रहा है यहाँ पर। दे आर ट्राइंग टू ब्रेक दिस सपोर्ट। क्रूड ऑयल, सॉरी नेचुरल गैस, ठीक है। एक अगर ये कैंडल इसी तरह से प्रीवियस कैंडल के नीचे क्लोज होती है तो यहाँ पर एक पॉइंट ऑफ इंटरेस्ट बन जाएगा। फिर उस पॉइंट ऑफ इंटरेस्ट पर अगर बन गया इन केस, जो कि मुझे लग रहा है बन ही जाएगा, 1 मिनट में रिटर्न तो नहीं करने वाला ये, उस केस में थोड़ी सी प्रॉब्लम क्रिएट हो जाएगी। ओके देखो कैंडल हो गई है क्लोज नेचुरल गैस की लास्ट कैंडल क्लोज नहीं ये प्रीवियस कैंडल के नीचे ही क्लोज हुई है देखो अब थोड़ा सा ना यहाँ पर हो गई है फाइट ये सपोर्ट है अभी भी दिस इज द सपोर्ट जोन बट ये जो मैंने ब्लैक कलर का लेवल मार्क किया हुआ है इसको एक काम करते हैं ये जो ब्लू कलर की लाइन ड्रॉ करी हुई है विच इज अप्रोक्सीमेटली 270 273 दैट इज नाउ एक्ट लाइक अ रेजिस्टेंस या फिर इसको आप एक पॉइंट ऑफ इंटरेस्ट भी कह सकते हैं ठीक है दैट इज अ पॉइंट ऑफ इंटरेस्ट नाउ क्या ये होल्ड करेगा नहीं करेगा अभी बाइंग एक्टिवेट हुई नहीं है ध्यान रखना नेचुरल गैस में अगेन आई साइड में लगा दूंगा बट आई एम नाउ वेटिंग फॉर दिस लेवल टू बी ब्रोकन आइदर साइड किसी एक साइड ये निकल जाए ठीक है किसी एक साइड पे अभी किसी एक साइड पे निकले लाइक ये सक्सेसफुली या तो 273 के ऊपर या फिर 269 के नीचे ब्रेकआउट या फिर ब्रेकडाउन करे उसके बाद ही एक प्रॉपर ट्रेड बन पाएगा अदरवाइज ये छोटी सी रेंज आप कह सकते हो विच इज़ अप्रॉक्सीमेटली 3 पॉइंट की रेंज बन गई है तो अब यहाँ पर थोड़ा सा कॉशियस होकर प्लान करेंगे क्योंकि अगर ये लेवल ब्रेक हुआ नीचे का 269 के नीचे प्राइस सक्सेसफुली जाता है तो ये पॉइंट ऑफ इंटरेस्ट काफ़ी स्ट्रांगली रेजिस्टेंस की तरह काम करेगा बाकी इस पॉइंट ऑफ इंटरेस्ट के ऊपर चला गया तो ये सपोर्ट एक्ट लाइक अ वेरी स्ट्रॉन्ग सपोर्ट थोड़ा सा वेट करेंगे ठीक है किसी एक साइड पे निकलने देंगे प्राइस को अभी भी नेचुरल गैस में ट्रेड बना नहीं है याद रखना फॉर एंट्री वी नीड टू वेट पॉसिबल रहेगा तो स्कैल्पिंग देखेंगे अदरवाइज एक साइड निकलने का वेट करना ही पड़ेगा और कोई ऑप्शन नहीं है क्योंकि अगर नीचे से बाई करते हैं ये ऊपर रेजिस्टेंस पॉइंट ऑफ इंटरेस्ट रेजिस्टेंस की तरह काम करना शुरू कर देगा और अगर ऊपर से सेल करेंगे नीचे सपोर्ट है वो ब्रेक अभी तक हुआ नहीं है जब तक ब्रेक नहीं होगा वी कांट गेट बिग टारगेट
The UK stands apart as a place to do business. not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Jack Sidders.
And I'm Caroline Hepker.
Donald Trump's new 10% global tariffs are now in effect. The US president signed an executive order last Friday authorizing the 10% levy after the Supreme Court struck down his original sweeping duties. Trump subsequently threatened to raise the rate to 15%, but he has not yet officially issued a directive to increase it. Eugene Soroka, executive director of the Port of Los Angeles, says firms have spent recent days scrambling to understand how the levies will affect them.
Many companies were working on their ledgers and trying to calculate what their new effective tariff rates would be. Now, these tariffs under Section 122 of the Trade Act are a lot more prescriptive, have many more exclusions, and are temporary, which means there will be more debate, more capitulation going down the line, and more uncertainty.
Eugene Soroka was speaking as the White House says it is working on a formal order to lift the global rate to 15%, although no timeline for that move has been finalised.
An assessment by the European Union has found that President Trump's planned 15% increase, though, means that levies on some goods would be above the 15% ceiling agreed in the EU-US trade deal. On Monday, the European Parliament suspended legislative work on approving that agreement, requesting clarity on Trump's new trade policy. Josh Wingrove is Bloomberg's White House reporter.
Even by the standards of this administration, which is not exactly like prodding itself on meticulous long-term planning and sticking to it, this has been chaotic. And so some of the fallout we're seeing is from the lack of specificity, the story from the Europeans complaining that some of their tariffs have effectively risen. That's because they've sort of papered over quickly these tariffs without exclusions that sort of nip and tuck around some of the deals that were painstakingly negotiated, in particular how they stack on top of each other.
Josh Wingrove speaking there after President Trump said on social media on Monday that he'll put much higher tariffs on countries that, quote, play games with the Supreme Court ruling.
Stocks fell in another AI scare trade after a research report outlined the sweeping potential impact of artificial intelligence on jobs, sectors and economies like the US. Little-known research company Citrini imagined a world where consumers used AI agents to avoid credit card fees and delivery apps. In response, stocks including American Express, Blackstone and DoorDash fell by at least 6%, something which surprised the report's co-author Alap Shah.
I thought there was going to be a small reaction. It was definitely larger than we expected. But I think it's not that surprising when you take a step back and consider kind of where the markets are in the US. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Speaking to Bloomberg, Shah added he thinks governments should start taxing AI to prepare for the effects of coming mass unemployment. He expects AI could cut white-collar employment by 5% over the next 18 months.
Jamie Dimon says that he sees parallels now to the 2008 global financial crisis, when a rush to make loans ended disastrously. Speaking to investors yesterday, the JP Morgan CEO suggested that some lenders are making riskier decisions in a bid to boost net interest income. According to Dimon, some of those decisions are related to artificial intelligence.
Even if a credit cycle is normal, so when you have a recession, you have a rise in credit losses, the surprise has often been which industry. You didn't expect newspapers in 2000, Warren Buffett businesses. You didn't expect utilities and phone companies in 08 and 09. And this time around, it might be software because of AI.
JP Morgan CEO Jamie Dimon there speaking at an investor event on Monday. The news comes as the financial industry, like many others, has suffered declines in recent weeks due to AI concerns. Dimon added that he expects the credit cycle will eventually sour again, though he's not sure when.
Standard Chartered has announced a fresh share buyback worth $1.5 billion. That's as the bank reported weaker than expected fourth quarter earnings with adjusted pre-tax profit of $1.24 billion. Profits were hit by a $233 million charge from the bank's Fit for Growth efficiency programme. Standard Chartered says it expects income growth this year to be around the bottom end of the 5 to 7% range.
UK police have arrested former British ambassador to the US Peter Mandelson on suspicion of misconduct in public office. It comes after the US Department of Justice released emails allegedly showing him forwarding government information to Jeffrey Epstein. Mandelson was released on bail early this morning but is still under investigation. He has not been charged and his lawyer has declined to comment. Bloomberg's James Woolcock has more.
Peter Mandelson's arrest deepens the crisis engulfing Prime Minister Keir Starmer. The UK leader picked the Labour grandee to be his US ambassador despite Mandelson's known links to Jeffrey Epstein. In the wake of the fresh revelations stemming from emails released by the Department of Justice, Starmer's chief of staff, communications chief and cabinet secretary all quit their posts. And Conservative leader Kerry Badenoch has further criticised the Prime Minister's choice, saying Mandelson's arrest was, quote, the defining moment of Sir Keir's premiership. In London, James Woolcock, Bloomberg Radio.
Progress towards gender equality at the top of British businesses is achingly slow. That's according to the CEO of the FTSE Women Leaders Review, which has released its latest report. Bloomberg's Tiwa Adebayo has more.
The average number of female FTSE 100 CEOs didn't move at all last year. Findings from a government-backed review reveal the number of women at the helm of UK companies peaked in 2023, when 10 out of the 100 bosses were women. That's as the FTSE 350, which includes mid-sized businesses, missed a voluntary target of 40% of women in top executive roles by 2025. However, board representation amongst the group exceeded the same goal, hitting 43%. Findings also showed that female representation was notably stronger amongst non-executive directors. In London, Tiwa Adebayo, Bloomberg Radio.
And those are some of our top stories for you this morning. So the markets are focused on two things, really, the impact of artificial intelligence and the trade uncertainty out of the US. Yesterday, we saw a number of sectors hit by the AI worries. IBM also, because of a new Anthropic tool, had its worst day in more than 25 years. That issue, though, seems to have been shrugged off by many markets in Asia, including the TAIEX in Taiwan, up by 2.7% this morning, and the Kospi in South Korea also with a big number this morning, a big gain, up by 2%. And US and European stock futures are also in the green, despite the kind of dystopian research report from Citrini. For Spot 03 for 10-year US Treasury yields, and the Japanese yen notably lower against the dollar, dropping 0.5% because of the tensions between Japan and China. So those are the market moves today.
That's news when you want it with Bloomberg News Now. I'm Jack Sidders.
I'm Caroline Hepker, and this is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading
of moves on that story. But Lizzie, for the moment, the futures picture looking pretty flat.
Well, let's dive into some of the stocks that we're keeping an eye on at the open. And we kick off with earnings, really. Standard Chartered reporting a fresh $1.5 billion buyback. Profit missing, though. And this is, of course, after the surprise departure of the CFO. We heard from CEO Bill Winters earlier saying, I don't know why the former CFO left. So we'll see how the market reacts to these earnings at the open. But we also keep an eye on auto stocks after European car sales fell in January. And back to earnings, Telefonica earnings bolstered by growth in Spain and Brazil, but indicated lower on Tradegate because of reporting revenue for the fourth quarter that missed estimates. Anna, we're getting towards the open.
Yeah, absolutely. Just seconds away then from the start of the cash equities trading session. And it looks as if it could be a little underwhelming, Lizzie, given the futures picture has been telling us that we're not going to go anywhere very far at the start of the trading day. So the FTSE 100 is open and true to form, not really moving very much. We might have to wait a little while for the likes of the DAX to open up this morning. A focus on the banking sector then as a result of those Standard Chartered numbers. We saw the Hong Kong listing. That stock went quite a bit higher, despite some of the areas of disappointment, maybe the share buyback cushioning the blow a little bit there. So we'll watch what happens with Standard Chartered. We are starting to see some opening up of these European markets. The CAC 40's actually down by 0.3%, so a little more negativity perhaps there in Paris than had been anticipated. The IBEX down by 0.2%. Lizzie, what do you see in the sector breakdown?
Well, as we look across the continent, you're looking about just over half of sectors in positive territory. Energy leading the gains this morning, up 0.6%. Autos and parts actually up 0.5%. Utilities not far behind. Chemicals, tech, retail also in the green. But bottom of the basket, banks down 0.8%. Healthcare also down. Telecoms, media, real estate all suffering this morning. So for those individual stocks that we had flagged, Stanchart actually up 0.3% now off the back of their earnings. And Telefonica up 1.25%. So actually, Tradegate was wrong. We're looking for instead at this growth that we've seen in the likes of Spain and Brazil on that stock.
Right, and the DAX not open just yet, so we're waiting for any movement there. Interesting that I was just looking to see what technology is doing, and technology is higher by a little bit, and ASML is one of the gainers there, so up by 1.4%, because I was wondering why the AEX was outperforming, and that's usually the reason, and it is the reason this morning. So ASML is up by 1.4%. So maybe there is something in that hardware strength story coming out of Asia that is filtering into the European session, but overall we are a little bit weaker than this morning, down by 0.2% on the Stoxx 600. Let's widen our conversation, bring in another voice, and I'm pleased to say we're joined by Eric Whitenis, who is Head of EMEA Investment Strategy at JP Morgan Private Bank and joins us around the desk this morning. Very nice to have you with us, Eric. Tuesday, 24th of February, we have another AI tantrum under our belts on Wall Street yesterday. What are we continuing to learn about where the losses from AI will fall, do you think?
Well, you alluded a little bit to one of the factors that seems to be going on, which is the market expressing a preference for hardware relative to software. And if we think back, it was just a short while ago where seemingly everyone in the market was focused on, is AI a bubble or is it not? And now the new focus seems to be, who is most at risk of disruption from AI? And that certainly seems to be something that may be playing out in the weeks and maybe even the months to come.
And are there places to hide? Because some people talk about emerging markets, talk about Asia and the hardware stories, and maybe you hide out there. Others you hide out in commodities and the things that are going to power data centres. And some say you can hide out within stocks. You just have to move to, I think it's being dubbed the halo stocks, heavy assets or low obsolescence risk. I mean,
yes, a new acronym. We love acronyms on Wall Street.
We all need another acronym. So where do you think we hide out from this volatility?
So the phrase broadening out has been used for quite some time on the street, and it is genuinely occurring mathematically so far this year. Interestingly, the headline index is essentially flat as a pancake. However, you have the equal weight that is outperforming, the cap weight that is underperforming, and that's a statistical illustration of exactly that. It isn't just big tech that's driving the market forward. And in fact, we have an increased preference for sectors such as utilities and industrials, companies that will be components into the AI theme and ideally less at risk of being directly disrupted by the AI theme.
But as we head into the NVIDIA earnings, what is the broad feeling on mega cap tech? Is it now that you've had a bit of a sell-off, it's starting to look attractive again? Are we there yet? Can we give a read on that?
I think that's the right way to look at it. Ultimately, this cohort is continuing to grow earnings at well north of 20%. Most quarters on a very consistent basis. And in fact, on a broader market basis, we're now going to finish, as per this earnings season, with the 5th quarter in a row of double-digit earnings. So that's kind of the broad market, which does indeed continue to be led by big tech. So if you feel as though the broadening out theme has a degree of legitimacy, which we do, but you do also want to continue to be invested in the most innovative, free cash flow producing companies that are growing their earnings at such an impressive clip on a consistent basis, then big tech very well may be interesting for those that might want to step back into some of the softness we've seen recently.
I think what's interesting is how different your perspective is to Daniele Antonucci, who was on earlier on. He's kind of saying there's volatility out there and you need to position around it. Whereas, if I understand it, your view is more lean into the volatility, embrace it. What does that mean in practice?
So absolutely, we love volatility, and it can oftentimes provide opportunities to step in at more attractive valuation levels. You can also make volatility your friend, so to speak, utilize things such as the options market, structured note-oriented strategies where you're a degree of a seller of vol to produce a degree of protection while also achieving a good asymmetry to the risk-reward profile that you can get by stepping into vol. One of the most tried and true approaches in investing over time is the Warren Buffett style approach of being greedy when others are fearful, and when volatility really tends to spike. If you like the underlying attributes of the investment, the cash flow attributes of the company and their business model, then you kind of need to summon that investment discipline to indeed step into vol, and that's what we tend to do over time.
So there's something sort of counter-cyclical about that, or counter-trend about it. I mean, you've talked in your notes, Eric, about how cash allocations are too high in many portfolios right now.
Way too high.
So what explains that, do you think, and where do you think that money should be going instead?
I'm not entirely sure what explains it, to be honest. I think it may be the comfort. It feels a little bit like a warm blanket or something along those lines. But we tend to advocate a very low percentage of one's wealth being allocated to cash, whereas many portfolios that we see, even for extremely wealthy, extremely successful families all around the world, it's oftentimes 25% or more. One of the big things that we're trying to advocate that our clients do right now is rotate cash into carry-producing strategies. So strategies that can produce a greater degree of income, yes, by taking on a degree of credit risk, yes, by taking on a degree of interest rate duration risk. And we really think that that's a sensible approach, because the 25%-ish zone for cash, we just think is much too conservative, and it isn't going to compound your wealth nearly as effectively as carry and other growth-oriented strategies can.
It's interesting. It comes at a time when we've been worrying about fiat currencies. I mean, we were worrying about the dollar, but we were worrying perhaps more broadly about fiat currencies and what central banks were doing to them. Is there any connection there with why people... I mean, it doesn't make sense, really, in that context, to sit on a lot of cash, does it?
So you have the debasement trade theme that's been talked a bit about, and that's certainly a big part of why gold has been performing as strongly as it has been. The physical central bank accumulation story, both by developed market central banks and probably increasingly by emerging market central banks, is a component of that. But we don't see a huge risk of fiat paper currency issues. Sovereign yields, so longer term yields, have actually been easing down a little bit. The U.S. 10-year yield is close to 4%, for example. We know that there was certainly a very large U.S. dollar sell-off in 2025, and that was a factor for many overseas investors. But we don't see that type of pattern repeating in 2026. We're only slight dollar bears for this year.
Is that partly because you expect perhaps fewer Fed cuts than the market's pricing?
We do. We only look for one, maybe two. There are some out there that believe that it could be 3 or 4 and that the Fed might need to move in a more dovish-oriented direction. We think it's going to be fairly muted in terms of what the Fed does, and therefore you're not going to have this huge southbound interest rate impetus to drive the U.S. dollar lower. And the Sell America theme that developed a bit in 2025, we also don't think it's going to be repeated in 2026. We think it's more so going to be a case of investing in the U.S., but also investing internationally alongside the U.S., a bit more of a globally diversified approach, and inflows should continue into the U.S.
What are private bank customers saying about private markets? How does that subject loom on their agendas when they look at what's happening in public markets? I don't know, does that give us comfort that you hide in private markets, or does it make us think if it's happening in public, it's happening in private as well?
Part of what's interesting about private markets is the investment discipline that it forces upon the investor into it. If you have a multi-year type of time horizon into some of these investments, it sort of enforces the discipline of taking that long-term oriented lens. And if you can choose the right managers, either in growth or in credit, ideally you can get an alpha premium for that trade-off of that illiquidity and some of the underlying components of what you do in those investments. And that's what makes it worth it. So we have seen families that we work with continue to lean in to private markets. If you can get the outperformance relative to public markets, which we've been able to largely achieve over time, then it's worth it.
And are they loading up on exposure to private markets or the opposite, or is it kind of consistent?
I would say consistent overall, but one of the areas that we're seeing an increased amount of interest into recently that I have a lot of passion about is private infrastructure. So many wealthy families around the world have stuck with the more relatively traditional aspects of private markets, but private infrastructure offers some really compelling attributes, bond-like consistency of cash flows, very low levels of volatility, and almost no correlation whatsoever to everything else that's happening in terms of the macro environment. So if you want something that's a bit differentiated in your portfolio, that has a smooth ride and isn't as linked to everything that we talk about each and every day in markets, private infrastructure can really fit that bill in a diversified portfolio.
Okay. Eric, great to have you back. Eric Tennis, head of EMEA investment strategy at JP Morgan Private Bank. Thank you so much. Let's have a look at the core six, shall we? This is what we're seeing this morning. Of course, we have Novo Nordisk, LVMH, Rheinmetall, all on here. And it looks like luxury's on the back foot this morning. LVMH down 0.8%. Novo suffering, down 3.5%. But gains for Rheinmetall, ASML, Schneider on the back foot. Nestle, though, up 1.3%.
Yeah, I was looking at the banking sector. Really interesting that we've got the banking sector quite as weak as it is this morning, then, Lizzie. And we're down by 1.9%. On banks overall, and that's not a Standard Chartered story because that stock is actually quite resilient. It's not up, but it's pretty flat. Erste Group, ABN, these banks, Bank of Ireland, these are some of the worst performers. They're all down by more than 2.5%. We'll be talking more about the banking sector a little bit later.
Indeed, we will. But let's get a check on some of the individual stocks on the move with Charlie Wells. Charlie.
Lizzie, a couple surprises this morning, particularly after that report we got about soft sales last month in European autos. You'd think you'd see a lot of red on the screen, but you're actually seeing a fair amount of green right here looking across that European auto space. So this could potentially be markets digesting that while also taking a look at some of the trade tensions, maybe potentially calming down, maybe less bad than feared yesterday. So that is a surprise on the autos front. Also, we are definitely seeing here a lot of intraday moves here for Edenred. So this is that French corporate payments company. They're up over 5%. They had a pretty strong earnings report coming out. Now, this is the company behind those tickets restaurants, so they are in the green right now. Anyone who spent time working in France will remember those up over 5%. Let's flip and talk about a very different story. This is one we're no doubt going to be hearing a lot about over the course of the trading session. That is Novo Nordisk. They're down nearly 3%. They had those disappointing test results yesterday about their weight loss drug compared to competitor Eli Lilly. So the market not liking what it's seeing. They had a very difficult day yesterday. Now, I want to talk about another medical company, a German dialysis company called Fresenius. Now, they are also not having the best morning. They put out an earnings report that also disappointed to some degree. Now, this could speak to a broader trend. It could speak to this issue of the European medical space coming under pressure, this spill out coming from Novo as investors start to look more across the board, having questions about that medical space here in Europe. Now, better picture across the European telecom space. If you look at Telefonica, you can see they are up over 1%. Now, they had a really difficult November. They had an investor day that disappointed, but they just put out an earnings release that actually showed growth coming from some very competitive markets, growth coming from Brazil, coming from Spain. So investors this morning liking what they're seeing out of Telefonica.
Okay. Thank you very much, Charlie Wells, with those movers this morning. Another mover for you, Standard Chartered. We will focus on this stock when we come back, announcing a $1.5 billion buyback. We will hear from the CEO about the company's fourth quarter earnings, about the mysterious departure of the CFO, and we will also focus in on the wider sector. We'll talk banks. That's coming up shortly. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Welcome back to the opening trade. We're 17 minutes into today's session, and as you can see, it is red across the screen this morning. The Stoxx 600 down nearly 0.2%. Weakness as well in Germany and France and here in London. And at the bottom of the sectoral basket are the banks. We have banks down about 1.8% as a group. Standard Chartered down 0.5%. And Anna, this comes off the back of their earnings.
Yeah, absolutely. So Standard Chartered announcing a fresh buyback with the earnings, $1.5 billion, as the company reported weaker than estimated fourth quarter earnings, weeks after its share price was hit by the surprise departure of the company's CFO. The lender's CEO, Bill Winters, spoke to Bloomberg earlier.
We've actually produced a great set of earnings in 2025. Q4 was strong in almost every regard. I mean, really all of the key elements of our strategy are firing on all cylinders. And while the share price has appreciated a lot, we think there's a lot further to go. So we're very happy to buy an additional $1.5 billion back. We also significantly increased our dividend in the fourth quarter, so for the full year of 2025. And that's a further sign of confidence in our ability to grow our earnings from here.
For more, we're joined by our finance and investing managing editor for EMEA, Tom Metcalf, who's with us on set this morning. Good morning to you, Tom. So talk us through Standard Chartered's fourth quarter earnings then, and the message we should take away this time.
Well, certainly Bill Winters wants to take away the message of confidence. There's this big buyback, saying dividends, higher than ever. I think the interesting thing is they did nonetheless miss profit in the quarter, which is always sort of pause. That might be why the shares are sort of being dragged down somewhat. But I think, certainly from, the official line is, look, we've got this very clear strategy. We are executing quarter to quarter. Don't listen to too much of the noise. Fundamentally, we're keeping a lid on costs. And basically the bank is in good shape, and hence we can kind of look to return more and more capital to investors.
And very nobly, his pay is staying flat, but they've boosted the bonus pool 10%. I also want to talk about the CFO, because he was a bit more cagey about that, was Bill Winters this morning. He said to the media call that he doesn't know why the old CFO left. What does that say to you, Tom?
I think it shows what an awkward situation it is fundamentally, right? Big surprise departure 2 weeks before results, obviously for this, fantastic sounding job at Apollo, head of Europe. But it really does speak to the fact normally these things are very choreographed. In this case, it just looks like there was some kind of, rupture where, perhaps a dispute personality-wise or something like that, or, we reported, CFO was very keen to have a bit of clarity on when he might be kind of in the run-in to take over Bill Winters' jobs. And that was the other thing, Bill Winters was saying is, look, I believe in the strategy, I want to make sure I deliver it, see it through, and that really signals he's probably around for, several more years, having already been there. I think he's one of Europe's longest tenured CEOs. So a lot of sort of Shakespearean dynamics behind the scenes there, maybe.
I spent a lot of time with the CFO. There he is on your screens, and some of these pictures come from the episode of that CFO show that we did with him. And the story they were telling then was very much about this sort of double act. And
what's the secret?
Well, maybe George, maybe he did feel he was in the running for the top job, as you say, and that's part of the story. Something else that's befuddling us this morning is why European bank stocks are down a bit. I mean, not a huge amount, but a bit. We can point to things that it might be, AI trade scares, Standard Chartered, some of the issues there. But the banks that are weaker across Europe don't have a huge amount of overlap with Standard Chartered. So just, where will we be looking next for clues?
Yeah, exactly. It's a very mean question, Anna, because I have absolutely no idea. No, it's one of those things where you're looking and going, OK, looks like some kind of pan-European, risk off for whatever reason, perhaps specific to banks. As I say, I always look at AI in these days, is there a reason there? Or, again, it's all context, right? A lot of these banks had great run-ups, as Standard Chartered have. So, some of that kind of profit taking might also be the case. But hard to know.
Well, we put you on the spot. Tom Metcalf, our EMEA Finance and Investing Managing Editor. Thank you. Well, JP Morgan Chase CEO Jamie Dimon was asked about fierce competition across the financial industry. He said that he's starting to see parallels to the era before the 2008 financial crisis. The CEO has been warning for months about the potential deterioration in credit quality.
Unfortunately, we did see this in 05, and 06, and 07. Almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business or something like that.
Bloomberg senior reporter Silas Brown's here for more. Silas, is Jamie Dimon fair there to compare what we're seeing now to the pre-GFC period?
I mean, I think we'll have to wait and see. But, what I think his comments do, and his previous comments that he's made, is pit him against a kind of raft of emerging kind of Wall Street power players in sort of Mark Rowan and Mike Arrighetti and kind of this kind of new group of private credit titans. And I think, what is clear and not, as it were, debatable is that there has been a kind of boom in all manner of lending products in the post-crisis period. What I think is harder to say is I think there's still not a huge amount of stress in the system. So a lot of the jitters are kind of presupposing stress. And so, I don't know, we'll see. We'll have to wait to see, basically.
Yeah, because credit spreads in public markets are quite tight still, and people point to that as being a sign of sort of maybe complacency about where those jitters or those cockroaches might be. I mean, Jamie Dimon, on the one hand, they rival these private equity, private capital businesses, private credit businesses, don't they? On the other hand, they service them as clients. So it's a complex relationship, isn't it, Silas? What about the broader credit fears then creeping back into markets this week? What is the broader view of private credit? Yesterday we saw some of those private market equities really caught in the downdraft of the latest AI fears.
Yeah, I think, look, I think the main concern is private markets was kind of built on an idea that they would avoid what they perceive to be cyclical industries. And so that narrows the kind of pool of industries that they can go for. And software, partly because of Dodd-Frank and the perception that software lending was more aggressive than other forms of lending, that moved into the private sphere. And so actually, in terms of concentration, there's a huge amount of software lending occurring in private markets. And so I think, with a sort of transformative technology in AI, I do think it's concerning, and it's hard to underwrite over a long period of time into a kind of sector that's in such change.
Yeah, Citi saying that the AI sell-off could lead to a slowdown in private markets. How much is that a European problem?
Firstly, I think it is leading and has led to a slowdown in private markets. I mean, there are a number of deals that have been stalled or paused as a result of these kind of concerns. And if you put yourself into the mind of a private equity investor or a private credit investor, right, you're supposed to be kind of gauging the long-term health and progress of a company. How can you do that when it's very hard to know how the company is going to respond over the mid to long term to things like AI? So I don't know. I mean, in the US, there's much more data and it's much more visible to see kind of what the holdings are in private equity and private credit more notably. I think it is more of a US story, but it's significant in Europe as well. I mean, there's a huge amount of budding software as a service companies here that are in the private markets.
Yeah. And Silas, back to where we started this conversation and the comments from Jamie Dimon. I mean, on the one hand, he is saying, well, some of the trouble could come from AI. That's what people are worrying about. But he is saying that AI is not going to have a major impact on credit losses. Do you think he's just talking about the JP Morgan book there and what he knows of it? Or is he giving us a broader assessment of how AI and credit markets interact?
Yeah, I mean, look, I think if you speak to the kind of proponents of software and the kind of more sort of bullish case for software, you'd say, well, look, these software firms are in a very advantageous position because they have the clients that the AI natives don't have. And so if they can catch up with the technology ahead of AI can catch up with the clients, they're in a kind of this, brilliant position. I don't know. I think that is we'll have to wait to see how that bears out. I mean, I think a lot of credit markets is to do with confidence, and at the moment there seems to be quite a lot of public signs of jitters.
Yeah.
However, much like credit markets, they're always sort of like a Rorschach test. You can kind of make of it what you will, because they're also very highly accommodating. There's been these large-scale M&A financings in the public markets, and so they're kind of open to business as well.
Silas, thank you very much. Bloomberg senior reporter Silas Brown on all things private credit. Coming up on the programme, we'll stick with the tech themes of late. The UK entrepreneurs, a group of them, are launching a campaign to improve the environment for Britain's fastest growing companies. Brent Hoberman, co-chair of Enterprise Britain and executive chair of Founders Forum, joins us next. We'll get his take on the latest selling as well. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade. We are 30 minutes into today's session, and as you can see, it is red across the screen when it comes to the European equities picture this morning. Only slightly to the downside when it comes to the Stock 600. We thought the AI scare trade was over, and the futures picture had been positive earlier, but now it is not so much positive anymore. Banks at the bottom of the sectoral basket. Anna, what are you looking at under the hood?
Yeah, let's have a look at where we are in terms of the dynamics within the market. So the Stock 600 kind of split really between those that are moving higher and lower. A little bit more emphasis on the upside, but not a huge amount. 330 place, 255 or so. This is the number that catches my attention, though, today. Volume is higher. We have the Chinese markets back. We have the US, of course, really disrupted by some of that snow yesterday. And so could we be seeing today a little bit more cleaner expression of investors' appetite? And we do see volumes up 46%, of course, versus the 20-day average. Let's have a look at some of the stocks that have been doing well and doing a little less well over the session as it is so far, just half an hour in. ASML is higher, substantially so, up by 1.6%. Now, is that to do with some of the reporting we've seen from other media around the yield they can get on those chips, or is this around the Asia coming back, Asia hardware trade? Rheinmetall is also moving higher. There's talk of drone orders there. Shell is up by 0.7% as well. Let's switch the board and show you the laggards, some of the stocks that are not doing so well this morning. Novo was certainly in the crosshairs yesterday, down more than 10% in yesterday's session. Fears around its weight loss drugs, and some investors now calling on the business to broaden its portfolio. Fresenius Medical Care, that company had numbers out earlier on today. The stock is down by 7.3%. And Santander in focus, down by 2.4%. One of those banks, Lizzie, that you mentioned that is bringing up the rear today. The banking sector is underperforming. Is it to do with AI? That's certainly one of the theories being posited, but it's a broad-based move to the downside, just a little lower for the European banking sector.
What else do you need to know this morning? Let's get you an update on stories from around the world. US President Donald Trump will speak to Congress later today in the first State of the Union address of his second term. The speech is expected to showcase priorities for the Republican administration, centered largely on the economy, immigration and national security. Elsewhere, the yen extending declines this morning after local media reported that Japanese Prime Minister Sanai Takaichi voiced apprehension over more rate hikes in a meeting with Bank of Japan Governor Kazuo Ueda last week. The Mainichi newspaper reporting that Takaichi took a, quote, tougher stance than her previous meeting in November. And Bloomberg has learned that Anthropic is offering some current and former employees the ability to sell shares in the company at a valuation of about $350 billion. That would allow them to cash in at the same level as a recent $30 billion funding round. We're told the company has lined up $5 billion to $6 billion for the share sale, but the final amount will depend on how many eligible employees opt to sell. Anna.
Let's stick with technology themes then, Lizzie. US futures are pointing higher as the so-called AI scare trade shows signs of cooling, perhaps, for now. A series of warnings about the disruptive power of AI dominated yesterday's session on Wall Street. Black Swan author Nassim Taleb was out predicting bankruptcies in the software sector, and Citrini Research was out with a bearish report that cited an impact on a host of sectors. The author of that report told Bloomberg TV even he was surprised by the market reaction.
I thought there was going to be a small reaction. It was definitely larger than we expected. But I think it's not that surprising when you take a step back and consider kind of where the markets are in the US. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically, the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Bloomberg senior strategist Neil Campling joins us now with thoughts on what we've seen at the coalface of this AI scare trade. The Citrini report then, Neil, certainly front and centre. I mean, even the author seems surprised. We've seen that with quite a few of the beneficiaries, if that's the right way to describe it. Some of the CEOs of those businesses that have benefited in recent sessions have also been surprised at the impact that they've had on markets. What do you make of the Citrini report and its fallout?
OK, so I think, firstly, if we look at this Citrini piece, it's interesting because it's a thought-provoking thematic piece looking at what may be the future, but it's in 2 years' time, 2 to 3 years' time. Now, it maps a scenario of AI-driven white-collar displacement, triggering an unbreakable feedback loop. You have software collapsing, mortgages structurally impaired, unemployment going to double digits. There's some really interesting aspects to this. I think the reaction is because the market and investors are very nervous about trying to understand the impacts of AI. And certainly, I think AI has, as you just had with the interview, I would agree with that the AI developments in the last 6 months are significant. There have been huge advances. However, what we're seeing, I think, is that the biggest debate is around timelines. Probably, the direction of AI improvements is not in doubt. However, the idea of a 2-year timeline, I think, is a big issue because it probably you've got to consider that the numbers of people actually using AI, using even chatbots, is very, very low. The cost of intelligence is collapsing towards zero. That actually helps in terms of improvements in access. But you kind of need to, I think, also consider things like, political situations will act as a brake to any tech advancement, and that's an issue. Reindustrialization of industries, of different parts of the economy, move at human speeds, much slower than the tech actually enables them to do. And still requires a lot of construction to take place. Some of the sort of terms within the report suggested that within 2 years, the likes of the payment gateways, Visa and MasterCard, will become almost irrelevant because everything could be done through stablecoin. And I think that's a little bit far-fetched, but the types of reactions we saw yesterday were certainly indicative of the nervousness that investors face because of the uncertainties and the unknowns as to how the impacts play out. And actually, we're going to have even more, I think, focus later today because Anthropic are hosting a live event, 2:30 London time, where they're going to showcase some of these new tools. So, you've seen tech volatility recently, and there's every chance that that's going to continue this week.
OK, Neil, thanks so much. That's Bloomberg senior strategist Neil Campling. Well, sticking with the tech theme, top entrepreneurs in the UK are launching a campaign to improve the environment for Britain's fastest growing companies. We're joined now by Brent Hoberman, co-chair of a new group, Enterprise Britain. Brent's also co-founder and executive chairman of First Minute Capital and Founders Forum Group. So, Brent, it's great to have you with us. You've launched Enterprise Britain to help grow British companies into global champions. You talk about shaping the new world order rather than being shaped by it. Realistically, can the UK compete with the likes of the US and China when it comes to AI? Where are we, would you say, realistically in that race?
Yeah, we've launched this movement, Enterprise Britain, because we've had countless conversations with some of the best entrepreneurs and leaders in the UK, and they've chosen to stay in the UK. Some entrepreneurs have left, but those who've chosen to stay are staying because there are so many advantages of being in the UK, but we could enter a bit of a doom loop, and as you say, in this AI, can we be an AI leader as well, etc. So we want more ambitious policies, more support for entrepreneurs, more people to benefit from the growth of those entrepreneurs, a nation of shareholders. And so as regards to whether we can lead, I think we can certainly lead in AI adoption, but it's not happening yet. But we can. I think Brits often are early adopters. So let's push on that thread. And then obviously there are some world-class companies in AI here. We're going to hear more about Wave, which is rumored to be closing around at over $8 billion, which is a British company, one of the biggest AI companies in Europe, and it's come as a Cambridge spin-out. It's a flagship out of there. We were lucky to be seed investors.
But some of the CEOs on your board have been very cagey about whether or not they'll list in the UK when the time comes. Surely that matters?
It matters a bit about where you list. I think you could over-egg it. Of course, we'd love them to list here. But I think that what we're trying to go is much broader than where a company's listing. We're trying to say, what's the friction? Why are there not more amazing entrepreneurs succeeding in the UK? There is a lot of drag for entrepreneurs here. I've always said, and when I did Last Minute Comment a million years ago, it was like, you have to be 10x, 100x better to be a pan-European entrepreneur than to be an American entrepreneur who can succeed across there. So there's so much friction. We need governments to be asking the right exam questions to support these entrepreneurs.
Brent, good morning. You're calling then for more shareholder culture. So this isn't just a sort of tech-focused initiative. No. This is, how do we fund these tech businesses? Yes. How do we scale up these tech businesses, which has always been the issue? You want more shareholder culture, but I've lost track of the number of reform agendas we've had on this front. The Edinburgh reforms, Mansion House reforms. I mean, do you have a sense that this push of yours can really make a difference?
Well, so obviously we've got, in Britain, retail shares are one of the lowest in the world at 8% rather than the US 33%. So that's one example of where consumers aren't benefiting from.
Reasons for that, around pensions and things.
Yeah, and if you talk to the pension guys, they're saying, look, there are all these sort of hard things. But again, it goes to the heart of the report. We have to be bolder, we have to act faster, and we have to take more risks. We've become a culture post the 2018 crash where everything is risk averse, and nobody is, and nobody. It's very hard for people in government and business leaders to take risk. So we're saying we've got to be bolder because it's the time to act now, which is our ambition, capital, and talent.
Okay, let's talk risk then, because risk and AI attached to it has been all over markets for the last few weeks, since the start of this year, certainly. You talk about leaning into AI and being a leader in AI. We were just talking about a report by Citrini, which has really dominated the conversation just for 24 hours. But they cite a sort of, as we were hearing from Neil, a doom loop between AI creating the collapse of software companies, collapse of the consumer, collapse of housing markets, unemployment in double digits. Does this sound like a risk you want to lean into?
I don't even think they really believe it. What they painted is a science fiction. They painted a sort of science fiction. This is what could happen in 2 years' time. And the market sort of maybe got carried away, as the market tends to do. But do we want to lead into AI? Absolutely. What is missing from that is AI can kill cancer. It can make people much more productive. We need to massively improve productivity in this country. And also, AI can help companies improve their margins dramatically. Something that was missed from the Citrini report, I think, is that AI leads to productivity, can improve margins. Now, yes, absolutely. Will it cause issues in terms of structural unemployment? Yes. So that we're also calling, we agree, scenario planning is interesting, is essential, and we need to think about how you do that and how we educate and reskill people. And it's great to see this government leaning into reskilling 10 million people and companies like Google backing that.
Yeah, it's interesting you say that unemployment then, is it structurally, it's inevitable, is it? Because there could be, if this takes longer to play out, there could be an argument that maybe unemployment doesn't spike and people are repositioned into other roles.
When you listen to people like Demis and Dario, some of the leaders in this thing, they do, I think, say it's going to happen very fast and it's going to be hard to... it's everything everywhere all at once with AI. That's why it is quite dramatic. So there will be some need for some structural issues of how we deal with that. But of course, there will be new opportunities for people. But AI we can't resist it. It's a torrent that's coming towards us, and you don't want to be the last country to adopt it.
So just coming back to the report on Enterprise Britain and how you get these entrepreneurs to be in the UK. I was in Milan recently and they've got the flat tax regime. All the rich people seem to be going there, and we've dismantled the non-dom regime. Do we not need a carrot to dangle a la Italy?
Yes, thank you, Lizzie. I am so excited about making this, getting a message to global entrepreneurs, the best talent worldwide, to say, come to the UK. Here are 10 reasons why. Here's what we're going to do for you. Things like an investor visa where people pay a lot to be in this country.
It's one thing.
It's one thing, and I think a series of tax incentives are absolutely right. I think if people have succeeded in other countries, we want them to succeed here, we want them to move here, and we want them to have a package of things of which tax has to be one.
Does reform sound like they're on the right track when they're talking about getting business going here in the UK?
We're not here to endorse any political party. I think, the good news is we want this wave of entrepreneurs to encourage and make it possible for governments of all colours to support entrepreneurs. We want to make it more popular. And one of the things that comes from this report is the younger generation can't name any entrepreneurs. They want to be entrepreneurs. They can't name them, and they're too scared of the risks of being an entrepreneur. So there are lots of things that we need to boost the ambition, highlight the world's best entrepreneurs. Let's have a minister for entrepreneurship that focuses on this. Let's have a minister for talent that focuses on bringing the talent into the UK. Let's make these even bigger priorities for governments of all stripes in this country.
OK, Brent, great to see you. Thank you. That was Brent Hoberman, co-chair of Enterprise Britain and executive chair of First Minute Capital and Founders Forum Group. Well, coming up on the programme, as we await President Trump's State of the Union address, we'll discuss the US economy and tariffs chaos with Sandra Horsfield from Investec. That's next. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing because I never watched the movies. I was traveling the business. But of course, after people, hey, Nobu, so you must know him, and then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. This is the opening trade. 48 minutes into a session that we expected to be fairly flat at the start of trade. It hasn't turned out to be that way. We are a little bit weaker across the European equity space this morning, continuing to worry about AI perhaps, down 0.4% on the DAX, not far behind that on the FTSE 100, in fact. And US futures now are flat. They had been suggesting something a little more positive, Lizzie, but now we are flat on E-minis and Nasdaq futures after the day that was yesterday.
So that's what's happening in the markets. Meanwhile, President Trump's new 10% global tariffs kicked in a couple of hours ago, and an administration official says the White House is working on a formal order to increase the levy to 15%. Now, this is after the Supreme Court, of course, struck down Trump's original sweeping duties. And amid the chaos, we'll be keenly watching out for President Trump's State of the Union address tonight in the US and tomorrow morning for Europe. Joining us to discuss is Sandra Horsfield, economist at Investec. Sandra, good morning. Thanks for being here. As we review all of this that came out of the tariff drama over the weekend, you've got many saying it's a lower effective tariff rate, but then prolonged trade uncertainty. Net, is it bad for the economy?
For the time being, what we have is a stopgap. It is not the final end state for tariffs. And I think the uncertainty this generates clearly makes life more difficult for companies, and it makes life more difficult for markets as well.
Well, yeah, if companies start hiking prices amid this uncertainty, and given that the FOMC minutes were hawkish, is a Fed hike back in play?
Well, there's certainly some of the more hawkish Fed members have talked about that possibility. I think the big picture for the time being, as things stand, is that we are actually seeing a reduction in the applicable average tariff rate. As things stand, though, is a crucial phrase at this point, because, of course, we know that where we are now is not where the administration wants to end up in the final place. So we will have to wait and see how that develops.
Yes, and it seems that some President Trump's popularity ratings linking with regards to tariffs, he's under pressure on that front, and not all Americans, and certainly more than 60% of Americans, don't like what he's doing on tariffs, it would seem. So tariffs probably get a mention in the State of the Union address, we'd think. But in terms of affordability, in terms of tackling the cost of living, what should we be watching out for in the State of the Union, given the areas of the market he's talked about in the past where he is focused on affordability?
I think we've certainly seen elements of affordability make it to the top of his agenda in the past. So we've had mentions of credit card fees being capped. We've had mentions of the housing market being looked at. These are obviously all crucial parts, and affordability really is the key issues for voters at this point. What more can be done? Well, certainly, I think this administration is much more happy to step into areas that other administrations would have stepped out of. So I wouldn't be surprised if we were to get more along these lines being addressed at this point.
Yeah, and sharing the burden, if there is one, of the higher cost of energy as a result of AI and data centres might be something of a theme. Our reporting suggesting that maybe President Trump will be calling on those who operate data centres to pay more of the cost of energy. How concerned are you about energy prices in the United States?
Well, I think the important thing to remember is the US is a net energy producer at this point. And that is something that has shaped a lot of what is happening at this point. Of course, the demand by certain areas such as AI is very great for energy. It's very localized as well. So it's not necessarily that easy to spread that and shelter households from the inflationary impacts of that. At the same time, we do have this big drive up to boost energy production. And of course, that is meant to counterweight some of that as the overall picture balances out.
Sandra, let me ask you about the UK, because we saw unemployment overshoot, inflation dropping. Is March now live for the BOE?
Well, I think the Bank of England has taken a somewhat different approach to looking at the labour market than beforehand. It is now much less concerned about wage persistence, which is something it had talked about for a long time. At this point, though, the question is, will the labour market really develop as they think? Will we get more of a loosening in the labour market, or indeed will we get this easing in inflation pushing through? March is certainly a live possibility, but then on Friday we had data that suggested that perhaps the economy actually fared better than it thought at the start of this year. So it is certainly not a done deal as yet, as far as we are concerned.
OK, well, we'll be hearing from BOE officials, of course, later on. But I also want to ask you about the politics, because you've got this Gorton and Denton by-election coming up later on in the week. Betting markets say that it's going to be the Greens that win. Do we see less gilt and sterling volatility if that's the case, rather than a reform victory? Or is it that if the Greens win, there's a worry that Labour is dragged further to the left and it becomes looser fiscally?
I think political worries are certainly a factor to take into account. Exactly who would win instead of Labour, if that was what was to happen, perhaps doesn't matter so much. the mere fact that there is a lot of pressure on the government to deliver something different, to convince voters that it can yet deliver the change that they had voted for, is an issue. And the question is, will that be under Keir Starmer or somebody in an equally centrist camp, or will the Labour Party decide to shift in some other directions? The by-election is certainly one big test. And the second bigger question perhaps still are the May local elections. So we could see that there could be more volatility in the gilt market, perhaps also in sterling in the interim.
Anyone more market-friendly than Keir Starmer of the potential runners and riders to replace him?
Probably it's a matter of can we maintain his market friendliness in a relative sense rather than can we find somebody who's more market friendly at this point.
OK, Sandra, thank you so much. That's Sandra Horsfield, economist over at Investec. Well, let's have a look at what's on the agenda for today. We have Ursula von der Leyen in Kyiv as the war in Ukraine enters a 5th year. Meanwhile, the EU General Affairs Council is meeting in Brussels today. We've got plenty of Fed speak as well, including from Chicago's Austin Goolsbee, Governors Christopher Waller and Lisa Cook. And then at 4 p.m. London time, we have Apple's AGM before the real finale of the day, which is, of course, President Trump delivering his State of the Union address in the evening stateside, in the morning for us here in Europe.
Yes, absolutely. State of the Union will certainly be a big preoccupation for us tomorrow. So, yes, into our Wednesday, that will be, won't it, Lizzie? Taking on board everything he has to say around affordability. Where will his laser focus go? How market moving will it be? Thinking of markets, I'm drawn to the fact that US futures are actually pretty flat now. When we started this programme a couple of hours ago, we had US futures actually pointing in a much more positive or slightly more positive direction. They are really quite flat right now.
Yeah, flat to the upside. And the European session, not what we thought it would be either. The stock 600 down 0.2%. Are banks still at the bottom of the basket? I do have to wonder. Let me check quick.
They are.
Are they? Still going?
Yeah, banks.
Right. We don't really know why. Perhaps the AI, perhaps the stand chart earnings.
Yeah, banks down by 1.8%. That sector under some pressure, it would seem. But on the other side of things, autos and parts going higher. We'll keep an eye. Neil Campling was telling us about Anthropic doing a demonstration of its Claude tools later on, its Claude chatbot. And so we'll certainly keep an eye on that in case that adds another spanner to the works.
We've got an interview with Chicago Fed President Austin Goolsbee to bring you at 2:30 p.m. London time, so don't miss that right here on Bloomberg TV. But that does it for the opening trade. The Pulse is up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Donald Trump's new global tariffs have gone into effect, and the White House is working on a formal order to increase the rate from 10 to 15%. Jamie Dimon, the J.P. Morgan chief executive, warns of parallels to the pre-financial crisis and says some rivals are doing, quote, dumb things. And the EU fails to agree on a fresh round of sanctions on Russia as the war in Ukraine enters its fifth year. Now, first thing is first, let's check on the markets. Again, there's quite a lot going on, as we're also expecting an update on some of the software that AI is using. Now, we did see a short-lived rebound in stocks seem to be petering out as fears about the disruptive impact of AI continues to unsettle the markets. Now, the so-called AI scare trade has become a dominant theme for stocks. Traders also need to contend with a range of other risks, from renewed trade uncertainty to brewing tensions between the U.S. and Iran. You can see yen also something that we're looking at 155.94. We're seeing a lot of red across the screen in Europe with the CAC 40 and also, well, everything's red, the FTSE, as is the FTSE MIB. Again, it's a lot about AI, and then we're seeing a little bit of pressure also on the banks. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Donald Trump's new 10% global tariffs are now in force. Bloomberg is told that the White House is working on a formal order increasing the levy to 15%. Well, Bloomberg politics editor and Washington deputy bureau chief Laura Davison is with us. Laura, thank you for joining us. These new tariffs are allowed to be imposed for 150 days. How much certainty is there now about U.S. policy?
We have no certainty going forward. We can say for today, the rate is 10%. The White House has also said that they are working to increase that rate to 15%, but there's no timeline for what that looks like. The White House is also considering launching investigations into a bunch of industrial goods, things like pipe fittings, large format batteries, industrial chemicals. It would launch a probe into whether there are national security concerns on importing these products. That is a precursor for tariffs to come into effect. That is a process that takes weeks, if not months. So that is also down the line. So there is lots of uncertainty about what tariff policy looks like. We are really in a day-by-day, week-by-week situation as the White House figures out what it wants to do next following last week's surprise Supreme Court decision striking down his global tariffs.
Laura, will this issue be a big part of tonight's State of the Union, given that cost of living is a big issue in the U.S. midterms?
Yes, Trump is, his advisors at least really want him to focus on the economy, talk about his tax cuts, his plans for housing affordability and other things. Trump is also likely to address tariffs in one way, shape or form. One thing to really watch here is the Supreme Court justices are likely to be in the room. They traditionally sit in that front row there, just feet away from where the president is. Trump was very critical of the Republican appointed judges who voted against his tariff ruling last week. It is, noteworthy if he will lash out at them again in the room in the U.S. Capitol. But Trump, has a lot to talk about. He has signaled this is going to be a long speech. He typically speaks for 90 minutes or more. There's a lot of ground to cover in this speech.
There certainly is, Laura. Thank you so much. Bloomberg Politics editor in Washington, Deputy Bureau Chief Laura Davison. Now, the EU says President Trump's new tariff policy will increase levies on some of the bloc's exports above the level permitted in their trade agreement. Let's go straight to Suzanne Lynch, Bloomberg's Brussels Bureau Chief. So, Suzanne, do we know what action the EU will take in response to these new tariffs?
Well, we do know, Francine, that the European Parliament has decided to halt the ratification of that EU-US trade deal for the moment. Now, some officials are saying this is not the EU walking away from this deal, but it is giving the EU breathing space. In a sense, the European Union was in a lucky position, if you like, that this ratification process of the EU-US trade deal had not been completed. So they're able to kind of delay that a bit until they see some more detail and some clarity from Washington. Now, there are two real concerns. Number one is, as we've been reporting, there are concerns now that these new regime that was announced over the weekend, that is going to impact negatively European exporters, and they will be worse off than they would be under the Turnberry Agreement, the EU-US trade deal. So you've got that worry, and they're looking for clarity from the US on that. But also, I think, weighing on minds is a fear or an anxiety, really, about what the Trump administration may do next in terms of trade. And we've already heard from the US trade rep that they're looking at these Section 301 investigations at an accelerated rate. You know, what's that going to mean? Is it going to be targeting certain sectors that is going to impact particularly Europe? So I think that other unknown is also weighing on minds here in Brussels.
Yeah. Suzanne, thank you so much. Terrific briefing, as always. Bloomberg's Suzanne Lynch, our Brussels Bureau Chief. Now, let's discuss the trade volatility and the latest twist in the so-called AI scare trade with Emmanuel Coe. He's head of European equity strategy at Barclays. Emmanuel, thank you so much for joining us. I mean, before we get to the AI and all the million questions we have on DeepSeek and some of the fears out there in the markets, what's your take on trade? Because it seems that we're still in limbo. We don't know what happens in a week, a month, 6 months. So does it change the way that chief executives invest capital?
Look, I think it's just helpful in terms of bringing back this trade uncertainty that we almost forgot about at the end of last year. So the view was, look, we are now moving to the next chapter, and Trump will try to focus on affordability and a more pro-growth agenda. And we are back, not maybe to square one, but we are back to a point where I think, business managers have to prepare for different scenarios. Look, at face value, we are very much back to where we were a week ago in terms of average tariff. Let's call it 10%. It might go to 15%, but the numbers are not changing meaningfully. The way of implementing tariff is changing, but the numbers are not really changing, right? But you just don't know what is going to be the end tariff game, what is going to be the final number, and the process to get to some clarity.
I mean, as an equity strategist, what do you worry about? Is it AI more than tariffs, or that everything comes
I'm not sure about the pecking order here. I would say, if you take a snapshot of the current macro setup, things are looking pretty all right? Actually, we are seeing sign of reacceleration in growth in the US, even in Europe, with Germany starting to spend the money. We had a pretty decent reporting season. Earnings are growing, so not much to worry about. And then, if you think about AI, if you think about trade, if you think about geopolitics, they're all main theories that can really have an impact on sentiment and growth, of course, right? So I think...
But how do you look at AI? Because AI, we've been talking about certain sectors being displaced or changed radically, but it's on certain days unclear why that the market really realizes, and then it cools off. So it's a bit of a zigzag.
Yeah, I mean, nobody knows, but, we are seeing now blogs or, some independent, research publication, really having a massive impact on price action. So far, it's mostly rotation away from perceived loser to perceived winners. So the markets are not really moving much, but there's a lot of action under the hood. I think what is a bit of a growing concern is this shift towards more like AI deflation theme, which is getting much more macro, i.e. we are all going to lose our job, and many more businesses will go bust because AI is going to replace all of us. And that's why you are starting to see the bond market basically getting bid again. Yields have been moving down quite significantly. There is a bit of tension in part of the credit market exposed to software. And again, banks in the most recent future have been hit as well by credit quality concern, right? So I think if we're moving for idiosyncratic issue to more macro issue with AI driving that, that can have a broader impact on markets.
But it also has an impact, therefore, like on inflation, but also jobs. And again, there's market research, but it goes from 10,000 jobs lost to 100 million jobs lost. So it's difficult to find exactly where you land. How do you do it in your research?
Well, I think we're trying to take a balanced approach and say, look, for now, we're not saying, I think there is a demographic shift as well, which is somewhat counterbalancing some of these job losses concerns. So right now, we're not seeing much hiring, but we're not seeing much firing as well. So it's a no firing, no hiring type of labor market. Things might change, obviously. I think we have to be very nimble about our ability to forecast the future. But I think we take the view that right now, this is a contained issue mostly. And if you look at the past main phases of industrial or technological progress, usually they came with new job creation as well, right? So I think history is telling us that maybe we should not over-exaggerate the threat of this AI disruption to the labor market. But of course, I think what we are trying to do from an equity allocation standpoint is to be exposed to some of these old economy, more tangible parts of the market, right? Things which are not too much disrupted by AI innovation.
Such as toothpaste.
Why not? You can have, stuff in staples, in healthcare, goods generally, industrials. We like the broad AI supply chain, whether it's electrification, industrial. Look, all of that is quite consensus, but they're still working very well. It's very hard to go against the crowd here. If you look at software stocks, we think they are massively undervalued now, mispriced. But look, it's very hard to prove the market wrong on that.
Where do you see value in European stocks? And again, is there a point where actually a high euro level compared to dollar is counterproductive? It really starts hurting companies.
Look, it could, but I think, we are starting from a much higher level of euro compared to 1 year ago. So you had a 15% move in euro-dollar last year when growth expectations in Europe were revised down. So it was a double whammy for earnings, weaker growth and stronger currency. Right now, euro is quite strong, but stable compared to where it was 1 or 2 months ago. But European growth expectations are being revised up. So I think the biggest driver of earnings ultimately is activity and GDP growth. And we are seeing upgrades to growth forecasts. That's why I think earnings can cope with a slightly higher currency, as long as it is coming from good reason. If it is a broad dollar debasement trade with weaker growth in Europe, I think this is a different story for earnings.
Do you see money moving away from U.S. assets?
Yes, I think for different reasons. I think it's less about policy risk, it's more about AI. I think what we are seeing is money being reallocated to AI-light markets or more, old economy markets, whether it's Europe or Asia. Again, dollar is more stable than it was a year ago, but we are seeing equity flows shifting away from the US, which I think is quite healthy, as long as it is happening in a pretty decent growth environment.
Emmanuel, when you look at defense stocks, it has, a lot of them have risen quite significantly. There was a partial IPO of a Czech company that went extremely well or was valued at a higher premium. What do you do with defense right now? We
are still very long the space. Again, it's not a one-way trade, and we are now, pretty much at 4 years into this, Ukraine conflict. Look, the world is not getting safer. Definitely, more fragmentation, more threat everywhere. And look, we like industries which are undersupplied. And we think the world needs more defense equipment, unfortunately. And demand is still very strong compared to supply here. So pricing, margin power will be very strong for the space. It's a small part of the market, but earning quite a lot and not so much impacted by AI. So we are long industrials, but defense is part of that as well.
Do you see Europe becoming more competitive? I know we've had the Draghi report, we had the Leto report, we keep on talking about it. It's unclear whether there's drastic measures being taken by European countries where actually politicians are strong enough that would help bases for a lot of the companies.
I mean, we are seeing that in Germany. Look, Germany is the only game in town for Europe right now because they have fiscal capacity and a relatively stable and strong government. And we are starting to see the data showing that the money is being spent in Germany. And there was a lot of skepticism about the execution of this plan. So for most of the past 6 months, investors were selling Germany again after buying it in H1 last year. And now we are seeing interest coming back because the data is moving the right direction. So spending is picking up. We are seeing debt issuance speeding up as well for Germany. And the data seems to be responding to that. So we like the German complex. We like German domestics. Again, it's a small market with interesting valuation. Look, for the rest of Europe, it's hard to see obvious sign of change. There's a bit more, obviously, defense push here and there. There's a bit more focus on energy supply and demand in Spain as well. look, Draghi report, as far as we know, only 10% has been implemented. So there's a long way to go. But you can see, look, we are starting from a very low point of expectation and we are moving in the right direction.
Yeah, what do you do with UK equities?
Look, we are underweight UK, but we like some of the energy part of it, mining and energy. You know, we think they are needed for what the world is doing now in terms of geopolitics and AI supply chain. We are a bit more skeptical about the domestic part of the UK market, even though, look, we are starting to see some green shots. So never say never. Why not? You know, at some point we might see a little bit of interest on the spread. I think the broad political uncertainty is a cap on the performance of the UK market for now.
Okay, Emmanuel, thank you so much for joining us. Emmanuel Cauder, the head of European equity strategy at Barclays. Coming up, we'll discuss how the rest of the world might react to the new 10% U.S. tariffs. Former WTO Chief of Staff Arantxa González-Leia joins us next. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is The Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, as a new 10% U.S. import levy comes into force for 150 days, the lack of clarity from Washington has spawned confusion around the globe about President Trump's tariff agenda. Countries and corporations are poring over trade agreements to determine how they'll fare. Well, let's bring Arantxa González-Leia, former Spanish foreign minister, now Dean of International Affairs at Sciences Po. Dean, thank you for joining us. I mean, what's the right way for Europe to deal with the U.S. right now?
Well, is to stay firm, to stay put, not implement the agreement that was concluded with the U.S. before there is clarification on the U.S. side about their trade policy, about the tariffs that they suggest to implement vis-a-vis the European Union. It's not going to be good for businesses. It creates chaos, it creates instability, it creates lack of predictability. But I think we have to stand firm because we can't operate and we can't offer concessions to the other side without knowing what we get in exchange.
Does it change, Dean, anything? Last year, we saw a lot of countries, apart from China, actually not retaliate against the U.S. Are you expecting the same of this year? Or will countries be a little bit more belligerent because they're fed up of the uncertainty?
Well, I think the first thing, Francine, that it's important to note is that the rule of law matters. So maybe thus, as to those who said might is right, I think we are learning that might is not always right, and that right still has a big value. So I think it has told us also that the avenue of challenging with the law the actions of the U.S. administration is important, whether it's with the U.S. Supreme Court, whether it's with lower courts like the Court of International Trade, whether maybe it's with the WTO, is to push back also using the law, which has proven to be effective in clarifying what the U.S. administration can and cannot do. And I say this because there are also a lot of doubts about whether the instrument that the U.S. administration is not proposing to use, Section 122, is applicable to today's reality. Is there a real, is there a fundamental international payments problem? Can we say that they are respecting Section 122 when big parts of products are excluded from the measures, while Section 122 says that it has to be applied to a broad and uniform set of products? So, I think it's important to question and to question according to the law because, it's proven to be helpful in, questioning the abuse in the use of instruments like tariffs.
But is there a question on, if you're Europe right now and you're a head of state or you're the Commission, do you need to align yourself more with China? If there's this massive, I'm not sure what this new rules-based order looks like and whether Europe has to choose between the US and China and whether actually be a good idea to go more towards China.
I think Europe has to choose Europe. It has to stand on its 2 feet and it's got to defend its interest, and it has the ability to do so. And obviously it is better if it does so, especially as regards the abuse in the tariff instrument by the US administration. If it does this with a broad coalition of countries, whether it's Canada, whether it's the UK, whether it's many countries in Asia that are impacted by these measures too. Then there is a second question concerning the reform of the rules of international trade to make sure that these rules reflect better on today's realities, that they can capture, trade policies that may not be fair, whether it's because they are projecting overcapacities on international markets, whether it is because they are selling below costs, whether because prices are predatory. This also needs to be tackled. The larger the coalition, including obviously China, because a number of these practices also have to do with China, the better it would be. But Europe has to defend its own interests. And frankly, it's not a small player. So when it stands firm, it makes a difference.
Dean, we have a viewer question, which is basically, is there a danger that if the EU steps away from this trade deal with the US, that President Trump would walk away from a Ukrainian resolution?
Well, let's ask the question in the right way. Europe is not walking away. It's the US that has walked away from the deal that was signed in Tambury. I guess that if the US sticks to the Tambury deal, imperfect as the agreement may be, the EU will stick to it. But it's the US that has departed. For now, it's proposing to depart from the Tambury deal. So, a deal is a deal at the end of the day. So you change the terms, don't expect the other side to stick by the terms.
What does Europe need right now? I know we had the Draghi report, we had the Letta report. Is there anything that would be a quicker fix, or do you think Europe is taking the right steps to be stronger together?
Europe is moving in the right direction. It's probably moving too slowly, but in my view, the sense of direction is the right one. Part of the answer to the European Union is build its own internal resilience. This means more integration of European markets, energy, capital, technology, and above all, building a European defense and security. And number two is building more bridges to diversify partners across the world, like it's doing with the agreement with Mercosur, with India, and a few more to come. So these are the two legs on which the European Union has to invest moving forward. The basics are there. I think it's moving faster on the external dimension than it is on the internal side. And what we now need to see is clear leadership on the side of European Union member states to walk the talk on further integrating the European market. That is the best way for Europe to defend its interests in this much more turbulent way.
Can Europe be a serious leader in the world if it doesn't have its own big AI company?
Yes, it can, and it's proven to be. I think on artificial intelligence, for me, what matters now is what we do with it. Can we use, and are we in Europe moving forward in using AI to apply it to healthcare, to education, to improve the competitiveness of our businesses? This is where we should be focusing. Focus where you've got a comparative advantage rather than building the big LLMs, many of which, by the way, are open source. Is let's focus on making it work to improve the competitiveness of the European industry, but let's also make sure that we frame the use of artificial intelligence in a manner that it's fair, it's prudent, and it's compatible with our democratic values. That is where Europe may have to find its own comparative advantage.
But do you see Europe having its own national champion to do the things that you're talking about?
Well, this notion of national champions in Europe is a little bit more complicated. It's not national. I don't think we will, in Europe, the avenue is to build national champions. What we need to do is build the ability of the European industry that needs greater scale, and this scale will be given by deepening the European market, avoiding the fragmentation that exists today. So it's less about national champions and more about giving the European businesses the scale that they need to operate in a market with less internal barriers between the 27 member states.
Thank you so much for joining us. Arantxa González Laya there, former Spanish foreign minister and now Dean of International Affairs at Sciences Po. Now, we have quite a lot going on in the markets. A lot of the focus is on yen, I would say, and it's a lot, of course, also on AI. Yen declining a little bit further after we saw the Prime Minister, or certainly Sanai Takahashi, voicing apprehension over more rate hikes in a meeting with the Bank of Japan Governor Kazuo Ueda. And then we look at U.S. futures, a lot will be determined by what we see with AI. Now, this is after there's been quite a lot of a brief rebound that's now been fading because there's still fears about the disruption and disruptive impact of AI, and that's continuing to unsettle markets. Traders, of course, still need to contend with a range of other concerns, including trade uncertainty and brewing tensions between the U.S. and Iran. Coming up, domestic shakeups and global policy challenges. We'll discuss what to expect from President Trump's State of the Union address. That's just ahead, and this is Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Further Wave by empowering our customers across all our segments?
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Donald Trump's new global tariffs have gone into effect, and the White House is working on a formal order to increase the rate from 10 to 15%. Jamie Dimon, the JP Morgan chief executive, warns of parallels to the pre-financial crisis and says some rivals are doing, quote, dumb things. And the EU fails to agree on a fresh round of sanctions on Russia as the war in Ukraine enters its fifth year. Now, tonight, President Donald Trump will deliver his first State of the Union address in his second term. The speech will likely aim to highlight his successes at a time of growing scrutiny over his policies, including trade and immigration. Let's get straight to Lindsay Newman, King's College London visiting research fellow. Thank you so much for joining us. Lindsay, what are you expecting from the State of the Union address today? Is it going to be affordability, and how does he manage tariffs?
Francie, thank you so much for having me on. As you said, this is his first State of the Union address in his second administration. He, of course, did address a joint chamber of Congress last March, 6 weeks into his administration. And I think that's a good place to start in terms of what we can expect tonight. That time around, he was really focusing on the momentum he saw in his administration and what he felt that the administration had already achieved, the successes he had already felt that he had accomplished, including around at the border security, 100 executive orders, hundreds of executive actions, and he previewed tariffs and the U.S. global role. Tonight will be, in some sense, more of the same. I absolutely expect him to hone in on what he perceives to be his year one, the administration's year one successes, the big, beautiful bill, AI investment at home, border security, those issues that remain quite popular at home. And then on the global stage, he'll talk about the Gaza peace plan. I imagine the border peace will come up, the ongoing U.S. efforts to bring a peace plan to the war in Ukraine, and the upcoming trip that he has planned for China. He will, as you said, he will try to reframe or sort of sidestep those areas that are perceived as vulnerabilities for his administration and his record. You know, on this issue of affordability, it's a year on. It's becoming increasingly difficult for him to continue to frame where the economy is as a Biden era hangover. He is having to take more and more responsibility for the fate of the economy at this point in time. We know, generally speaking, polling on how he's handled the economy is quite mixed. There's really only about a 40% approval rating on how he's handled the economy. It's even a bit lower on tariffs in particular. So I expect him to announce a couple of initiatives tonight, to preview some initiatives tonight, because he knows affordability and the economy will continue to be a top issue for voters this fall in the midterm elections.
How can he try and fix affordability at this point? And actually, personally, is he still popular?
Yeah, the issue of affordability, he knows this very front and center. He cannot make the cost of eggs, despite trying through tariffs late last year. He can't make eggs cost less or milk cost less. And this is the issue that has been the major issue on affordability. It's not about the headline numbers necessarily. It's not about how inflation has come down from pandemic levels or how growth rates have rebounded from pandemic levels. It's always been for American voters about the felt experience at their kitchen tables, and they continue to feel the absolute crunch. So he will propose some initiatives or unveil some initiatives tonight, perhaps on energy costs to be borne by those AI developers rather than local communities. He also had a healthcare proposal that he announced early this year and will urge Congress again to take that up. But affordability is a very sticky issue for him, and that's why I fully expect him to also just be touting those other areas that he sees as broader successes, including on the global stage.
Yeah, how do you think the midterms will go? I mean, I know he still has to, for example, in Texas, pick someone that would run for the GOP. I'm not sure how either sides are prepared at this point.
Yeah, Francine. I mean, look, we just have to look past his prologue here. History does not speak very well for incumbent parties in midterm elections. It is very uncommon for incumbent parties to hold on to both houses. In fact, this is a very big headline here, only one time since 2000 has the incumbent party held on to both houses. And that was in 2002 following the 9/11 attacks and the U.S. invasion of Afghanistan. Only one time has the incumbent party held on to both houses. So it's very likely that the Republicans right now are considering that reality, that they're going to have to let go of one of the congressional houses. It almost always is that the House of Representatives and not the Senate. And Trump is very aware of that. And that's one of the reasons why he's thinking more broadly, including around this military, I believe, why he's thinking more broadly, including around this military action in Iran, and why we've been hearing in recent days about a potential two-step process here where there could be an initial strike on Iran followed by a broader effort in a couple months' time.
I mean, when you look at some of the protests and the use of tear gas and violence, is the president expected to address that in State of the Union? There's also a lot of anxiousness about AI and what that does to the economy. We haven't really heard the White House weigh in.
Yeah, we know that amongst the top issues of Americans continues to be the state of the economy, the state of democracy, immigration, and this issue of extremism and political violence. So there is no skirting around these being a host of the top issues. The president is unlikely to really directly take on this issue of political violence and extremism, but he will be almost undoubtedly talking about election integrity, the health of the elections that are coming up in the midterm elections, the efforts that the administration has been supporting, including the SAVE Act, to sort of bolster what they see as election integrity efforts at the voting and polling booth. But in terms of taking on specifically sort of the political violence issue head on, I don't expect that in tonight's conversation. It will be something that most likely Abigail Spencer will be bringing up in the Democratic side's rebuttal.
Lindsay, I know we're a little bit far off, but when people go to the vote in the midterms and you're in that booth and you think about who you're going to, tick the box for, is it all about affordability or is it also immigration and other things?
Yeah, I mean, it is going to be, quite interesting. Recent polling has shown that this field, in terms of the top issues, is actually much more wide open than it was in 2024. It's not to say that there is one issue where 30% of American voters now see this as a top issue. It's actually quite divided, quite evenly amongst those issues that I previewed: the economy, immigration, political violence, and democracy. Interestingly enough, immigration is no longer a 1-2 issue. It's more polling in the 3-4 slot, which is quite telling given everything that's gone on over this year, especially even still start of 2026 on immigration in Minnesota, which is to say, again, that people are feeling at home the pressures of affordability. And so that is going to be, the major issue before voters. And, I always said in 2024, President Trump asked a simple question of American voters. Are you better off today than you were in 2020? And as it turned out, a small majority of voters across the country felt that they were not, and they voted for Donald Trump. That's going to be the same question voters are asking themselves this fall. And now it's not going to be, as I said, a question about how the Biden administration handled affordability and the post-pandemic recovery. It is going to be about how this administration has handled the economy that it inherited in the start of last year.
Yeah. Lindsay Newman, as always, thank you so much for joining us, King's College London Visiting Research Fellow. Now, as Russia's war in Ukraine enters its fifth year, the European Union is struggling to gain traction in the peace process. Hungary has blocked a 90 billion euro aid package for Ukraine and halted progression on a new sanctions package against Russia. Following these developments, the EU Foreign Affairs Chief Kaja Kallas spoke exclusively with Oliver Crook this morning.
Of course, we're working with Hungary and Slovakia on different levels to find a solution, but this is very, very unfortunate. Of course, on the positive side, we have seen this before, and we have always come to outcome and solution in the end.
And there's also a sort of deadline looming. We understand that the loan package was going to begin to be dispersed in April of this year, and that was sort of seen as the critical moment to get some of this funding to Ukraine. If there's not a resolution by then, what are the options? Does this put, for example, the Russian assets back on the table?
I think so, yes, because this loan was a plan B, actually, because, there were some countries that were opposing to the frozen assets, but it's clear that Ukraine needs this funding in April, and like many analysts have said, this could be a game changer for this war, to send a clear message to Russia that you can't outlast us, and we are supporting them to defend themselves.
And do you think there is going to be the legal framework to try to move on those Russian assets? Obviously, that was the point of failure last time, particularly with the Belgians still objecting to that. Do you think that that has evolved? Has there been legal work happening in the background to try to make that more viable?
No, there hasn't, because there was this 90 billion loan, and we were moving quite well on this track, also on how this, there's flexibility for using this money, considering the Ukrainian priority and urgent needs that they have. So of course there has not been any work regarding the frozen assets in meantime, and we should right now, focus on solving this issue on the 90 billion loan. There is discussion on the leaders level and different options on the table, but if that's not going to work out, then of course the frozen assets is a possibility.
And so sort of Hungary and Slovakia to a certain degree is not a new dynamic within the European Union, particularly on the question of Ukraine. That being said, there's one thing that these two nations share, and they both had a visit from Marco Rubio in days after the Munich Security Conference. I wonder what your perspective is on that, not to sort of enter into, potential conspiracy or anything like that, that this is the U.S.'s influence. That being said, it does give these two nations a direct line to the United States and potentially emboldens them to go against European policy because they have the United States as a very clear sort of stated ally. What is your perspective?
Well, America has been very clear that they want this war to end. So if you want this war to end, then we should really do everything to put the pressure on the aggressor. And what, the 20 sanctions package would do, in addition, we see that Russia's economy is not doing well at all. Their approach has been to put pressure on the victim, on Ukraine. It hasn't really delivered in 1 year results, so maybe we should focus now on the other side. So clearly it would be also in their interest that these things go through.
Kaja Kallas there, the EU Foreign Affairs Chief, speaking with Bloomberg's Oliver Crook. Now, the ramifications of the conflict have been felt across the globe, and especially within European defense expenditure. For more, we're joined by Antonio Barroso, Bloomberg Senior Geoeconomics Analyst for Europe, who just put a brilliant paper out. Thank you for joining us. Antonio, European countries are increasing defense spending. Is this a temporary response to U.S. pressure, or does it really signal a structural shift towards sustained higher investment?
Oh, we think higher spending in defense is definitely here to stay in Europe for three reasons. First, the US seems determined to shift the burden of defending Europe to Europe itself. And we think this is actually not tied essentially to Donald Trump being in the White House. I think this is a long-term trend. The second reason is that Europe needs to contend with a more aggressive Russia. We see what's happening in Ukraine. So European policymakers have to actually spend on defense to build a credible deterrent that can essentially prevent a potential aggression of Russian on European soil. And the third reason is that European defense spending, is actually addictive for governments, because once they start spending on national firms that create jobs, then it's very difficult to cut back on those spending programs, right? So for all those three reasons, we believe that higher defense spending in Europe is here to stay.
So are all European countries likely to meet their NATO spending commitments?
That's very unlikely, actually, because the largest European NATO economies face a mix of different economic and political constraints. Like if you look at the top of the pack, you have Germany and Poland that have a strong political will to spend in defense and also have the fiscal space to do so. And in fact, Germany is expected to outspend pretty much everyone else in Europe over the coming years. Then in the middle of the pack, you have the UK and France, where you have a strong political will to spend, but they really don't have the fiscal space to do so. So it's very unlikely that they will reach the core 3.5% of GDP NATO target by the specified deadline. And then you have at the end of the pack countries like Spain and Italy, where really there is no much political will. There is some political will to hike defense spending, but not enough to get to that 3.5%. And definitely there is not enough fiscal space. So you can see, I think there is a big risk that countries will not hit the targets, but also of uneven spending.
Antonio, what are the main challenges in ensuring that the money is not wasted?
Well, there is a big risk that the money will be actually not spent in the most efficient way, because the problem is, the main risk is that each country will try to spend in its own national champion, and that will lead to fragmented spending and losses of efficiency. One potential remedy to this will be, for example, the European Commission coordinating spending, but the European Union doesn't have competence on defense matters. It has a program called SAFE, by which it gives bilateral loans to member states that come with strings attached in terms of coordinating spending. But most of the spending is going to be done at the national level, which increases the risk of fragmented spending, of a loss of efficiency and waste.
Antonio, as always, thanks so much for joining us. Antonio Barroso there, Bloomberg Senior Geoeconomics Analyst for Europe. Coming up, the so-called dumb things the JP Morgan Chase CEO is warning competitors not to do. We'll discuss that next, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Welcome back, everyone. Now, Standard Chartered announced a fresh $1.5 billion share buyback as it reported weaker than estimated earnings in the fourth quarter, just weeks, after its share price was hit by the surprise departure of its chief financial officer. Bill Winters, the chief executive, spoke to us this morning, so we'll get to that in a short while. It was an interesting conversation where they also talked about succession. Now, in other matters, the JP Morgan chief executive says he's starting to see parallels to the era before 2008 global financial crisis, when a rush to make loans ended disastrously. Now, Jamie Dimon told investors he sees some people doing dumb things to create net interest income. Joining us now to discuss all of this is Neil Callanan, a Bloomberg Private Companies managing editor, and Tom Metcalf, who leads Bloomberg's finance and legal coverage for EMEA. So thank you both for joining us. Tom, I mean, we love a Jamie Dimon interview because it's never dull. I mean, when he says, rivals are doing dumb things, is he talking about credit?
Yeah, I mean, I think that's certainly one assumption. And look, he's the master of giving great copy, so no surprise this is kind of all his words are being poured over. I think it's almost like a classic of its genre, because he is going, yeah, take a look at the rivals. JP Morgan's doing great. I know exactly what I'm doing, but this is, a bit worrying, maybe on the margins, or at least in certain areas. But look, there's a lot of nuance there. Obviously, dumb money, that raises a lot of kind of eyebrows. But fundamentally, he's saying there are risks there. I'm definitely seeing parallels. Yeah. But I think he's also saying he's not expecting these, losses to be kind of systemic, at least as I read his comments.
Yeah, so Neil, how do you read these comments? Does it start to feel like 2008? I mean, it's almost like Diamond put a hand grenade and then kind of walked away. So are we leading up to something that could be as dangerous as the big financial crisis?
That is a concern, obviously, but we felt this way just over 2 years ago when a bunch of funds were gating in the US as well. BCRAD and BREIT were kind of not gating, but like limiting investor withdrawals at the time. And everything calmed down again and everything was fine. And part of that was, they came out and strong statements, brought in new investors, limited the withdrawals, and everything calmed down. So the difference this time is, and where the systemic risk comes in, is in the last couple of years, despite what Jamie's saying about rivals making mistakes, those mistakes have often been backed by the banks. So if you look at non-bank lending in recent years, nearly all of that is coming from banks. It's a huge part of the increase in their loans and loan commitments, and that intersection and symbiosis that has been growing up between banks and shadow lenders is something to be concerned about in the longer term. But at the moment, it'd be very early to say that this could lead to something more serious. Markets are very volatile in general, but somebody could come out with something next week and everything will change again.
He also pointed out to other risks.
Yeah, exactly. No, he's talking about AI and, all the classics things, right? Like, basically, I totally agree with Neil. I think it's such a volatile market, you never quite know, and these comments could, in a couple of weeks look incredibly prescient, or perhaps more likely, we've moved on to the next thing and good Lord. But I think the most interesting thing here is, very artful from Jamie Dimon to give JP Morgan a lot of distance. They were certainly slow into private credit, but I think, that point of, certainly banks are kind of back in a lot of these deals, and there's this fascinating sort of balance where non-bank firms are taking some of the bank's lunch, but at the same time, both sides totally rely on each other. So definitely something to keep an eye on.
I mean, I have to say the word rival, for me, struck a chord, because he kind of, it's great because it makes them look great, but are some of these private credit companies really rivals?
It depends on which area. Ironically, they have been in things like software, which is now coming back to haunt the people who got involved, and there is certainly a concentration risk within private credit in software, largely because in the US, about 80% of private equity lending is through private credit. Most of the private equity money, or certainly the biggest sector of investment for private equity over the last decade, has been software. As a result, private credit's exposure to software is massive. Right. And not only that, but some of their classification of what is software isn't always fully transparent, because there are, for example, in one BDC, there's a real estate and technology company with software in its name. So once you start looking at the surface, the true software exposure is much bigger, and that is one of the areas where concerns can continue to emerge.
Neil, is a big danger really giving some illiquid asset or retail investors access to illiquid assets? Yeah,
there is a chance that this is going to reignite the debate as to whether retail money should have access to illiquid assets. Obviously, in the UK, we saw around Brexit where property funds were gated. Those kind of funds have largely fallen out of favour. In the US, Blue Owl fund where retail investors were demanding their money back is part of what's triggered this whole volatility in recent days. I mean, the momentum on the political side still seems there to kind of push people into private markets, but certainly those people who have been cautioning about that will certainly use this as evidence that maybe this isn't as good an idea as some people think.
All right. Well, thank you both for joining us. Always fun to cover Jamie Dimon. Neil Callanan, Bloomberg Private Companies Managing Editor, and Tom Metcalf, who leads Bloomberg's finance and legal coverage for EMEA. Now, returning to Standard Chartered results, the bank announced a fresh $1.5 billion share buyback. It recorded a weaker than estimated earnings in the fourth quarter, and the chief executive, Bill Winters, spoke to us.
We've actually produced a great set of earnings in 2025. Q4 was strong in almost every regard. I mean, really all of the key elements of our strategy are firing on all cylinders. And while the share price has appreciated a lot, we think there's a lot further to go. So we're very happy to buy an additional $1.5 billion back. We also significantly increased our dividend in the fourth quarter, so for the full year of 2025. And that's a further sign of confidence in our ability to grow our earnings from here.
Now, the shares have been a little bit all over the place. You were at all-time highs earlier this year, but then, of course, earlier this month, your CFO left. And I'm curious, is that a sign that investors really want a succession plan in place? And sorry to ask you this, but, do you have one?
Of course we have one. We always have one. First of all, I don't think our shares have particularly reacted to the departure of any one person. It's a team. And you'll see, in fact, today when we announce our earnings, I'll be sitting with our interim CFO and our head of investor relations, who had been working for the CFO, who are absolutely outstanding. And so we're not missing a beat in that. But of course, the market now wants to know, you had several internal successors. One of them, possibly, seems to, he definitely left, possibly a successor, is gone. What's next? The good news is we've got a great bench inside our bank. It's the best management team that I've worked with in my 11 years at Standard Chartered. And I think it's a highly desirable job for people outside the bank as well. So should the board, of course it's a board decision, not mine, my job is to develop the internal candidates. I think they're in great shape, and I'm not worried at all about our future.
You've been there 11 years. How long do you want to run the bank for?
We've got a strategy day or a capital markets day coming up in May. I'm definitely going to deliver that, and I want to deliver the strategy, right? I want to see that strategy through. Now, how long that takes, we'll see. I work at the behest of the board, but for the time being, I think investors should be confident that, one, we've got great momentum in our business. We've got a really, really strong 2025 behind us. We've indicated we've had a strong start to 2026. Early days, but nevertheless, nice to be able to say. We're going to have, I think, a quite compelling investor day in May, and we're going to see it through from here.
Bill Winters, there, Chief Executive of Standard Chartered, speaking to Vonnie Quinn. Now, this is the picture for markets across the board. Stocks seem to have staged a cautious rebound after fears about the disruptive impact of artificial intelligence sparked an indiscriminate sell-off across broad swaths of the market. I'm looking at, of course, the so-called AI scare trade seems to have become a dominant theme for stocks. We're also looking at yen after comments from the Prime Minister on further rates changes, 155.89 for dollar yen, Brent crude 71.67. And then let's also look a little bit more in depth at some of the futures that we're seeing on U.S. assets. So S&P futures, you can see touch up, and Dow Jones also gaining by a similar amount. We also have the State of the Union address tonight by President Trump, so don't miss it a little bit later on. Up next, a Bloomberg Brief, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing,
Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
You know, investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. New levies kicking in. President Trump's 10% global tariffs have taken effect in a push to protect his trade agenda. Bouncing back, futures rebounding after stocks sold off on a Citrini report, stoking more AI concerns. And President Trump gears up for his State of the Union address this evening. All right, let's take a look at those markets because Lunar New Year is done and Chinese markets are back. That may be helping things. Also, the idea that the picks and shovels are AI are all Chinese and Asian companies. So your TSMCs and your other companies that make the chips and make the equipment that makes the chips, they rebounded overnight. So again, it's the idea that companies that are disintermediated by AI suffered, and to that end we saw the S&P down 1% yesterday and the Nasdaq down 1.2%. But there is relief in store today, potentially, although this could just be off the back of the Asian session. We'll have to wait and see what happens with the US session. Treasuries-wise, we are seeing that continued slump in yields with the 10-year now at 403.47. Those tariffs came into place just about 5 hours ago. They weren't as bad as they could have been, though. 10% was what was posted on the website, not the 15% that President Trump had also been threatening. But we'll see how that also progresses. And then we're also seeing a little bit of movement in the yen. So Takaichi apparently is a bit more dovish on monetary policy, and that's also having an impact on currency trading today. We'll dive into all of these stories in the next hour. Let's get to some individual movers, though. Here's Abir Abu Omar. Abir.
Bonnie, hi. Let's start with the healthcare sector with Hims & Hers down 7% in the pre-market. Now, this is one of those stocks that has been mired in legal and regulatory drama since the beginning of the year on its copycat drugs, weight loss drugs that Novo had come up and sued them. When it comes to those weight loss drugs, the stock is down on results from yesterday as well. And we know that it's now subject to a new lawsuit from the SEC, which has asked it to maintain or preserve some of those documents for future purposes. Moving on from the healthcare sector to a little bit on software. Now, SanDisk is one of those stocks that are doing incredibly well this year. The stock is up almost 190% for the year, Vonnie, and that is on the continuing story on demand for data storage. Now, SanDisk is one of those companies that are benefiting from AI disruption because it is on the hardware side. So 2.9% up this morning in the pre-trade. And then finally, we move to this small software solutions company, Keysight, that is up quite substantially this morning, up around 17% in the pre-trade this morning, and that is on the back of some of the work that it's doing in the AI space, and also it's an earnings story from earlier. It is doing quite well on the back of those. Fani, back to you.
I had to have a look at Sandisk, Kabir, because of course we've been talking about these memory stocks that year over year, 1,271% of a gain for Sandisk. I had to double check that, but it is true. All right, that is Abir Abu Omar. She'll be back later this hour. Also coming up in this hour, Sharon Bell of Goldman Sachs joins us on the market rotation. But first, President Trump's new 10% global tariffs went into effect. It's the first step of the White House to help preserve the administration's trade agenda after the Supreme Court deemed the original ones, or some of them, illegal. Joining us now is Bloomberg's Brendan Murray. So it looks like Section 232 and Section 301 investigations are going to start up to try to replace some of these tariffs that were deemed illegal. Brendan, how does this work?
Yeah, so they've come out of the gate pretty fast here with these 232s. We're going to get the 301 cases. The 232s are around national security, and they typically target industries as opposed to countries. The 301s will go after unfair trading practices by certain countries. They can group countries together or go after them one by one. But what we're seeing is the administration, it's really a race between the Commerce Department and the U.S. Trade Representative to try to rebuild this tariff wall that the Supreme Court took away the president's power to erect around the U.S. economy.
Yeah, I mean, could we be looking at a hodgepodge of numbers depending on the country, depending on the sector? As I understand it, there are some investigations that haven't reached a conclusion even yet.
Yeah, exactly. And the time frame of those could be many months. They could be a couple of months, or they could be 9 or 10 months. So it's going to be hard to tell the timing of this, which will make it difficult for companies to figure out their supply chains as they move quarter to quarter. It's going to be it's going to be uncertain, and it'll be difficult to manage inventories as we go through the year until we get some more clarity from the administration about what kinds of industries they're going after, what countries they're targeting, and what the tariff rates are going to be.
What about the countries themselves? Because we obviously know what the EU is doing. It's just sort of stopped work on all kinds of legislative affairs related to tariffs because it doesn't really know what to do, or that's what it says. Anyway, what about Australia, the UK? What are the responses? How are they fighting back if they need to?
Yeah, exactly. The 10% that took effect overnight rearranged.
Guys, ये नेचुरल गैस में देखो, ये बहुत ही कॉम्पैक्ट रेंज बाउंड प्राइस एक्शन हो रहा है. ऊपर पॉइंट ऑफ इंटरेस्ट है, मेजरली रेजिस्टेंस की तरह ही काम कर रहा है, मुझे लग रहा है. तो ये ऊपर पॉइंट ऑफ इंटरेस्ट के ऊपर निकल जाए प्राइस, या फिर ये कहीं थोड़ा सा नीचे वाला जो सपोर्ट है इसके नीचे निकले, बिकॉज यहाँ से देखो बाइंग में भी ऊपर ज़्यादा बाइंग आ नहीं पाएगी जब तक ये पॉइंट ऑफ इंटरेस्ट के ऊपर निकलता नहीं. तो अभी ऑप्शन ये है कि या तो यहाँ पर हम सेल करें, नीचे बाई करें, बट दोनों में सेम सिनेरियो रहेगा, कोई बहुत बड़ा टारगेट नहीं मिल सकता. एक्सपेक्टेड ये है कि किसी एक साइड पे ब्रेकआउट या फिर ब्रेक डाउन कर दे. अगर ब्रेकआउट करता है तो तब नीचे वाले लेवल से बाई करेंगे, या फिर नीचे वाले लेवल को ब्रेक डाउन कर दे सपोर्ट को, तो फिर ऊपर वाले लेवल पे आने पे वापस सेल करेंगे. तो इस रेंज के बाहर निकलने देना, उसके बाद ही ट्रेड करना. इसमें अभी और कोई ट्रेड नहीं है, ठीक है. थोड़ा सा वेट करेंगे, उसके बाद ही प्लान करेंगे. अभी कोई भी ट्रेड नहीं चल रहा है नेचुरल गैस में, इवन दो इट इज़ ऑन सपोर्ट, बट नाउ दिस पॉइंट ऑफ इंटरेस्ट इज एक्ट लाइक एज अ रेजिस्टेंस. सो इस पॉइंट ऑफ इंटरेस्ट को इग्नोर नहीं कर सकते. ठीक है, तो अभी वेट करेंगे, किसी एक साइड पे निकलने देंगे नेचुरल गैस को. अननेसेसरी रेंज के अंदर बैठे रहेंगे तो इशू आ सकता है. बाकी फ्यूचर की एक्सपायरी है, चाहो तो नेक्स्ट मंथ का फ्यूचर भी लगा सकते हो. ट्राई करें स्कैल्पिंग. देखो वही प्रॉब्लम आएगी, अगर मैं यहाँ पर सेलिंग का ट्रेड ही बनाता हूँ ना, उसमें रिस्क इतना हो जाएगा कि अगर ये नीचे नहीं ब्रेक करता है तो फिर डाउन भी नहीं जाएगा प्राइस। तो फिर वहाँ दोबारा फंस सकते हैं उसी जोन पे। कैजुअल केस में डायरेक्टली बाय मत करना, वेट करें ना, किसी एक लेवल पे निकल जाने देना, किसी एक साइड के एसएल जाने दो, बायर के सेलिंग के रेंज ओपन होगी उसके बाद ही ट्रेड प्लान करेंगे। हो सकता है कि नीचे सपोर्ट ब्रेक कर दे, उसके इसमें रेजिस्टेंस बन जाएगा, पुल बैक में सेल करेंगे, फिर हमारे पास एक बड़ी रेंज मिलेगी। या फिर ऊपर का पॉइंट ऑफ इंटरेस्ट रिमूव कर दे और रिमूव करके फिर नीचे आएगा, तब फिर यहाँ पर बाई करेंगे उस केस में।
Pretty substantially against the dollar. This following a Japanese local media report that Prime Minister Takeichi has voiced apprehension over more rate hikes in a meeting with the Bank of Japan governor. Bloomberg scholar Montgomery Koning joins us now for more. This is a really fascinating development, and it was a big surprise to the markets. So it looks like Takaichi might not be too excited about further hikes. What happened? How did we get this wrong?
Yeah, I mean, it's interesting because I think the market reaction post-election has been a more conciliatory tone from Takaichi. And so the idea was that she wouldn't be interfering with the Bank of Japan. You get this kind of gradual hiking cycle continuing that's been going on for quite a while. But if actual fact, I'm not sure it's that surprising in terms of if I'm the leader of a country that's struggling with wanting more growth, with wanting inflation to come down, even though the Bank of Japan helps with that. From a consumer perspective, I probably want lower rates. So it's not particularly surprising from that perspective. I think it also, in the context of the yen, you need to think about there's more than 50 basis points of hikes priced this year. So you're on the more hawkish end of expectations. In terms of a terminal expectation, that's even higher. And then also you've had more other negative headlines overnight. So comments around Besant and the rate check we had earlier, as well as Chinese sanctions or restrictions on Japanese companies.
Yeah, China putting 20 of them on a watch list and also sanctioning 20 more is in response to Japan prodding China. But you mentioned the Besant thing. I want to bring this up because the yen had been weakening already before we knew about the Takaichi comments, on the fact that Nikkei was reporting that it was Scott Bessent that actually asked for the FX rate check, and it had nothing to do with Japanese authorities, and they didn't know about it, which is something that traders had speculated on anyway, right? Nikkei reported it, Japan has not denied it. So are we to take it for, truth that it was Bessent that did this?
I think we probably have to. And this is a really interesting development because we saw earlier this year was the Japanese yen appreciated significantly on this headline that you had a rate check out of the U.S. Now, we know that Japan and authorities in particular don't want a very, very weak yen. And so there's always been this idea that you have some kind of ceiling on where dollar yen can come, particularly from the Japanese side. But what changed in the beginning of this year was the U.S. was getting involved, and that unilateral intervention doesn't really work on its own. You need something to change from the U.S. side to shift that. And so that's why in January you saw such a big amount of yen appreciation in response to that. Now, the idea is if Japan wasn't actually that bothered about the level, and in dollar yen we are around 160, if they weren't actually that bothered about the level, then maybe there's a higher ceiling on where dollar yen can go, and the market may test how far it can go. I think, though, maybe it's more telling that the U.S. side has concerns over how high the cross is, because they're the ones who can really make a difference. When you've had significant appreciation in the yen versus the dollar, it's because something's changed from the U.S. side. And so I think that's where I'd be focusing.
We are definitely going to be watching the yen very closely in the coming days. Trading right now at 155.90. Skylar Montgomery Koning, thank you so much. Now to other top stories trending on the terminal this morning. JP Morgan CEO Jamie Dimon says he's starting to see parallels to the time before the 2008 financial crisis. This is what he said about fierce competition in the financial industry and the rush to make loans at the banks. Company update session on Monday.
Unfortunately, we did see this in 05, in 06, in 07. Almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're winning in the markets business, something like that.
The United Kingdom announced its largest sanctions package against Russia since the early months of the Ukraine invasion in 2022. The sanctions target energy revenue and suppliers of military equipment. Russia's state-owned crude pipeline operator Transneft was among those on the list. And Bitcoin extending its decline. It's on course now for its steepest monthly drop since the crypto industry saw a slew of corporate collapses in 2022. It's currently hovering around $63,000. Coming up, Standard Chartered dropping on weak fourth quarter earnings. We'll bring you our interview with CEO Bill Winters next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in London. Standard Chartered slipping. The lender announced a fresh $1.5 billion share buyback as it reported weaker than estimated fourth quarter earnings. Bloomberg spoke with CEO Bill Winters earlier.
We've actually produced a great set of earnings in 2025. Q4 was strong in almost every regard. I mean, really all of the key elements of our strategy are firing on all cylinders. And while the share price has appreciated a lot, we think there's a lot further to go. So we're very happy to buy an additional $1.5 billion back. We also significantly increased our dividend in the fourth quarter, so for the full year of 2025. And that's a further sign of confidence in our ability to grow our earnings from here.
Now, the shares have been a little bit all over the place. You were at all-time highs earlier this year, but then, of course, earlier this month, your CFO left. And I'm curious, is that a sign that investors really want a succession plan in place? And sorry to ask you this, but, do you have one?
Of course we have one. We always have one. First of all, I don't think our shares have particularly reacted to the departure of any one person. It's a team. And you'll see, in fact, today when we announce our earnings, I'll be sitting with our interim CFO and our head of investor relations, who had been working for the CFO, who are absolutely outstanding. And so we're not missing a beat in that. But, of course, the market now wants to know, you had several internal successors. One of them, possibly, seems to, he definitely left, possibly a successor, is gone. What's next? The good news is we've got a great bench inside our bank. It's the best management team that I've worked with in my 11 years at Standard Chartered. And I think it's a highly desirable job for people outside the bank as well. So should the board, of course it's a board decision, not mine, my job is to develop the internal candidates. I think they're in great shape, and I'm not worried at all about our future.
You've been there 11 years. How long do you want to run the bank for?
We've got a strategy day or a capital markets day coming up in May. I'm definitely going to deliver that, and I want to deliver the strategy, right? I want to see that strategy through. Now, how long that takes, we'll see. I work at the behest of the board, but for the time being, I think investors should be confident that, one, we've got great momentum in our business. We've got a really, really strong 2025 behind us. We've indicated we've had a strong start to 2026. Early days, but nevertheless, nice to be able to say. We're going to have, I think, a quite compelling investor day in May, and we're going to see it through from here.
That was my interview with Standard Chartered CEO Bill Winters earlier. And coming up, a look at what else is making headlines in your front page news today. This is Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Development, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for your front page news. First up, the Financial Times leading with its interview with President Volodymyr Zelensky as Russia's war on Ukraine enters its 5th year today. Zelensky tells the FT that without firm Western security guarantees, Moscow would use a ceasefire to rebuild its forces for another assault. Zelensky also urges the EU to stop prevaricating and fix a date for Ukraine's accession to the bloc. Zelensky says it should be as early as 2027. Next up, the Washington Post reporting the chairman of the Joint Chiefs of Staff says lack of munitions and support from allies could mean greater danger for U.S. troops in any major operation against Iran. The Post says General Dan Kane expressed his concern at a White House meeting with Trump and his top aides. And finally, we're going to take a look at the Washington Post and the Wall Street Journal, which is reporting China has banned the export of critical minerals and other goods with potential military uses to several major Japanese countries and companies. The Journal says the Chinese Commerce Ministry added 20 to an export control list. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras. The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. New levies kick in. President Trump's 10% global tariffs have taken effect in a push to protect his trade agenda. Bouncing back, futures rebound after stocks sold off on a Citrini report, stoking AI concerns. And President Trump gears up for the State of the Union address this evening. So let's take a look at futures now, perhaps taking their cue from Asia, but very definitely an improvement from yesterday where we saw the S&P down 1% at the close, the Nasdaq 100 down 1.2%, so maybe a tentative recovery. A foil perhaps to the AI doom overnight, those Asian chip makers winning out and the disintermediaries yesterday losing out, so banks, insurers and so on. We also, of course, have seen the tariffs kick in now. They're about 5.5 hours old at this point, a 10% tariff. Not as bad as the 15% that we might have expected. Let's take a look at treasuries because that 10-year yield continues to go lower, but very, very, very gradually. It's below 4.04 now. The 2-year yield at 3.45. The 2-cent spread is about 57 basis points and change. So it's actually a lot flatter than it had been. We have to point to IBM as well, though, saying its source is its mainframe value and not just its use for COBOL, that language, because of course that scared the markets as well. And IBM had its worst day since 2000. It was a phenomenal drop of 13% for IBM yesterday. So pretty amazing day in markets. We'll see what we should be looking out for today to give us a little bit of a steer and some stocks that are moving pre-market. Let's get to Abir Abu Omar. Abir.
Good morning, Vonnie. Let's start with the healthcare sector and Hims & Hers. This is a bit of a two-sided story. So we've got earnings on one hand, and they were disappointing. If we were to take the outlook for 2026 is disappointing when it comes to Hims & Hers, which is trading 6.6 down in the pre-market today. That is if the company does not go through with its copycat weight loss drugs that it was sued for by Novo just a couple of weeks ago now. What we also know that it's subject to yet another probe by the SEC, which has asked it to preserve some documents. So investors not looking favorably when it comes to that. The stock is retreating, 6.6. Novo not doing very well in Europe as well for other reasons, also related to its own weight loss drugs. Moving on to the AI story, and SanDisk is one of those stocks that is benefiting quite a bit. Vonnie, we mentioned it's up about 190% for the year. That is a massive jump for the year of 2026. And that is on the back of this demand for data storage that has fueled a lot of recovery in this stock. And then finally, we move to Keysight, another AI story. On the back of earnings, the stock is jumping quite a bit this morning, up more than 17%, adding to those gains from earlier in the pre-trade session. And that is on the back of some of the work that this company is doing in the AI space, but also some favorable earnings news that investors are looking positively towards this morning. Vani, back to you.
All AI all the time these days. Abir, thank you so much. Abir Abu Omar there. And the team over at Goldman Sachs also keeping their eye on AI disruption concerns and market rotations. The team writing this: equity flows remain positive, but with weaker momentum. Rotation from US to non-US equities is evident. Joining us now is Sharon Bell, Senior European Equity Strategist at Goldman Sachs. I want to get to Europe in a moment. I do have to ask you first about the US session yesterday and yet another AI scare just pummeling markets. I mean, obviously the indices down only 1%, but you have the Financial Times now coining some of these stocks the Maleficent Five because they're just ruining everything for everybody.
Yeah, so it's amazing you say that, as you say, the market itself is not down very much. It's been incredibly flat in some ways this year, but it's all been going on below the surface. And what we see is that it's more capital-intensive companies that people are wanting, asset-heavy companies, companies like telecoms, utilities, that type of thing, rather than what we would consider asset-light companies that have done so well over the last 10, 15 years.
Would you trust this market? I mean, you said yourself in your writing that we are seeing weaker momentum and there's a lot of rotation going on. Would you let that rotation play out for a while and just watch the flows, watch what hedge funds, smart money is doing, watch what retail traders are doing, and then make your decision?
In terms of what we think for the overall market?
Yeah, I mean, if you had some money to put to work, some profit to put to work.
Yeah, look, we do actually think that the sort of volatility underneath the surface of the market isn't always a good sign. When you see this level of volatility in a relatively flat market, the sort of returns that you tend to get over the next year tend to be a little bit lower. So it's one of the signs of fragility, I guess you could say, in equities. That being said, not all signs are fragile out there. The economic data has generally been reasonably good. We are expecting the Fed to be cutting rates this year. So we've got interest rates coming down. We've got reasonably good economic data. A lot of sort of those types of macro risks, which perhaps at their peak a year ago, have faded slightly. So certainly not everything a negative, but I think the volatility below the surface and the extent of it and the persistence of it isn't a good sign.
It's interesting, you've also been watching the flows, obviously, and you say that hedge funds, for example, are still, you know, getting involved in the market, but leverage-wise, perhaps not upping their leverage.
Yeah, and look, I think there's been quite a lot of heavy positioning in the market. And mutual funds, for example, in the US have got some of the lowest cash balances. We're not looking for a bear market, and you don't typically get a very sharp correction or a bear market unless the economic data severely weakens or unless you get a big inflation spike, and neither of those do we expect. So we do see this as a rotation with below the surface between what people now regard as winners and losers in this new cycle.
We ran a story yesterday about strategists' projections for Europe and saying, look, last week's high might have been it. That might have been it for the year. What's the Goldman view?
Yeah, look, the market in Europe has done super well so far this year. And it's done super well without a lot of earnings upgrades, actually. So valuation has got higher. If we were sitting here a year ago, I would have been easily able to say, look, Europe is on a huge discount to the US. It's a great opportunity, and I think it has been a great opportunity. I think there is still a very large argument for diversifying. You see how brutal it's been in the US recently. I do think Europe has more of the stuff that people are looking for now, bigger weights in things like heavy industries, utilities, telecoms, even banks, some of the financials that are relatively protected from AI. So I think, yes, there are attractions to diversifying away from concentrated positions in certain companies in the US, but the European market, having been very cheap, is no longer as cheap as it was.
Yeah, exactly. And also, it's difficult to know what will go on with the euro, right? I mean, it's been strengthening versus the US dollar, but that'll make a difference as well.
That will make a difference, I agree. I mean, one of the reasons it's been difficult for European earnings really to progress over the last year is that a lot of European companies have dollar exposure. I mean, not just to the US, but globally, they have dollar exposure. I mean, at least a quarter of their sales are to the US. 55% are outside of Europe. So if the euro is strengthening and you're translating everything back into European currencies, then yes, your earnings don't look as good, and that has been a big drag. It's one of the reasons we think, yes, European earnings can grow this year, but we're only looking for 5% on a kind of aggregate top-down basis. And a lot of the reasons for that relatively pedestrian earnings growth is because of the currency headwind.
And yet there's so much good news out of Europe, really, on the side. I mean, look at the financials. You know, Deutsche Bank, BNP, SocGen, Barclays, UBS. They deliver their best performance basically in a decade.
Yeah, look, I think it is. Europe is advantage in this environment where people are shunning less capital-intensive stocks and going into more capital-intensive stocks, and, as you point out, into financials as too, value companies. I would still argue in Europe, banks, which trade on an average PE of about 10, half the PE of the S&P, less than half, do still represent very good value.
OK, there's a recommendation there from Sharon. Sharon, talk to us a little bit about where else you would go. So if Europe, just broadly speaking, is nice and richly valued, and maybe you should take your profits there, are there other countries that we should look to?
Look, I do think there's a kind of argument for diversifying. And when I say diversifying, I mean out of just having US exposure, dollar exposure, very concentrated positions in 5 or 6 companies. They may do well, but you are extremely concentrated. That is a big risk, as we've seen for this last year. Europe is a potential place to diversify too, and there are opportunities there in things like defence, financials, etc. But also in emerging markets. Emerging markets economics is in many cases improved. Inflation in lots of cases has been coming down. Growth has been improving. They tend to do well, emerging markets, when the dollar is coming down too. So all of that provides a good hedge. And again, their valuations have moved up, but they're still at a big discount to the US. So again, another area to move to.
Anyone you'd avoid? I'm thinking China, India.
I don't know. I mean, India is always a more expensive market, but you've got very good growth there. China, on the other hand, is a much less expensive market. People are underpositioned in a lot of China exposure, so I think that is also a reasonable medium-term opportunity.
Sharon, thank you so much. We have to leave it there, but that is Sharon Bell of Goldman Sachs. Now, to other top stories trending on the terminal this morning. Jane Street Group was sued for alleged insider trading by the administrator winding up the affairs of Terraform Labs. The $40 billion collapse of Terraform in 2022 roiled crypto markets and contributed to the fall of FTX. A Jane Street spokesperson called the suit desperate and, quote, a transparent attempt to extract money. Paramount has submitted a higher offer to buy Warner Brothers. According to sources, the new unspecified bid improves on the $30 a share all-cash proposal Paramount presented to Warner Brothers shareholders on December 8th. If the Warner Brothers board deems the new offer superior to the current agreement, Netflix will have 4 days to respond. And Bitcoin extending its decline. It's on course now for its steepest monthly drop since the crypto industry saw a slew of corporate collapses back in 2022. Bitcoin currently hovering around $63,000. Coming up, President Trump's new 10% global tariff is in effect. More on what the administration is doing to protect its trade agenda next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in London. President Trump's new 10% global tariffs are now in force in order to try to preserve the president's agenda. And sources say the White House is working on a formal order to increase those tariffs to 15%. Joining us now is Mika Solner of Bloomberg Government. Mika, how likely is it that we'll see this increase to 15%? Would it be, more efficient to try and do some investigations and put whatever number he chooses on the different countries and industries?
Yeah, hi, Vonnie. I think this is going to be very likely. I mean, the president was very clear on Friday. He held a surprise press conference at the White House, and this is a very big issue to him. As we all know, the president has long awaited the Supreme Court decision. He's made it very clear that he is going to continue on with his tariff and trade policy agenda as he wants to see fit. And he did not think the decision was correct in his view. And he, has threatened to increase tariffs to 15%. Like we said, I know the administration exploring ways to make that happen.
The other thing that the administration did was it looked for promises, not legally binding, just promises, non-binding, from tech executives that they will cover their data center costs. Now, that's all very well and good, but if I'm a voter, am I really going to hear that message and believe that I'm not going to have to pay more for my electricity because X, Y, and Z are building data centers?
Yeah, and this is a tricky issue for the administration, especially as it kind of pushes forward with its affordability agenda, and cost of living issues remain a top concern for voters. So the president and the people closest to him in the White House are really trying to ensure that these tech data centers do not drive up electricity costs as they try and promote lower costs, and that the White House is bringing prices down. That's part of their key pivotal argument that not only the White House is going to make this campaign season, but also Democratic opponents. So this is going to be a big issue if this does impact him politically.
Yeah, absolutely, particularly with his affordability push in recent months. So looking ahead then to the State of the Union, so that's just a few hours from now, really. Is his team frantically rewriting some of that speech after the SCOTUS decision?
Well, I think the SCOTUS decision is definitely going to play a big part, but the speech will also come amid the Department of Homeland Security shutdown, which I'm sure the president will address Democrats in the room who are there about the ongoing shutdown, about that. I know that the president is going to make a big pitch on affordability, his agenda there, but we're going to see tariffs play a huge role, no doubt. And the only thing the president has previewed so far is that he expects it to be long because he has a lot to talk about.
Right. I can only imagine, Mika, and some of those judges will be right in front of him, the ones that attend. Mika Solner of Bloomberg Government, thank you. Kaylee Lyons and Joe Matthew, by the way, will anchor a special State of the Union coverage live from Washington, D.C. Now, that starts at 8 p.m. Eastern Time. They'll bring you full coverage and analysis of President Trump's remarks, plus the response from Democrats. JP Morgan CEO Jamie Dimon says he's starting to see parallels to the time before the 2008 financial crisis. This is what he said about fierce competition in the financial industry and the rush to make loans at the bank's company update session on Monday.
Unfortunately, we did see this in 05, in 06, in 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
Joining us now is Bloomberg's Tom Metcalf. Tom, Jamie Dimon is usually in the position of trying to calm things down, right? But at the same time, he always manages to create these ruffles in markets. He did so with the cockroach comment and now this. What else did he say at this meeting?
Yeah, no, it's exactly right. He always generates great copy, right? And what he says is so closely watched, even when it's quite nuanced, as I think he was at that investor meeting. It sort of does sort of ripple on through markets, and certainly people, really peering through what he's been saying. So, his big points were, look, there are signs in some areas for only, a handful of places that maybe, there's a bit of over-exuberance, maybe there is some kind of, pain coming, whether it's in loan losses. He was talking just then about net interest income and how he's seeing a couple of firms, I think is what he said, doing funny things to try and boost that. But yeah, broadly speaking, in terms of the areas he's looking at, he's saying, might AI kind of create more kind of disruption, as I'm sure it will, going forward. And broadly speaking, echoing those previous comments he's made where, there are problems there in some areas. A lot of people taking this as maybe another ding at private credit, but I think it was maybe even broader than that, looking at the banks, other rivals. But as ever, whenever he speaks, people for good reason tend to listen and try and unpick it, whether they agree with him or not.
Well, he has been around for previous massive sell-offs, hasn't he? Now, there are mounting warnings as well, with another coming yesterday from Rini Capital's founder, Hamza Lemsuger. He told Bloomberg, quote, the immediate issue that we see is the increasing cost of capital for a lot of these companies, which will eventually lead to significant defaults, disruption and dislocation in credit markets. Significant defaults. I think also the figure of 10% unemployment was in there. I mean, where are they drawing these conclusions from?
Yeah, I mean, he was talking specifically about software companies, right? But, Arini, big player in this space, 17 billion or so. I mean, I think a few things to flag. One is they're not massively exposed to software companies, the companies that Hamza's talking about. But, of course, you'd expect them to have a pretty good perch. And, frankly, we've been seeing this in the markets, right? And one other thing there is really... he was saying this is maybe even healthy, right? You need to go through these cycles. You need this kind of rigor. You need, people to sort of benefit from, the risks, perhaps undue risks people have taken just to kind of balance out the market. So definitely another kind of warning signal, but again, a nuanced one. And I think very specific in Arini's case in relation to the software space.
Tom, thank you so much for your context. As always, that is Bloomberg's Tom Metcalf. Futures bouncing then after stocks closed down more than 1% in the last session after a report from Citrini Research outlining hypothetical AI-driven structural shifts which stoked fresh AI woes. Bloomberg spoke to the co-author of the report, Lotus CIO Alap Shah, on the market reaction.
It's not that surprising when you take a step back and consider kind of where the markets are in the U.S. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, who is max long, given that we're getting these warnings now day after day after day?
Yeah, I think maybe we're not quite as max long as we were, is the answer to that question. I mean, obviously, this report talking about this scenario where maybe as much as 5% of white-collar jobs are lost in the next 18 months. So that'd be quite a rapid shift in employment levels. We hear this a lot, and obviously the likes of Anthropic with Claude and the various new kind of features they add is really highlighting that fact that there was made just there that, the capabilities of AI are really accelerating, and that's starting to kind of force people to kind of look at, this real disruptive potential, and perhaps happening perhaps quicker than was previously expected.
Are you anticipating any bankruptcy announcements anytime soon?
Not anytime soon, like directly related to this issue, if I'm honest.
Yeah.
I think, it's something that every company's having to grapple with, but I think there is still maybe a little bit of a disconnect between these scenarios and what's actually playing out in the real world. Hypothetically, it could happen, but I think in terms of a timing issue and whether actually companies choose that path or choose an alternative path is up for debate. Obviously, employment law protection in the US is pretty limited, very different picture in, say, the UK or Europe. And I think governments and policymakers are perhaps going to be a bit more thoughtful about that, and the unions will probably get involved too. So maybe that would act as a bit of a break, at least in some sectors.
That is an excellent point. We haven't even made it there yet. Matt, thank you so much. We have to leave it there. That is Matt Bloxham of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day earnings and the State of the Union address on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Now look at what's ahead today. We have earnings continuing with Home Depot and Keurig reporting before the bell. Thus, ADP employment numbers at 8:15 Eastern. And the Conference Board consumer confidence data, that comes out at 10 a.m. And of course, President Trump gives his State of the Union speech at 9 p.m. Eastern. Kayleigh Lyons and Joe Matthew will anchor special State of the Union coverage live from Washington, D.C. That programming starts at 8 p.m. Eastern. A couple of before-the-bell movers now. We'll start with Hims and Hers, dropping on fears over the copycat drugs, mired in legal risks. There's a lot of uncertainty out there about the company's ability to sell those copycat drugs. Blue Owl down 4%. It's been cut to hold at Deutsche Bank. The price target there now exactly at $10 where it's trading this minute. And Keysight Technologies, well, it's soaring. Its outlook was raised on AI demand of almost 20%. Here's your macro picture for your trading day ahead. That's it for Bloomberg Brief.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are in Liberation Day 2.0.
Markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again.
Right now, it's a bit of wait and watch.
A high tariff scenario is where we're going to be.
I don't think it changes the overall narrative for the marketplace.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, President Trump preparing to address the nation.
Supreme Court's ruling on tariffs is deeply disappointing. They also are a, frankly, disgrace to our nation, those justices. I can destroy the country. I can do anything I want, but I can't charge $1.
The Supreme Court justices who ruled against the policy, striking it down, are they still invited to your State of the Union?
Honestly, I couldn't care less if they come.
Getting set to face down Supreme Court justices following their headline ruling, leaving the White House, threatening trade partners with a fresh round of tariffs. It's hitting a stock market already weighed down by another wave of AI anxiety. The hits keep on coming.
So trying to decipher what happened yesterday, good luck, right? How much is this concerns about any kind of uncertainty tied to a new tariff regime that maybe is 15%, but for now is just 10%? At the same time, there was a post by Citrini7, this research firm that everyone pinpointed as the reason why a lot of markets, in particular software stocks, were down even further. It was literal fiction talking about a 10% unemployment rate hypothetically in the next year or two, and yet it really ignited the fears of some sort of dystopian future on the heels of AI progress.
I enjoyed the mental exercise Sunday evening reading the note, didn't you?
I did too. I thought it was fantastic.
I thought it was fantastic. Didn't expect it to lead to the sector level disruption that we saw play out in Monday's session, but here we are. At the index level, not spooked at all. Still 2% away from all-time highs on the S&P 500. Notable where the calm is. 10-year bond yields near the lows of the year and just kind of anchored, sticky around that level at the moment.
To me, that's important. Before the tariff ruling, we were saying that if those IEEPA justifications for tariffs were overturned, what you would get is a sell-off in bonds, because ultimately that was the revenues that was going into supporting a lot of the bull case for bonds. That wasn't the case. And actually, these came out as the haven. Why? Because in this dystopian future that Citrini7 laid out, unemployment's going to spike and the Fed's going to have to respond. So there is going to be some sort of policy response. In that dystopian fiction world, I would have to imagine NVIDIA would do very well, which they did okay yesterday, but so did Micron, AMD, and Broadcom. They all fell yesterday. So did Microsoft and Google and Amazon and Meta. So try to put this all together, I don't know. I'm having trouble.
Earnings from NVIDIA, of course, later on this week. The main event later on this evening, the President of the United States addressed the nation. Trade very much the center of the focus, I think, for a lot of people in financial markets, affordability as well. If there is a legitimate criticism of the Supreme Court, why did it take so long? And if there is a legitimate criticism of the White House, why did you do it this way?
That's the question I've been asking. If you knew that this was going to be potentially on dubious legal footing, why didn't you do the investigations for 232s and 301s, which you're going to end up with in the middle to the end of this year from the very beginning? I think you can see the president is incredibly frustrated, whether it's his Truth Social post or the Friday press conference he gave with the Supreme Court justices, which, by the way, are going to be sitting front row today when he gives the State of the Union address tonight. And I imagine this president, he calls it a weave, is going to go off script at some moments and maybe potentially call out individuals like he did Friday evening after they came out with that IEPA ruling.
I think it's fair to say it's going to be box office a little bit later on this evening. Look out for that. Also tracking the financials this morning on the S&P, just had their worst day since last April. JP Morgan this morning firmer by 0.25%. Jamie Dimon of JP Morgan with this to say: I see a couple of people doing some dumb things. They're just doing dumb things to create net interest income.
So a couple of things here. First of all, Jamie Dimon is often chief risk officer and chief prognosticator about potential risks out there, and this sort of fits in line with that role. Second of all, the big banks have not been as involved in private credit, so it can be a more open ball field to really go after private credit, especially with some of the software concerns. And third, there are some dumb things, right? Let's be honest. The idea of chasing retail funds for long-term private illiquid loans has already been proven to have some potential pitfalls. Nonetheless, is it having the potential for 2008 types of consequences? Very few people seem to think that.
He also was talking about how there's always a surprise in the credit cycle, sort of what you're saying. There's someone always doing maybe something that could be viewed as dumb. He goes on to say it's really the surprise of what industry gets affected. Quote, this time around, it might be software because of AI. Well, obviously, we've been talking about that for weeks, so not exactly something that's breaking news or headline-worthy from Jamie Dimon.
Equity futures this morning doing better, up by 0.25% on the S&P 500. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth with markets seeking stabilization. Doreen Edelman of Lowenstein Sandler previewing President Trump's address tonight. And Jane Foley of Rabobank saying an early Lagarde exit is the best case for the euro. We begin this hour with stocks edging higher following the latest AI-driven sell-off. Cameron Dawson of New Edge Wealth writing the following: the more we see defensives rally and cyclicals stumble, the more challenging near-term new highs become. Cameron joins us now for more. Cam, good morning.
Good morning.
For much of this year, there's been some confusion. Are we starting to see a cyclical rotation? Is this cyclical offense? Now it just feels like AI defense and nothing else. Is that fair?
I think that is fair, because if you break the cyclical rotation into the fact that there are the AI infrastructure beneficiaries, certainly there is a cyclical favor to that. Look at the rally that we've seen in industrials. They're trading at 27 times forward. A name like Caterpillar trading at 32 times forward. That's typically something years. It's broken down to start the beginning of the year. It's still technically in an uptrend, but it's not looking so hot. So if we start seeing lower highs and lower lows in that ratio, equal weight discretionary versus staples, we think that it would cause us to become a bit more cautious about the U.S. consumer, and thus a bit more cautious about the U.S. economy, and thus a bit more cautious about U.S. risk assets.
Do you think the bond market is beginning to speak to the same theme?
I think that is the question. Is the 10-year near 4% because we're going to have a productivity miracle that brings inflation lower and allows the Fed to cut interest rates? Or is the 10-year at 4% because people are seeking safety? That's a really big distinction, and I think a very much open question.
How much self-fulfilling pain is going to be triggered by the fear that people have in markets? And I'm saying this because the wealth effect was one of the main reasons why consumer spending, had held up as much as it did. You start to see concerns that, for example, even with the software route, that this is going to cause the lending costs to go up, and that's going to crimp the industry, regardless of whether there actually is some sort of existential fear. I'm thinking of FDR. The only thing we have to fear is fear itself. I mean, how much is that actually a self-fulfilling prophecy right now?
I think that is the biggest question, and we raised that as part of our outlook of worrying about the fact that we've been in a feedback loop positive when we think about markets in the U.S. economy. Stronger markets have led to a stronger consumer, mostly in the high-end consumer, which of course is the top of the K, driving all of that spending. If that positive feedback loop turns into a negative feedback loop where weaker markets then cause people to pull back on spending, which cause further weakness in markets, then that could be the source of volatility. So I don't think that we can underestimate just how important the wealth effect has been allowing this overall economy to levitate. Just look at the fact that you see real personal consumption growing by about 1.5% since April and real personal income falling by 0.5%. The gap between that two, between income and wages, is effectively the fact that people are spending down savings as well as benefiting from the wealth effect.
Yesterday, Priya Misra of JP Morgan was on, and she was saying that one thing about the tariff ruling is it introduced more uncertainty and could potentially crimp hiring on the margins by small businesses, adding to this sort of weight on the overall economy. Do you see that as a likely outcome? Do you see this as part of the reason why people are foreseeing some weakness in the underlying economy?
I think that is already the outcome. If you look at the fact that U.S. corporations, large corporations, were able to expand margins last year in the face of tariffs, which we know were borne by U.S. corporations and consumers, the vast, vast majority of it was. The way we think that they did that is cutting back on labor costs. If your input costs are going up in one place, you will turn to another place in order to be able to defend your margins. So they have been pulling back on hiring, whether it's allowing people to shrink the workforce through attrition, but also turning to firing. So if we think about the consumers bearing the brunt of tariffs, they've actually had a double whammy. Not only have they seen prices go up, but they've also seen a weaker labor market, which brings us back to that point of falling real wage growth, because you get the pressure on wages coming lower because of the looser labor market, and you get the higher prices, and that's how we get to this state where you have seen real wage growth fall.
Sticking with tariffs for a moment, John mentioned how the 10-year yield is snoozy. There's nothing really going on. Will that change if we get refunds, $170 billion worth?
Yeah, let's bring us back to the third quarter of 2023. Treasury Secretary Yellen increases coupon issuance by a mere $9 billion. What does the long end of the curve do? It goes up by 150 basis points. So a really big question is, if you see refunds, if you see a lower revenue from the tariffs, does that put the treasuries back into a corner to have to increase coupon issuance? Now, Treasury Secretary Bessent knows this very well, and he wants to avoid increased coupon issuance at all costs. But we do know that this bond market probably won't welcome it if they are forced to do so.
Why is it not pricing it in now? Because this is likely a very serious scenario towards the end of the year.
Well, because Bessent has talked about wanting to keep issuance still towards the front of the curve. And the fact that you still have money market balances making new highs suggests that there still is demand for those bills at the front end of the curve. If we were to see interest rates at the front end start to fall further, I think it's important to watch those money market balances, because they've been the ones who have been hoovering up this bill issuance. If those start to trend lower simply because you're seeing less income coming from high short-term rates, that could be a sign that maybe the Treasury has run its course in being able to push issuance towards the front end.
That's certainly the source of comfort right now in the bond market. It's basically what everybody's writing about. The consensus view is that this will take, one, a long time to play out, and two, if you have to deliver that money back, it's all going to be at the front end. It's all going to be through bills.
And the truth is that Scott Bessent has come out and essentially said this. We have no idea. It could take years. It could take never. And essentially, we're going to do everything that we can. I mean, he's already shown himself to be chief trader in charge. So at a certain point, I think people put a lot of faith in Scott Bessent to maneuver this in a way that's not going to be disruptive.
Bob Michael of JP Morgan joining us in the next hour. No doubt we'll have that conversation with him. Cam's going to stick with us. Cameron Dawson there of New Edge Wealth. Equities doing OK, positive by 0.2 on the S&P 500 with an update on news worldwide with your Bloomberg brief. Here's Yahira Anand with more. Hey, Yahira.
Hi, John. Home Depot earnings just out. Shares are up 4% in the pre-market. The company reporting fourth quarter earnings that beat Wall Street estimates. Home Depot CFO saying, quote, everything is moving very slowly in the right direction, but we haven't seen a catalyst for a change in home improvement demand. Meanwhile, JP Morgan Chase CEO Jamie Dimon telling investors he's starting to see parallels to the era before the 2008 financial crisis, when a rush to make loans ended disastrously.
Unfortunately, we did see this in 05, in 06, in 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're winning in the markets business, something like that.
Diamond says he expects the credit cycle will eventually sour again, though he is not sure when. $1 million question. And the Northeast continuing to dig out of a powerful winter storm. The blizzard knocking out power to 600,000 homes and businesses, grounding more than 10,000 flights and disrupting intercity rail service. Central Park recording nearly 20 inches of snow. Forecasters say more snow may fall later this week. That's your Bloomberg Brief. John?
Nobody wants it. Yahara, thank you. Thanks for the update. We'll carry on tracking that story for you throughout this morning. Up next on the program, the AI scare trade making a comeback.
I thought there was going to be a small reaction. It was definitely larger than we expected. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. It spooks people when you do consider what is negative about this.
Up next on the program, we'll catch up with Anurag Rana of Bloomberg Intelligence, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Throughout today, tons of Fed speak. Brace yourself for that. Later on this morning, consumer confidence. That's interesting going into this at 9 p.m. Eastern Time. The president delivering the State of the Union. Some confusion, some frustration, I think, in the White House as to why the previous read is so low. Consumer confidence rock bottom when they believe this economy is so good.
Well, it comes down to affordability. And the fact is, we talk about inflation with the CPI index and the CPI report. Americans are thinking of price levels. Price levels haven't come down, and you see other areas where prices are going up. Electricity, beef, affordability is huge. That is the North Star for this administration ahead of the midterm elections. And on top of that, you're going to have this angst because basically we're back into tariff uncertainty. Remember everyone said we're peak tariff uncertainty?
Sure.
We're not. We're back to square one, where we have to even understand, is it even this morning 10 or 15%? By the way, it's 10.
And then once you get past the politics and the policy, we can get back to earnings tomorrow after the close. Nvidia on deck. Into that, equity futures positive by 0.2% on the S&P, on the Nasdaq up by a quarter. This from Steve Author, Federated. The first price target cut I've seen so far this year on the S&P 500, down from 7,800 to 7,500. Right, so range of reasons for this. Here's one. The asset-light business model is changing. That paradigm is being challenged. I heard the same thing from Savita Subramanian of Bank of America going into the weekend on multiples. PE should compress more, even in software. Asset intensity and leverage are worsening. That's a big focus for this year.
Evidently, the $650 billion of capex from 4 big hyperscalers resounded across Wall Street and didn't do so that well. And it seems like that has changed people's estimation for how much they can grow into their capital structure.
Let's keep it on tech. Under surveillance this morning, the AI scare trade making a comeback.
I thought there was going to be a small reaction. It was definitely larger than we expected. But I think it's not that surprising when you take a step back and consider kind of where the markets are in the U.S. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And so it, on the one hand, spooks people when you do consider what is negative about this.
So here's the latest this morning. Another wave of anxiety weighing on software stocks following a report predicting an AI-driven recession in just 2 years. Citrini Research writing, in every way AI was exceeding expectations and the market was AI. The only problem, the economy was not. Joining us now, Anurag Rana of Bloomberg Intelligence. Anurag, welcome to the program, sir. It's good to see you as always. I enjoyed the piece from Citrini Research. What if our AI bullishness continues to be right, and what if that's actually bearish? I was surprised by the actual influence it had on stock prices through yesterday. What does that tell you about where we are?
Well, it basically tells me that there is nothing that can change the narrative right now, just because there is so much fear in the market and people don't know how to act. Especially because the fear is not so much about what's happening to earnings right now or the next 12 months, but it's the terminal value of a company. And if you say a particular company is not going to be in existence 5 years from now, it's very difficult to value or price that particular security. And that's what we are facing at this point.
Well, Anurag, let's talk about multiple pressure then. Last year was an earnings-driven equity market, an earnings-driven rally. Do we face the prospect of a multiple-driven sell-off in 26?
Yeah, I mean, this is the vicious cycle, because now what is going to happen is, because of this sell-off in the first 2 months, people are going to stop hiring at that same rate they were last year, which means further compression on sales growth and earnings growth for all the vendors, not just software vendors, but anything that's providing any kind of intellectual capital to these Fortune 2000 companies. So that's going to keep on going down. And people will basically, reflect that as say that this narrative is because of AI and not so much because of the economic conditions.
Anurag Rana of Bloomberg Intelligence. Anurag, thank you, sir, for jumping on following that report on Sunday evening, which whipped this equity market around big time.
If you take a look at some of the stocks that were actually affected most significantly yesterday, they were names that were name-checked in that report. So if people are saying, wait, it wasn't really that work of fiction, well, Capital One was down almost 9%, American Express down more than 7%, DoorDash, all of the ones that they see as being disintermediated. So clearly there's something going on here, and Anthropic just lobbed a grenade in there with IBM, which also was plunging. So definitely a clear and jittery feeling yesterday in markets.
Wasn't it odd that the responses to that research, at least in my experience online, seem to be more vicious than the responses to anything I've heard from anyone else? Anthropic, or the self-interest that I've seen from, say, the Microsoft AI boss in that interview to the Financial Times over the last week. Why was the pushback so much vicious to this piece, which is a thought piece about the future, to some of the forecasts coming out of the companies at the epicenter of all of this?
Because it hit a nerve. Because it hit a deep nerve that people have not wanted to articulate. And there is this existential angst about what happens if this doesn't go well, and if success for AI does not mean success for human capital, for human jobs. And that is something that thought exercise ignited, and is very hard to argue against.
Are you feeling it? Did it hit a nerve?
Well, I actually read it.
I think so.
The truth is, well, we were talking about it yesterday. It hit a nerve, but it actually made me on some levels more optimistic, because it made me less optimistic when nobody was talking about this and everyone was talking about all of the incredible gains. Even Chris Waller was addressing this.
Sure.
That we're going to get a pace of job destruction that will absolutely destroy any kind of job creation in the near term. Look, we have to deal with that, period.
The heads are no longer in the sand.
Correct.
I think that's good news. Cam Dawson still with us around the table from New Edge Wealth. Cam, I asked that question to Anurag. I'd love your response to it. We had an earnings-driven rally through last year. Do we face the prospect of a multiple-driven correction this year?
I think that is exactly what's playing out, because we're actually still seeing earnings estimates go up for the S&P 500. A quick caveat, NASDAQ earnings estimates on a top-down basis have started to get cut. So not on a bottom-up basis. People aren't cutting their estimates for individual companies, but on a top-down basis, people are growing less optimistic about NASDAQ earnings. That's the first time that has happened without an entire cut to the broad earnings picture, like during Liberation Day, in a really long time. So if we think about it, we've spent the last 10 years effectively arguing that U.S. companies should trade at 30, 40, 50% premiums to their international peers because they are more asset light, they have more recurring revenue, revenue. They have higher return on invested capital. All of these questions that we're seeing jostle markets around are effectively challenging that notion about asset-light businesses, about higher ROIC. And this is the market saying that we do not think your earnings power today should be infinitely capitalized into the future at its current run rate.
So that sounds like a paradigm shift, regime change. Is it fair to call it that?
Well, look, the biggest challenge is that regime change looks a lot like a counter-trend rally at the start. And the last time that we saw a massive regime change in markets was in the early 2000s, where you saw international markets best U.S. markets by a significant degree. You saw growth underperform value by over 100%. So the big question is this the start of something like that? We think the key differentiator is that if you go back to that 2000 to 2006 period, it also was about earnings. Value earnings outperformed growth earnings during that time. And so for this to be something that is a true regime change, it has to eventually show up in the earnings.
Let's talk doomsday. I really did enjoy this top piece. It was a really fun one. And the pushback was significant. And it was really interesting to see what some of the pushback was. The biggest criticism was you think that the unemployment rate could get to 10.1% and we don't get some sort of bazooka response on the policy side. It's something, John, you've talked about before. We've discussed here. How much is that the ultimate savior? Is the Fed the ultimate circuit breaker? And they could drop rates to 2% and they could solve any kind of 10% unemployment rates and they could raise taxes on some of these hyperscalers and all of a sudden, voila, you have a better economy.
I do wonder how much the Fed has any ability to be able to stave the bleeding if this doomsday scenario works. Do Fed rate cuts actually change this picture? It would likely need to come with some kind of fiscal policy response. But typically we see the fiscal policy response once you see the bad news happening or some kind of cataclysmic event starting to happen. So the prospect of maybe getting to a 10% unemployment rate in a few years is likely not enough to get Congress to move to be able to justify a fiscal policy response to prevent it.
What do you think the Fed's role is in all of this right now? You mentioned Governor Waller. I have to say, tremendous respect for Governor Waller. Sounded almost confused in the speech just yesterday. I was reading through it about where we are at the moment and what's their role. What is their role?
It's a really good question, and we think that the role has been dampened ever since the pursuit of pushing down using QE to push down long-term yields and term out debt. I think you can argue that this cycle, the economy has been less sensitive to short-term interest rates than it was in prior cycles because of the pushing down of long-term interest rates. So a really big question of what do Fed rate cuts actually do in this environment? What does the Fed's balance sheet do to prevent what could be major disruption from a technology standpoint? I think it remains a really open question. Now, they'll do what they can. So if you were to see unemployment go up in a significant way, they'll cut rates, and they'll likely cut rates to zero, and they'll argue that they should be well below neutral, and neutral is certainly effectively close to where we are today. So we'd get rate cuts, but I don't know how much it would help.
Cameron Dawson, good to see you. Cam, thank you. Cameron Dawson there of New Edge Wealth. Tons of Fed speak later on today, and I'm sure many of them are going to give a nod to this big theme that's emerging.
And frankly, they're going to give a nod to it with as much confusion as Chris Waller had. He talked about the thing with AI is it's coming at us so fast that it's easy to start seeing jobs that may go away before you see the new jobs that are going to be created. He went on to say, this could just be a different period than I've ever seen in my history, which doesn't really lead us with much clarity.
Crazy. This one's moving quickly. Coming up on the program, Doreen Edelman of Lowenstein Sandler previewing the president's address tonight. Plus, Yahira has your morning movers. Home Depot rising following an earnings beat. That stock is up by 3%.
in case you missed it on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Whipsawed in the previous two sessions. Equity futures this morning positive by 0.2% on the Nasdaq, higher by 0.25% on Friday. The best day in 2 weeks. Yesterday, the worst day in about 11 days. On Friday, led by discretionary. Yesterday, led by staples. Difficult to keep up. That risk aversion driving a bit into bonds. 2s, 10s, 30s looking like this. 10s near the lows of the year at 4.03%. Yields up by not even a basis point this morning. We've not seen a close with a 3 handle since November. But we're getting close.
And it seems to be flirting with that direction as people look to the Fed with some sort of policy response in the wake of some of the employment carnage that some people are mapping out in fiction pieces on Twitter. There is this question about what the response mechanism would be, given the fact that Fed officials themselves seem confused.
All the Fed speak, Goolsbee, Collins, Bostic, Waller, Cook, Barkin, all coming up throughout today. The front end of the curve anchored around 340 to 350 at the moment, 345 as I speak. Yields higher by a single basis point, the front end of the curve. That's stocks and bonds. Let's get you some single names, some morning movers. Here's Yahara with more. Hey, Yahara.
Hi, John. We start with Home Depot. Shares are rising 3% in the pre-market after a solid beat by the home improvement chain as homeowners continue to spend, taking on small projects despite all the issues they've seen in the housing market. But management says that the big remodel is still on hold, going for 3 years now. As for tariffs, the CFO telling us nothing really concrete other than they're analyzing the impact after the Supreme Court, of course, struck down President Trump's tariffs and he issued new ones. They did say that price increases will come in the first half, though those were already planned. Meanwhile, we are seeing shares of Hims and Hers down 6.25% in the pre-market, despite the company giving a forecast in line with expectations. But that outlook relies heavily on the company continuing to sell copycat versions of blockbuster weight loss drugs, which, of course, a business that is now facing lawsuits from Novo Nordisk, plus the regulatory overhang, with the company saying just yesterday that the SEC opened a new investigation. All that hanging over a stock which has lost half its value this year. And the latest AI disruption scare only reinforcing the rotation trade as investors move away from software and cybersecurity names, as we saw yesterday, and move into names like SanDisk, which of course have the infrastructure that power AI. SanDisk, of course, makes memory products. Those products are in shortage, so shares are up more than 140% this year, up another 3% this morning. John.
Yahara, thank you. Thanks for the update. More from Yahara later on this hour. On a radar this morning, a fictional report from Citrini Research setting another sell-off in motion yesterday. The Post warning of possible AI risk to parts of the global economy and potential bankruptcies in the software sector. Elsewhere, the JP Morgan boss, the CEO, Jamie Dimon, saying he's starting to see parallels to the era before the 2008 financial crisis.
The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. You know, they're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
Diamond expressing doubt that AI concerns would have a major impact on credit losses and sees his bank as a winner in the AI race. And finally, President Trump's new 10% global tariffs are now in effect as part of the effort to preserve the administration's trade agenda. The White House is working on a formal order to increase the global tariff rate to 15%.
This is the interesting thing. President Trump caused waves in markets yesterday, in part because of the 15% proclamation on Truth Social. The fact that it came out as 10%, really interesting. Also interesting to watch what the response is from some of the companies that are trying to get it back in the wake of this decision.
So basically, FedEx, another one that lined up. You have to be able to go to the lower court of international trade, sue the government basically to even be in line to get part of that $170 billion of tariffs that were paid. That is going to be the big question mark. Do the refunds get paid and who gets them? And then when it comes to actually the trade deals, like the European Union basically saying pause because what happened with IEEPA, that is another whole basically round of negotiations this administration is dealing with. Jamieson Greer, Secretary Bessent on the phone with their counterparts saying, please, these deals need to stay as they have this bridge, as they call it, of 122, 10% now, maybe 15% later, depending on if they actually sign that executive order, till they actually do real investigations of 232s and 301s, which have the legal durability to withstand.
Well, let's just sit on the people involved. Would any of this have happened if Ambassador Lighthizer was still running the show?
It's a good question. I would say potentially the president maybe could have been talked into doing the investigations right at the start. But I think they clearly thought that if we make this too big to fail, the Supreme Court has to be on our side, which is, in the end, the gamble they went for. The only reason why I caution on whether or not it happened or not is because the president will make a decision, and there's other voices in the room. Remember, Trump won. I don't know if it's happening as much.
गाइस ये नेचुरल गैस देखो रेंज के बाहर निकल गया है, गुड साइन. ठीक है, नीचे का ये सपोर्ट था, ये ब्रेक हो चुका है. ऊपर पॉइंट ऑफ इंटरेस्ट था, नाउ दिस एक्ट लाइक एज अ रेजिस्टेंस. तो अब इसमें हम सेलिंग ही प्लान करेंगे. ऑलरेडी कोई सेलिंग में है तो ट्रेल करना, पुल बैक आ सकता है. बाइंग अभी तक इसमें बना नहीं है. मॉर्निंग से देखोगे सपोर्ट पे जरूर था, बाइंग नहीं किया बिकॉज रेंज बनी हुई थी. सेम सिनेरियो जो पहले एक बार हो चुका है, एक बार याद होगा रिसेंटली इसी लेवल के आसपास, मैंने पहले ही बताया था 273 के आसपास सेम सिनेरियो बना था. सपोर्ट के ऊपर ही थोड़ा सा एक पॉइंट ऑफ इंटरेस्ट बन गया, तो ये रेंज के बाहर निकल गया है. नाउ वी आर गोइंग टू सेल इट व्हेन इट हिट अपर लेवल अगेन. थोड़ा सा पुल बैक देगा तो सेल करेंगे. रेंज के बाहर निकल गया, सो नाउ इट इज नॉट अ रेंज बाउंड प्राइस एक्शन. सपोर्ट है, ऊपर एक पॉइंट ऑफ इंटरेस्ट का रेजिस्टेंस, नीचे सपोर्ट ब्रेक हो गया. सपोर्ट अब सीधा हमारा ये रहेगा 250 254. भाई क्रूड ऑयल को देखोगे स्टिल बेरिस ही है, बेरिस इन द सेंस ऑफ इंट्राडे में साइडवेज टू बेरिस, जब तक पॉइंट ऑफ इंटरेस्ट के ऊपर निकलता नहीं है। नीचे सपोर्ट जोन है, लेट्स सी आता है तो। दो सपोर्ट जोन बने हैं, दोनों पे नहीं आया अभी तक। 3 दिनों से देखोगे इसी रेंज के अंदर ही घूमे जा रहा है प्राइस। 19 को भी यही था, उसके बाद 20 को भी यही था, 23 को भी यही था, अभी 24 को भी यही है। 4 दिन हो गए लेवल पे कंसोलिडेशन ही कर रहा है। नेचुरल गैस में पुल बैक आता है तो सेलिंग बनेगी, आने देते हैं ऊपर थोड़ा सा पहले। 71 से 270, 271 से 272 के बीच में कहीं। सपोर्ट ब्रेक हो चुका है, ध्यान रखना इसका, इसकी अब कोई वैल्यू नहीं है। और ये ब्रेक इस तरह से हुआ है कि यहाँ पर इसको एज अ रीटेस्ट भी ट्रेड नहीं कर सकते, पॉइंट ऑफ इंटरेस्ट ही एज अ रेजिस्टेंस होगा।
The UK stands apart as a place to do business.
Start with details on the historic blizzard that pounded the East Coast. Bloomberg meteorologist Craig Allen's been following this storm every step of the way and is here with us now. So, Craig, what kind of accumulations are we looking at from this one?
Yeah, Nathan, this one does go down in the history books with historic numbers, 19.7 inches of snow for New York City. Now, that's the 9th largest storm on record. Records for New York City go back to 1869. Not too much down towards Washington, D.C., but a lot more in the other direction along the I-95 corridor on up towards Boston. 31.8 inches officially at Boston. And before you get to Boston along 95, you hit Providence, 38 inches. That is the highest snowfall total ever recorded in the state of Rhode Island. And 80 to 85 mile per hour winds were also recorded along the coast. There are still about 250,000 people without power in portions of Massachusetts, that is, southern sections of Rhode Island, and also down the Jersey Shore. Wasn't too bad down there once you got inland. But right along the shore, there's anywhere from about 15 to 25 inches with power outages continuing down across southern New Jersey.
Okay, so with 1 to 3 feet of snow in parts of the Northeast, are we going to get any break in the temperature so we can dig out of this?
It's going to be cold today. No precipitation today. It will be cold. Temperatures will be within a few degrees either side of freezing. That is running about 10 to maybe even 15 degrees below average. Milder temperatures are expected for the latter portion of this week. However, it comes at a little bit of a cost. There will be additional systems coming through. Nothing as strong as what we just had, but these weak systems still have the opportunity to produce anywhere from a coating to maybe about an inch or two of kind of a wet snow in some of these same areas. That one of them tonight into tomorrow morning, and the other one for Thursday into Friday morning.
All right, Bloomberg meteorologist Craig Allen. Thank you, Craig. And we'll be checking in with you throughout the morning. As the dig out continues in the Northeast, things are not back to normal just yet. Bloomberg's John Tucker joins us with the very latest. John, good morning.
Good morning, Karen. Yeah, it's going to be days before we dig out from the blizzard of 26. After 3 canceled flights, this man spoke for many.
How is my winter going in general? It's a little bit too long if you ask me. I'm wondering if they'll let me become the new groundhog and I can decide if winter stays a little bit longer, because this has been a bit much.
More than 11,000 flights have been grounded through today. More than 500,000 homes and businesses without power as of late yesterday. New Jersey Transit says North Jersey Coastline and Raritan Valley Line service will remain suspended. Northeast Corridor trains, they're operating on a President's Day schedule with some adjustments. On the streets of Manhattan, sidewalks are treacherous in spots where snow has now turned to sheets of ice. And New York City schools will be open for in-person instruction this morning. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Turning to politics now, we have a major story on that front coming up tonight as President Trump delivers his State of the Union address to a joint session of Congress. Affordability and tariffs are expected to be 2 key themes. Bloomberg's Amy Morris has a preview from Washington.
President Trump's second year in office is struggling with erratic messaging, policy reversals, and sinking poll numbers. Former Republican Congressman Patrick McHenry of North Carolina, now a Bloomberg News contributor, tells Bloomberg Daybreak there's plenty for the president to talk about.
So the question of tariffs and how the president's going to respond to speak to this massive buildup of troops and air power in the Middle East, and doing so in the midst of nearly 50 million people socked in a blizzard.
And while the president's economic agenda was thrown into chaos after the Supreme Court struck down his preferred method of imposing global tariffs, he's expected to continue to promote levies in the State of the Union. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thank you. President Trump has invited both the men's and women's gold medal hockey teams to attend the State of the Union address. The women's squad has declined the invite, while many of the men's teams say they plan to attend, and you can catch extended coverage of the State of the Union tonight with a special edition of Balance of Power. Coverage begins at 8 p.m. Wall Street time with Joe Matthew and Kaylee Lines on Bloomberg Radio and Television.
And Karen, the primetime speech comes as President Trump begins to rebuild his trade agenda with a new 10% global tariff now in effect. He doesn't plan to stop there, as we hear from Bloomberg's Rosalind Matheson.
We do know from an administration official telling Bloomberg that they're looking to see how they can raise that quickly to 15%, the level that Donald Trump threatened. And of course, that's potentially bad news for some key US allies like Australia and the UK, which stand to be worse off than the parameters of the trade deals that they've been agreeing with the US.
And in response to the 10% levy, Bloomberg's Roz Matheson says the European Union's halted ratification of its U.S. trade deal. The White House is also launching investigations into imported batteries, cast iron, electrical and telecom equipment, plastics and industrial chemicals. Those probes could lead to new tariffs under Section 232 of the Trade Act.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The big NBA game was in Detroit. San Antonio beat the Pistons 114-103. The Spurs have won 9 in a row. College hoops of the ACC. North Carolina held off Louisville 77-74. Seth Trimble scored 30. In the Big 12, Kansas beat Houston 69-56. Third straight loss for the Cougars, who were ranked number 2 in the country. Duke, after the big win over Michigan, is now ranked number 1. Detroit Tigers ace Tarek Skubal says he will pitch for the USA in the World Baseball Classic, but only one game. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
As a place to do business, the UK
सिल्वर भी देखोगे, सिल्वर भी एमसीएक्स में तो गिर रहा है, काफी अच्छा गिर गया। फॉरेक्स में इतना फॉल नहीं है, फॉरेक्स ऑलमोस्ट स्टडी बना हुआ है, व्हिच इज स्ट्रेंज। सिल्वर का चार्ट देखोगे 15 में टाइम फ्रेम पे कंप्लीट कंसोलिडेशन है मॉर्निंग से। इवन इंडियन मार्केट ओपनिंग होने के बाद थोड़ा सा बुलिश साइड पर ही था सिल्वर। फॉरेक्स चार्ट मॉर्निंग पे ओपन हुआ 9 पीएम पे, वहां से थोड़ा बहुत सेल ऑफ, फिर कंटिन्यू अपसाइड देन साइडवेज। एमसीएक्स अलग ही सो रहा है, एमसीएक्स अभी चेकआउट करोगे तो ये अलग ही चल रहा है। एक्सपायरी है ऑप्शन की, मॉर्निंग पे ओपन हुआ था, ओपन होने के बाद सेलिंग यहाँ भी आई, रिकवर हुआ बट अगेन सेल ऑफ में ही है। ऑलमोस्ट डे हाई से देखोगे तो 2-2.5% डाउन है। वैसे ओवरऑल 1.71, फॉरेक्स नहीं गिर रहा है, अलग ही है, फॉरेक्स इज स्टिल होल्डिंग। सेम फॉर गोल्ड, गैप डाउन ओपन हुआ, साइडवेज चला गया। फॉरेक्स थोड़ा अलग है, 1 आवर टाइम फ्रेम पे, वैसे तो अभी साइडवेज है मॉर्निंग से। 1 आवर टाइम फ्रेम पे रेजिस्टेंस पे था 5250 280 के बीच में रेजिस्टेंस जोन। थोड़ा नीचे आता है तो बढ़िया रहेगा, 5000 मॉर्निंग पे बताया था, 5000 30 to 40 is a support expected in gold in 1 hour time frame। और अगर ये ब्रेकआउट कर गया 5300 के ऊपर सक्सेसफुली 1 आवर टाइम फ्रेम पे, देन सीधा 5450 that range act like a resistance। ये फॉल भी देखोगे, नेक्स्ट मंथ का जो फ्यूचर का चार्ट है, करंट मंथ की एक्सपायरी है, ऑलरेडी थोड़ा सा कम डाउन है, 1.58% करंटली। नेक्स्ट मंथ का फ्यूचर मोर देन 2% डाउन हो गया। वहाँ वॉल्यूम थोड़ा ज़्यादा है, ध्यान रखना, यहाँ वॉल्यूम कम है इस करंट मंथ के फ्यूचर में। आज एक्सपायरी है, लास्ट डे है, ऑप्शन में नेक्स्ट मंथ का ही ट्रेड हो रहा है, नेचुरल गैस। बट फ्यूचर में दिस इज द लास्ट मंथ, करंट मंथ एक्सपायरी डे, इसलिए वॉल्यूम बहुत कम है। Israel has reportedly conveyed through intermediaries that it would respond. Israel has reportedly conveyed through intermediary that it would respond with force against Lebanon, including strike on civil and infrastructure such as Beirut airport if Hezbollah enter a potential US-Iran conflict.
Give us the latest on what's happening with the situation in Iran. Do you support taking military action against Iran?
Well, I think you saw the president make the statement again today. Iran should make a deal. Iran has an opportunity to make a deal. That's the outcome the president would prefer. Our job is to provide options, and we will have options for the president should Iran decide not to take a deal.
Do you think strikes are on the table still?
Everything is on the table. It's the president's decision. We're here to help ensure that a deal is made. And I think Iran would be wise to make a good deal.
What would be the purpose? Give us the latest on what's
not that significant. And of course, the administration has indicated that they're probably going to slow walk these refunds. This is not going to be, even if the courts say that this should be more automatic, the process is going to be more clunky.
What did the president say? It could be in court for 5 years.
Yeah. Oh, he's saying it could be in court forever. Brett Kavanaugh says it's going to be a mess in his dissent.
It sounded messy already.
It is messy. I mean, when you hear Doreen talk about what she's describing to clients, it sounds like an absolute disaster.
Libby, good to see you, as always. Thank you. Thank you very much. Libby Cantrell there of PIMCO. The takeaway also from one of the Conservative justices, Gorsuch, making the point that if we end up essentially with a socialist president, you'll be happy.
Yep.
That this exists.
This was
my words, not his, but ultimately that's what he's alluding to.
Major questions doctrine. How much power does the executive branch really does have?
Coming up on the programme, Dan Stuyven of Goldman Sachs raising his crude forecast. That conversation just around the corner.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Last week, the best weekly gain on the S&P since early January. Friday, a decent day of gains. Monday, we took it all back. Equity futures this morning positive by 0.1% on the Nasdaq, up by 1/3. Some big movers out there, including AMD. So let's get straight to it with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. It's news that broke not that long ago. It is a huge deal between AMD and Meta. Meta is going to be building a 6-gigawatt data center, and they're going to be doing that using all AMD processors. Lisa Su, the CEO of AMD, saying that it is a deal worth multi-billions worth of dollars. And then along with that, Meta is also getting warrants to buy shares of AMD. So a lot to like if you're an AMD shareholder. Shares up 11% in the pre-market. Meta dipped slightly, about 0.75%. We also, in the 6 a.m. hour, had earnings out from Home Depot and SanDisk shares also moving higher this morning. Those are up about 3.5%. Finally, we wrap it up this morning with Planet Fitness. Those also had earnings out. Profit was better than expected. Profit missed estimates, but they did have better than expected otherwise sales. So it's the profit that's an issue. They're spending more on capital expenditures. They're opening up more branches. So that ate into some of those results. Shares down 5% in the pre-market, John.
Hey, Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, another blockbuster AI deal. Danny was just talking about it. Meta agreeing to spend billions of dollars on AMD data center gear, including chips and computers, over the next 5 years. Meta will also receive warrants to buy 160 million AMD shares. Elsewhere, IBM suffering its biggest one-day decline in more than 25 years. Shares sinking after Anthropic's latest tool can help modernize a data programming language that runs on IBM computers. IBM was down hard at Monday's close by 13%. And finally, FedEx is suing the US government. The company is demanding a full refund for the tariffs it paid, which were deemed illegal by the Supreme Court just last week. FedEx saying it, quote, suffered injury by being forced to pay a substantial amount of duties on imported goods.
So this is the first of the big companies, and it's not going to be the last. We already have seen similar types of filings from companies including Costco, Revlon, Bumblebee, Kawasaki Motors. A real question here about what their remedy is going to be. Let's say they get some money back. Does it go to corporate profits, or does it go back to lowering prices for consumers, and how will that play politically? So still a lot of questions. Nonetheless, the lineup is beginning, the fight is beginning, and let's see how it shakes out.
I think we know how some of it might play politically. I'm pretty sure if corporations don't lower their prices, this administration is going to come out, use the bully pulpit. I think the Treasury Secretary called it corporate welfare. So this is going to get messy, not just in the refund process, as all this now moves to the Court of International Trade in New York to figure out the timeline for all this, but also the politics of it and the rhetoric surrounding it.
They don't want to be in the political firing line, but ultimately they have a duty to shareholders to pursue the refund. Absolutely. And to do this publicly as well. You've got to do it.
Ultimately, the question is just whether someone might find it feasible to sell the claims to somebody else at a discount, get the cash, have some certainty in their business plan, and then move forward. Or do they want to make a stand and say, look, we are going after this without a clear sense of exactly where that money is going and without a clear sense of what the future tariff rate is going to be. Look, this is going to be so messy. And how they position themselves and what the messaging is from the corporations will be interesting as well.
That's the latest from FedEx and those refunds, which could be very messy. Let's turn to crude oil, holding near a 7-month high as investors weigh potential US-Iran nuclear deal, with talks set to resume on Thursday. Dan Stroiven of Goldman Sachs writing, although we assume no Iran-related disruption to supply and maintain our 26 surplus, we raise our Brent WTI forecast for the fourth quarter of this year by $6. Dan joins us now for more. Dan, welcome to the programme. We've seen issues with Iran before, and we've got over them very quickly. Why is this different?
Yeah, so far, and it's not all that different from what we have seen over the last few years, where actual Iran crude production remains unaffected, where production in the broader region in the Middle East remains unaffected, but where the market, and I think appropriately so, is putting some weight on disruption scenarios and is pricing in a geopolitical risk premium that we now estimate at around $6 per barrel. The two reasons we look for a decline in Brent from around 71 now to 60 by the end of this year, in our view, the bottom of the cycle is, one, the assumption that easing in geopolitical tensions gradually reduce this risk premium. And second, because we still look for a global surplus, we expect the fair value for oil prices to moderate by about $5 to $60 by the end of this year if we see builds in OECD oil stocks, which, to be clear, we haven't really seen over the last year. We have been in a large surplus, but so far the builds have been happening outside of the OECD pricing centers.
Dan, can we just sit on that, just how well supplied the oil market is right now?
Yeah, so we estimate that in 2025, the oil market was in a surplus that was sizable in the tune of 1.7 million barrels per day. That is just under 2% of the global market. For this year, we're looking for a slightly larger surplus, 2.3 million barrels per day. Why? The first reason is we think that we started 2026 with excess supply because in 2025, we had supply outpacing demand. And second, in 2026, we look for strong supply growth in the tune of 1.9 million barrels are stuck from Iran and Russia. They're not competing with commercial barrels in pricing centers and also in SPR facilities in emerging markets.
Dan, today we have Marco Rubio, the Secretary of State, briefing House and Senate leaders at the White House at 3 p.m. There's a lot of obvious people thinking that this is about how Iran is looming large right now, especially ahead of the State of the Union. So what if we did see an actual strike and Iran responded with the closure of the Strait of Hormuz? Can you give us that scenario in terms of what it means for oil prices?
Yes, so I think the critical question for oil prices fundamentally is, do we see disruptions to production and to exports in the region? A 1 million barrels per day sustained supply disruption boosts the fair value of oil prices by about $8. If we were to see a large and full closure of the Strait of Hormuz, prices could be significantly higher. We estimate that prices may rise, to $100 per barrel if you saw a short full closure and then followed by a partial, more sustained closure. But because the economic costs from the rise in energy prices, both crude and global gas prices, would be so large, rational economic reasoning suggests that this is not in the interest of the U.S., China, the Gulf states, nor Iran. And so that's why we characterize this as an unlikely tail scenario. But risk managers, traders, they have to think about the probability of that scenario, even if it's an unlikely tail scenario, and have to continuously reassess the probability of that tail as a function of geopolitical headlines.
Right. There's also irrational actors in this. We have been in a scenario in the past where proxies of Iran have hit, say, Saudi Arabian energy facilities. What kind of impact on prices would that mean?
Yes, I would refer to our model estimate that a sustained 1 year, 1 million barrels per day supply disruptions boosts the fair value of oil prices by about $8 because of lower inventories. Now, in practice, I think prices will probably rise more in the short term as the market puts a greater weight on further escalation scenarios. Of course, the key question is how quickly can production come back? And when we go back to what happened in 2019 in Abequake, production came back remarkably quickly. Prices jumped, and a few days later, they had normalized.
Yeah, it is notable to me that the oil majors are not tracking oil prices the way that you might expect or the way that they have in the past. In fact, you've seen oil majors, the shares, trade at near record highs or at record highs. Jason Thomas of Carlyle just put out a note talking about how technology, new economy shares are down 5 to 10%, and old economy shares, including energy, are up 30 to 50% since October of last year. How far can these shares keep rallying, independent of oil prices that have kind of remained in this range?
Yeah, so I think there are two reasons why energy equities have done well. And to be clear, I cover the commodity, but I can summarize the research from my equity research colleagues. One, equity markets are more forward-looking than commodity markets. And while we are somewhat below the forwards for crude oil prices in 26, we are above the forwards from 2028, or long-term Brent forecast is 75, because we see this 2025 supply wave as a one-off, and we think oil demand grows to 2040. So I think equities are increasingly pricing this more robust long-term oil demand outlook and this slowing in supply. Second, I think the starting point for valuations of many of the old economy equities, including energy equities, was quite low. And I think this rotation from soft assets, including software stocks, sort of the new economy stocks, to sort of the hard assets, including energy, real estate, commodities, is a second driver of this outperformance of energy equities. And third, these companies have been well ran costs have been coming down. Technological progress is good, and so for a given oil price, they can generate higher margins than in the past when costs were higher.
Please forgive me. Citrini has made me a bit existential. I'm going to blame them for this next question. But let's just say that you do have AI gains that are as great as people expect. You do get this investment in the old economy. How far can that go if it comes at the expense of human capital, right? How far can it go if it comes at the expense of global economic growth, at least tied to the consumer?
Yeah. Obviously, highly uncertain how AI will exactly develop, GDP, labor income, capital income. But where economists have argued that in the past, productivity shocks, positive productivity shocks have been a positive for GDP and ultimately employment, even if in the short term you see some job losses, because ultimately productivity gains mean more income, more spending, and potentially new occupations, new spending needs. So that's also our base case for how AI plays out. Our view that AI will boost productivity and GDP in the US and globally is one of the reasons why we have above consensus long-term GDP forecasts and why we expect oil demand to grow through 2040. So that's the base case, but we'll have to watch the data. This time may be different, and our economists are laser focused on tracking the impact of AI disruption on labor markets. And so far, the hit to monthly employment in sort of the AI exposed sector seems pretty modest at around 5 to 10K per month in the US economy for now.
Dan, good to see you. Thanks for jumping on. Following that forecast revision, Dan Stuyven there of Goldman Sachs on crude. Some tremendous research coming out of Goldman at the moment. You're going to hear this phrase a lot. HALO, heavy assets, low obsolescence. Here's the quote for you. Markets are rewarding capacity, networks, infrastructure and engineering complexity assets that are costly to replicate and less exposed to technological obsolescence.
Utilities at a record high. I mean, this basically gives you the exact sense that we're talking about. Staples, healthcare, and utilities all are the big winners in this halo effect. At the same time, you see software down 30% since the end of October. So it gives you a sense of just how much dispersion there is under this very calm hood.
Some real regime change in this equity market at the moment. We'll see if it sticks. Equities at the moment taking a turn lower, just slightly negative by not even 0.1%, with an update on news elsewhere this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Jane Street was sued for alleged insider trading by the administrator winding down the affairs of Terraform Labs. The complaint claims Jane Street used non-public information to front-run trading that led to the collapse of Terraform and allowed the firm to unwind hundreds of millions of dollars in potential exposure. A Jane Street spokesperson called the suit desperate. Apple is bringing some manufacturing stateside, the iPhone maker announcing it will start building Mac Mini desktop computers in Houston, Texas. Apple said assembly will take place in the same site where it began producing servers used in data centers to power AI features. Apple currently builds MacBook Pros at a facility in Austin. And Floyd Mayweather Jr. and Manny Pacquiao are stepping back into the ring. The boxing legends are set to meet on September 19th at the Sphere in Las Vegas. Netflix will stream the event worldwide. This will mark the first time Mayweather and Pacquiao have faced each other since their historic fight of the century back in 2015, which Mayweather won via a unanimous decision. That's your Bloomberg Brief, John.
I hate it, but I watch it, and maybe that means I'm part of the problem.
Wait, you hate it and you watch it? You can watch this?
I hate the idea of what boxing has become.
Yeah.
But at the same time, because it's Manny and Floyd, I'll watch it.
I'm looking up tickets.
And that means I'm part of the problem, right? Which is why they keep doing ridiculous things like this.
Or the solution. It depends on your perspective.
No, just boxing is getting too close to wrestling.
And to MMA?
No, to wrestling.
Too performative.
Too performative.
It's
Too theatrical, too staged. It's an exhibition. I find that problematic.
Yeah, you want the raw, old school boxing
when the best
matches.
would fight the best, and that changed a long time ago,
Can't we all
unfortunately.
just get along? I just don't like the punching.
Oh, right, you don't like the sport?
Yeah, I just don't like the idea that
that's
people get
different.
knocked out. That's my
Then definitely
base
don't
thing.
tune into this one.
I won't.
I imagine you won't be watching. Up next on the programme, private credit jitters.
I'm not overly concerned with some of the areas in terms of redemptions, right? One fund doesn't really represent the aggregate market structure in terms of the vehicle that's of investment in a $2 trillion market.
Up next, we'll catch up with Craig Sigenthaler of Bank of America, live from New York City. You're watching Bloomberg TV.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and Novian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Further Wave by empowering our customers across all our segments?
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Equities just about negative on the S&P. We're down by a tenth. Just about positive on the Nasdaq, supported by a big rally of AMD in the pre-market. The Nasdaq 100 is positive by 0.1%. Just remember, at AMD, it makes up about 2% as a weighting of the Nasdaq 100. So some support there coming from that single name so far this morning. Elsewhere, a big focus on what's happening in private credit. Under surveillance this morning, private credit jitters.
I'm not overly concerned with some of the areas in terms of redemptions, right? The market structure matters a lot, right? And so in the loan market, if you're talking about private credit, the vast majority are in closed-end private funds where there are lockups. And so you won't have that redemption risk. One fund doesn't really represent the aggregate market structure in terms of the vehicle that's of investment in a $2 trillion market.
So here's the latest this morning. Blue Owl shares extending losses as investor anxiety rattles the private credit industry. So Craig Sigenthaler of Bank of America with this to say: there is a significant level of misinformation weighing on Owl and the private credit industry, which has led to a particularly attractive buying opportunity. Craig joins us now for more. Craig, welcome to the program. That word misinformation, I'll give you some time just to get into that. Where do you think the misinformation is coming from? What's it about?
So, Jonathan, thanks for having me on the show. I mean, I actually have a long list that I kind of published in my report yesterday, but Number one is transparency. Almost all private credit funds are forced to disclose their holdings quarterly. You can see if the loan's on non-accrual. You can see the spread. You can get color into the watch list. You can see data like pay in kind. So when I hear people say that private credit isn't transparent, it's really not true. That's kind of the starting point. I also want to remind you a few moments in time. There was a lot of news around Pluralsight 2 years ago, which was a default that Blue Owl and others had. And then also we had Tricolor and First Brands. Since that moment, the underlying portfolios have performed very well. And also the average Blue Owl private credit fund returned between +8 and +10% last year. So these aren't exactly bad returns. They're actually very good returns. And that's part of where the misinformation starts. But I actually published a list on page 3 of the note that I published yesterday. And it's kind of too much to put in a response right now on TV.
Of course, I understand. And they should reach out to you directly if they want the full list. And I've got the document as well to read through. The question I think you'll be asked, though, so here's an example question. If there isn't a problem with asset quality, when they sell a portfolio of loans, why do they need to sell to their own insurance company? What's the response to that?
So they sold $1.4 billion of assets, and this was across really 3 funds, but really 2 funds. One of the funds is a very small fund. It's called OBDC2. This fund is in runoff. They're allowing investors to redeem 5% a quarter. Instead of giving them 5, they gave them 35%. So, you know, when people said, hey, they're halting redemptions, it wasn't really true because they were expecting to get 5 and they got 35% instead. And those assets were sold at par. Now, they sold those assets to 4 investors. I do think one of those investors was the insurance business Blue Owl, which they don't own, but they do manage. But the 3 other investors were third parties. The 3 other investors set the price. So I agree. I don't like self-dealing when a private equity firm sells 100% of assets to themselves, and that happens sometimes. In this case, it was probably like 25% of the assets went to an insurance company that's managed by Blue Owl, but 75% or so of those assets were bought by completely third-party institutionals that set the price. That's why I don't think that is a big deal in my view.
Do you think, though, Craig, this highlights the concern about expanding private credit so significantly to retail investors or to semi-liquid funds at a time where there is a fundamental mismatch in maturities?
Okay, so private credit is done about 12% a year for 3 years. It's a very young asset class, and it's been growing. So most retail investors and most financial advisors are actually very happy with the performance. And I actually think private credit will continue to grow over the next decade in all 3 channels. Institutional, where there's very strong demand, insurance, where there's very strong demand, and retail. But retail will be a little more pro-cyclical. But what's very kind of interesting to me is why are retail redemptions picking up when performance has been very strong? And that's partly where I get to this sort of the misinformation, the fear that's coming from a lot of places, which isn't based on fact. Now, I will push back a little bit. A lot of the private credit funds, like the public BDCs, there's no asset liability mismatch. That is purely permanent capital. Now, inside of the private BDCs, they are allowed to have a limited redemption. Now, in the future, if we have a recession and defaults are up, some of these private credit portfolios are going to have losses. Now, their losses will be way smaller than the QQQ or the S&P 500 index. So relatively, private credit will outperform. But when there's losses, that will spike higher redemptions. And then what the fund is allowed to do is limit redemptions down to 5%. That's how the product was designed. It was designed so that there would be no asset liability mismatch. So I do push back on that point.
Craig, we just have about a minute here. I'm just wondering, you seem frustrated. It seems hard to dispel some of these fears that continue to mount, particularly in the software loan sector. I just wonder, at what point do you worry it becomes a self-fulfilling prophecy where companies have to pay more for loans and then they actually do become more fundamentally stressed?
Yeah. So I've actually seen these moments before, which gives me confidence now. You go back in time, Blackstone B-rate 4Q22. You had Apollo in the middle of 2020 dealing with its own issue. You had Ares in 4Q18. If you bought those three stocks at that moment, which I think is a similar moment for Blue Owl, you would have got between 80 and 180% return in your shares over the next 12 months. So I've kind of seen these moments before, which is kind of why I'm not worried. But listen, I think a lot of people don't understand private credit, and that's why there'll continue to be misinformation. If there's a non-accrual that pops up next quarter at Blue Owl, I assume there'll be a lot of negative articles on it, even if it doesn't matter that much.
Craig, thoughtful stuff, a constructive view, some pushback there. Craig Siegenthaler there of Bank of America. That stock cut in half over the last 12 months.
What's it going to take to disprove this, to dispel this? We have Salesforce earnings coming up tomorrow. We have CoreWeave on Thursday. Let's say they're blowout earnings. Is that going to be enough? Well, that's not what we've seen in the past. So you can feel the frustration. It's not terrible out there, and yet no one seems to be listening.
It's difficult out there, let's put it that way, and confusing. NASDAQ futures bouncing back by just 0.2%. Up next, Mana Mahajan of Edward Jones, Beth Kindig of the IO Fund, David Seath of Nomura, and Matt Stuckey of Northwestern. The third hour of Bloomberg Surveillance, up next.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are in Liberation Day 2.0.
Markets would have been relieved to get past the tariff issue, and it seems like it's going to be front and center again.
Right now, it's a bit of wait and watch.
A high tariff scenario is where we're going to be.
I don't think it changes the overall narrative for the marketplace.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
This is going to be a long week. Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this, just about unchanged on the S&P 500. On the Nasdaq, just about positive, up by 1/3%. For the week ahead, that long week, it looks like this and starts later on this morning. Consumer confidence, one to watch at 10 a.m. Eastern time. Going into this evening, the State of the Union. The President believes the State of the Union is A-OK. Consumers right now have a different view of things.
And frankly, for all of the efforts to try to change people's minds, it has not been working based on polls. What is the issue going to be that he's going to raise about how they're going to fix this, how they're going to cater to affordability, and how is he going to pair that kind of awkwardly with raising tariff rates in the wake of IEEPA? I mean, this is going to be a really interesting conversation that he has at the podium for potentially much more than an hour.
Especially given this latest Washington Post Ipsos poll, 64% of Americans don't like tariffs. So when the president's going to double down on it tonight, that might not bode well for his broader message on affordability. Also, what is going to be a problem? Higher electricity prices, higher beef prices, when he's trying to say that he inherited a mess and he's trying to turn it around, because all of this is about the midterm elections. On top of that, only 39% of Americans right now approve of what the president is doing. And you have these issues that he was winning on at first when he came into office that now he's underwater on. Affordability, one of them, but also as well immigration.
He's making a big push also for lower interest rates. The Chicago Fed president weighing in just moments ago, Austin Goolsbee. Not obvious that Fed policy is restrictive. More rate cuts require progress on inflation. The latest from him.
What's interesting, Austin Goolsbee of the Chicago Fed has been talking in this kind of tone, and we'll be hearing more from him with our own Michael McKee later this morning. But what was interesting is that Chris Waller, who has otherwise been fairly dovish, yesterday came out with a bit more of a hawkish tone, saying he really is on the fence. He could go either way with respect to a rate cut depending on the economic data. Is it going to be inflation, and this is really putting PPI on Friday in focus, or is it going to be potentially on the employment picture, given the fact that there is this existential fear about AI and what that's going to do to the labor market? Ultimately, it seems like these things are in conflict, but right now inflation very much taking the lead in a number of these conversations.
We also had Stephen Myron, what was it, last week, talking about the fact that if there's a better labor market, maybe he would readjust how many rate cuts he sees for this year. So the bar has just gotten so much higher when you have these latest comments from Governor Walsh, Governor Myron. How much harder is that going to be for the new dove, Kevin Walsh?
Super dovish, still dovish, but just turning a little bit more neutral over the last week or so based on the conversations and the communication we've seen so far. Check out this move in the pre-market. AMD up by more than 9%, supported by a move from Meta to buy all the chips that they produce, the computing equipment, and some stock as well.
Okay. This is Captain Obvious. We knew that this money was going to go somewhere, right? I mean, essentially, if they're going to be spending a combined $650 billion with their other three big tech leaders in the CapEx game, where are they going to be spending it? NVIDIA, they're going to be spending on AMD, they're going to be spending on these other companies. Why haven't those shares been rallying more? And that's been a big question. And, well, bam, here it is.
Big question for NVIDIA. Into the print tomorrow after the closing bound. Why is the rally of that name stalled over the past, 4 months?
And is it going to be because of some questions around China? Is it going to be around just how quickly they can get those chips, the question around memory? Or is this going to be just simply an oversight by people who have gotten carried away by their fears and suspicions?
The headline corporate act a little bit later. Talking for yourself, right?
Of course.
Carried away by fears and suspicions. NVIDIA tomorrow evening. Look out for that after the close. Coming up through this hour, Mona Mahajan of Edward Jones with Stocks Eiger Recovery, Beth Kindig of IO Fund previewing NVIDIA's earnings, and David Seath of Nomura as Fed Governor Christopher Waller calls a March rate cut a coin flip. We begin this hour With stocks rebounding as investors seek trade clarity from President Trump's State of the Union address. Mana Mahajan of Edward Jones writing, the overhang of tariff policy remains and markets are reflecting this with some defensive posturing. We recommend staying diversified and staying invested. Mana joins us now for more. Mana, welcome to the programme. How would you frame what's been happening in this market over the past few months? There were some people who came on the programme and said this is a cyclical rotation, don't worry about things. Now it feels like a bubble is bursting.
Yeah, you know, John, it's interesting. It's a tale of two markets almost. On an index level, you could take a look at the S&P and say, well, we're flattish year to date. We've been pretty much in line with all-time highs, 1% to 2% below the most recent all-time highs. But underneath the surface, we know that there has been an aggressive rotation. And that rotation has really hit parts of the market that are not only being cannibalized by AI, think about the software names, but that are potentially being disrupted by AI. And we've certainly seen that in sectors like parts of financial services, parts of real estate, and parts of even transport and logistics. Now, keep in mind, none of those business models or revenues have actually shifted. This is still all speculative, but nonetheless, parts of the market that are holding up better, cyclical, but more namely capital intensive and what we call old economy sectors are certainly holding up better. And we think that trade likely has some legs here.
So, Mana, this is important because the traditional way to think about an equity market, whenever we get a move like this, risk on, risk off, is it defense versus offense? What's going to do well? Value versus growth? This from Goldman, I think, sums up things pretty well. When they say markets are rewarding capacity, networks, infrastructure, and engineering complexity, assets that are costly to replicate and less exposed to technological obsolescence. That summarizes the last few months. Do you think looking out, that's going to be the story?
You know, I think until we get some more clarity on how AI plays out, there will be some defensive posturing in the market, and that includes kind of gravitating or flight to safety in what we call those more capital-intensive parts of the market. Now, we've also seen a bit of flight to safety in precious metals and even that return to treasury bonds as a safe haven asset class. But nonetheless, we do think perhaps the silver lining here is as we look underneath the surface at the fundamentals, the U.S. economy is still growing at over 2%, we think, in 2025. And by the way, we do think earnings growth, S&P broadly, corporate earnings are up about 14% potentially in 2026 as well. And so we think those two factors alone, stronger economy and better earnings growth, underpins the fundamentals. And keep in mind, when you think about prolonged bear markets, deeper prolonged bear markets, typically they occur when an economy is heading into a recession or the Fed is raising rates aggressively. And those are not two scenarios we see on the horizon.
When you say fundamentals, I'm not sure exactly what fundamentals to look at. When I look at earnings, they look okay. I hear software names that are going to get tanked by AI, and then you see their earnings, and they look pretty good. They're actually growing really well. At what point will those fundamentals start to matter?
Yeah, you know, I think certainly there has been a disconnect between what we're seeing in earnings fundamentals for some of the AI and AI potentially disrupted parts of the market and how their underlying sales and growth are actually turning up in the quarterly reports. Now, that I think there has been a bit of sell first, ask questions later. But we will see as this AI economy plays out over the next 12, 24 months, whether or not a lot of these fears come to fruition. And in our view, what we're seeing in the marketplace is probably a massive front running of what actually may happen and what actually may play out, not in 1 to 2 years, but perhaps 3 to 5 years. And so perhaps there will be opportunities in some of those beaten up sectors along the way. But for now, our recommendation is stay in areas, we like large cap and mid cap stocks, but within the sector preferences, we continue to like areas like industrials here. We continue from a regional basis to like areas like EM and parts of international, which are offering that earnings upside and maybe some diversification away from U.S. large cap software names. And we do like areas, within investment grade markets as well.
Have you gotten more pessimistic just in general about overall U.S. equity returns this year as we do see this churn and this lack of big tech reclaiming some leadership?
Yeah, I think generally S&P returns are driven by two factors, and those are earnings growth and valuation expansion. And the earnings growth we talked about, we think fundamentally remains sound, intact. The valuation part of the story, we think, has come to the forefront. And certainly we've seen higher value parts of the market, really the winners of last year as well, if you think about tech and financials, underperforming. But do we see scope for valuation expansion in parts of the market that might have some room for catch-up? Think about some of those cyclical industrial parts of the market. We think in an environment where the Fed maybe still has 1 to 2 rate cuts ahead of it, we have seen interest rates gradually move lower, that potential scope for valuation catch-up in parts of the market that haven't really seen much leadership, we do see some hope there. And so we think both parts, earnings growth, certainly in a broader market sense, but valuation expansion we think comes just from those maybe catch-up potential players.
Mona, I know you spent some time on the Supreme Court decision and what the tariff policy now means for corporate America. If there are refunds, what do you think corporate America, Lisa's brought up this point a lot, does with that money?
Yeah, it's a good question. And, look, so far the scope for refunds has been pretty limited. We heard the president talk on Friday about it may take years in the courts. There has been no mechanism put in place. We don't see yet how the refund process could play out. But if we do see refunds, we do think, one, it does put money back in the hands of corporations who have been spending on areas like CapEx. We know from a tax perspective, CapEx certainly is more attractive in 2026 and going forward. And we also think, when we think about areas like, a lot of companies have had to absorb higher prices from inflated tariffs, and perhaps their margins have taken a hit. And so perhaps they do things like share buybacks or buying back their own stock if they think it's attractive. And so there is potential for a bit of both, financial engineering as well as CapEx spending, we think, coming from the corporations. But more broadly, we'd say interesting to note that despite the elevated tariffs, really since Liberation Day last year, tariffs have not had that outsized impact on inflation.
Okay, इसे नेचुरल गैस देखो पुल बैक में आया है ऊपर, सेलिंग प्लान है, ठीक है, सेम लेवल से वापस बड़ा एसएल नहीं, 3 पॉइंट का एसएल ही रखेंगे, इससे ज़्यादा रखना सही नहीं है, 3 पॉइंट इज इनफ। टोटल देखें तो अप्रॉक्सीमेटली बनता है ये आपका 1:6 ही मान लो, 1:6 ही बन रहा है अप्रॉक्सीमेटली, 1:5 1:5 1:6, मतलब 1:3 के अप्रॉक्सीमेटली पहला टारगेट मान के चलो। 263 ठीक है, तो ये समथिंग पहला टारगेट रहेगा, इसके नीचे सस्टेन करेगा तो फिर सेकंड टारगेट के लिए जाएंगे। बाकी एसएल कोई फिक्स नहीं है, 3 पॉइंट का रखा हुआ है, कैंडल बेसिस पे रहेगा। क्लोजिंग अगर एक के ऊपर एक कैंडल होती है लेवल के ऊपर तो लेवल ब्रेकआउट माना जाएगा, एसएल क्लोजिंग माना जाएगा, नहीं तो ऐसा ना हो कि विक बना के वापस नीचे आ जाए। भाई क्रूड को देखोगे नीचे नहीं आ रहा है लेवल पे, 4 दिनों से सेम ही रेंज में फंसा हुआ है, अपर लेवल से सेलिंग आ जा रही है, नीचे से बाइंग वापस आ जा रही है। 19 को आया था इस लेवल पे, उसी दिन सेलिंग आई थी, फिर 20 को सेलिंग आई, फिर रिकवरी आ गई 21 को मार्केट क्लोज, 23 को फिर बाइंग आई, क्लोजिंग होते होते सेलिंग, आज हल्का सा गैप अप के बाद फिर सेलिंग एंड देन अगेन बाइंग। तो 19, 20, 23, 24 4 दिन है, 4 दिनों से सेम ही रेंज पे रुका हुआ है। ओवरऑल देखोगे तो कोई सपोर्ट नहीं है यहाँ पर, ये पॉइंट ऑफ इंटरेस्ट ही है। वहां से भी 2-3 बार रिजेक्शन ले चुका है। अब एग्जैक्ट लेवल पे अगर आता है ऊपर तो फिर 6400, 350 ये रेंज रहेगी मेजर रेजिस्टेंस की, अगर ये पॉइंट ऑफ इंटरेस्ट होल्ड नहीं करता है। नीचे अभी भी इंटैक्ट है सपोर्ट 5830, 840, एंड ये कल का लो 5970, 980। ठीक है, सपोर्ट का मतलब ये मत समझना कि सपोर्ट है तो एग्जैक्टली बाइंग ही आएगी, रेजिस्टेंस है तो एग्जैक्टली सेलिंग ही आएगी। वहां पर प्राइस एक्शन कैसा बिल्डअप हो रहा है दैट इज ऑल्सो इंपॉर्टेंट। इट माइट पॉसिबल सपोर्ट एरिया पे बाइंग के लिए प्राइस आए और ओपन इक्वल टू हाई बना के सेलिंग में ब्रेक डाउन कर दे, या फिर सपोर्ट से पहले एग्जैक्टली एक और रेजिस्टेंस बना दे और फिर फाइट हो और नीचे निकल जाए, जैसे भी नेचुरल गैस में हुआ है। सपोर्ट अच्छा था बट दैट इज ऑलरेडी ब्रोकन, वी कांट बाय ऑन दैट। देखते हैं, आज स्टेट ऑफ द यूनियन है, स्पीच रहेगी ट्रम्प की, क्या कहते हैं वो। एनी कमेंट रिगार्डिंग द ईरान, विल सी। और न्यूज़ तो है नहीं अभी इसका डायरेक्टली इम्पैक्ट पड़े मार्केट पे, मार्केट उसी का वेट कर रहा है। अगले 2-3 दिनों तक कुछ होने वाला नहीं, इस वीकेंड पे मोस्ट प्रोबेबली मार्केट विल रिएक्ट, कुछ अगर बड़ा एक्शन लेता है यूएस। Iran near deals to buy supersonic anti-ship missile from China. क्रूड ऑयल ना कंटिन्यूअसली अपने सपोर्ट अपसाइड की ओर शिफ्ट करते जा रहा है। मुझे ऐसा लग रहा है कि अगर मार्केट एक लिक्विडिटी स्वैप करने के लिए पॉसिबल है कि प्राइस धीरे धीरे क्या करे, ऊपर की ओर जाए, फिर एक बड़ी कैंडल बना के तीनों ऐसे एक साथ रिमूव करे लोअर एंड पे और फिर ऊपर जाए, ये एक पॉसिबिलिटी लग रही है। बिकॉज ओरिजिनल सपोर्ट यहाँ था, कल एक और सपोर्ट अपर लेवल पे लिफ्ट कर दिया, एक और सपोर्ट यहाँ क्रिएट कर दिया। अभी सपोर्ट अपसाइड की ओर शिफ्ट हो रहे बट प्राइस नहीं आ रहा है। एक तो है कि प्राइस सपोर्ट पे आए अपलिफ्ट होने के बाद एटलीस्ट, ओवरऑल ईरान रिस्क इज़ वेरी हाई फॉर क्रूड ऑयल प्राइस, बट क्या उस केस में पहले लिक्विडिटी ग्रैब करेगा उसके बाद ऊपर जाएगा? आज का लो भी अब सपोर्ट बन गया है। ये कैंडल ऑलमोस्ट क्लोज हो ही गई है लास्ट वाली। आज का लो भी फिर से सपोर्ट है, कल का लो भी सपोर्ट बन गया था, आज का लो भी अब सपोर्ट है। आज का लो भी अब सपोर्ट है क्रूड में, देखना पड़ेगा आज का लो वापस नीचे सपोर्ट पे अगर सपोर्ट लेने आता है प्राइस, और किस तरह से आएगा दैट इज आल्सो इम्पोर्टेंट टू सी। लास्ट टाइम मैं इस तरह का क्रूड ऑयल में 15 मिनट में चार्ट में पैटर्न या फिर इस तरह का प्राइस एक्शन बनता हुआ देखा था बहुत पहले, नॉट दैट मच फार, अराउंड 1-2 महीने 3 महीने पहले आई थिंक, मुझे याद आ रहा है। उस समय भी कुछ ऐसा ही प्राइस एक्शन बना था, प्राइस अल्टीमेटली लेवल को अपने सपोर्ट को शिफ्ट करे जा रहा था ऊपर की ओर, एंड आई स्टिल रिमेंबर एक दिन फिर प्राइस जब आया ऐसा लग रहा था ऊपर ब्रेकआउट करेगा, किया भी ब्रेकआउट, फेक ब्रेकआउट किया, वापस नीचे आया, वहां से फिर बहुत बड़ी सेलिंग मार्केट ने दी थी। हाँ उस समय ऐसा कोई एक्सटर्नल फैक्टर लाइक ईरान नहीं था. दैट इज अ नॉर्मल प्राइस एक्शन और लॉजिकली इस लेवल पे वो मल्टीपल टाइम टेस्ट हुआ था, आइडेंटिकल रेजिस्टेंस बना दिए थे और ब्रेकआउट होना भी चाहिए था, हो भी गया था बाय द वे. बट वो वापस फिर प्राइस नीचे आया एंड देन उसने काफ़ी बड़ी सेलिंग दी थी, सारे के सारे एसएल चले गए थे उसमें, बाइंग के जितने सपोर्ट बने हुए थे. ठीक है, ऐसा ही पैटर्न सेम ही है, एक ही चीज़ थोड़ी अलग है, दैट इज़ अ एक्सटर्नल फैक्टर जो है ईरान का, वो प्ले आउट नहीं होता है तो चांसेस हैं. बाकी ऊपर देखना पड़ेगा 30 मिनट टाइम फ्रेम के अकॉर्डिंग रेजिस्टेंस पे जाता है या फिर नहीं. 15 मिनट के तो कोई लेवल है नहीं इस पॉइंट ऑफ इंटरेस्ट के अलावा इस रेजिस्टेंस जोन पे इन क्रूड ऑयल. बाकी देखते हैं, आज एक डेटा भी है 8:30 यूएस मार्केट 8 PM ओपन होने के बाद.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Equities are positive by 0.1% on the S&P 500. Likewise on the Nasdaq, up by 0.4. The cash open 60 minutes away. AMD, the big mover this morning. Let's get your morning movers. Danny has more. Hey, Danny.
Hey, John, and it's all thanks to Meta sealing a deal with them to power a 6-gigawatt data center, and it will be all using AMD computers, processors. They're also going to get warrants to buy AMD shares. Lisa Su says that this is a deal worth in the multi-billions. We don't have the exact price tag, but it is enough to send shares higher by 10%. I also want to linger on Intuit shares for just a moment, announcing not that long ago that they are reaching a deal with Anthropic to power AI agents to their offerings to companies and different users, 7%. The reason I think this is interesting is that Trini's research report yesterday talked about this world in which the very companies who are being disrupted are the ones who are paying and spending on AI, spending on their own destruction. Anyway, that's not what's being priced in. It's a 7% rally in the pre-market this morning. Finally, ending with another sore spot for this market, and it is Blue Owl falling yet again, 2.5%. This time, the catalyst Deutsche Bank downgrading Blue Owl to a street low price target. It is a back and forth. Yesterday, Bank of America said that it was misinformation. The selling was overdone. So the two analysts clearly disagreeing on that. But the drama continues, John.
The stock cut in half in the last 12 months. Danny, thank you. The name down by another 2%. More from Danny and Matt Miller in about 30 minutes to guide you into the opening bell. Let's turn to the economy. Fed Governor Christopher Waller saying the chance for March rate cut is a coin flip.
If the labor market data for February are consistent with the stronger job creation, it may be appropriate to hold the FOMC's policy rate at current levels. If the good labor market news of January is revised away or evaporates in February, it would support my position at the FOMC's last meeting that such a cut should be made at the March meeting. I rate these two possible outcomes as close to a coin flip.
That is a change for Governor Waller. Bloomberg's Micah McKee joins us now from the National Association of Business Economics Policy Conference in Washington, D.C. Mike, welcome to the program. It feels like the tone is shifting somewhat. What are you hearing?
The tone is definitely shifting. It's similar to what we heard at Powell's news conference after the last meeting, that maybe inflation is becoming a bigger issue. And as far as Chris Waller is concerned, you take a look at what we got from ADP this morning. Their weekly number, 12,750, is the fourth week in a row that they've reported higher levels of hiring. So it may be that we get a fairly strong report a week from Friday, and that may keep Chris Waller on the sidelines. This morning, Austin Goolsbee, the Chicago Fed president, is speaking, and he's basically taking the opposite position from Chris Waller, that it is important to make sure that the jobs market stays healthy, but that inflation is the bigger problem. And he says unless he sees inflation going down, he's not going to be voting for more rate cuts for the time being. In his speech, he says, I feel that front-loading too many rate cuts is not prudent. In every economic survey we have seen and in the many meetings we've had with businesses and consumers across the 7th District, people express that prices are one of their most pressing concerns. Let's pay attention. Now, if inflation does start to go down, Goolsbee says that he is willing to consider the idea of further rate cuts. In fact, he thinks they could have as many as 2 by the end of the year, but he's got to see that progress. We'll have plenty of other Fed speak today that you can try to glean clues from, but maybe the number of the week is going to be PPI on Friday. We've got the weaker than expected CPI numbers for January. This is PPI for January, and they can put together the PCE number, which is the one the Fed follows after we get PPI, so we'll have a better idea of whether those inflation numbers are coming down.
Mike, looking forward to the Fed speak later, of course, with you and the Chicago Fed president at 9:30 Eastern time, I believe, so about an hour from now. Mike, I want your view on the elephant in the room. What's holding back hiring at the moment, and what is the influence of AI? What are they saying about that at the conference at the moment?
Well, most people here say they don't really know for sure, but the feeling is it's not AI at the moment. It's the uncertainty caused by the administration's fiscal policies, trade policies. Companies don't know what is going to happen in the future. You layer on some AI uncertainty to that, and you have a reason for companies to be cautious in hiring. Austin Goolsbee met with some of us last night, and he talked about that and said that for him, it's more important to look at the rates, the unemployment rate, the hiring rate, than the absolute level of jobs, because at this point, we're having problems with the labor supply. It's gone way down. And because we don't know what's going to happen with trade policy going forward.
Mike McKee, thank you, sir. You take a break. We'll see you in 60 minutes again. Mike McKee, 9:30 Eastern Time, catching up with the Chicago Fed President, Austin Goolsbee. Sticking with the Fed, David Seif of Nomura writing, we continue to expect 2 Fed rate cuts this year, both occurring under Wash. David joins us now for more. David, good morning.
Good morning.
Let's get to that Wallace speech. So here's a direct quote. I can't dismiss the possibility that the labour market data has pivoted to a more solid footing. We've heard this a few times now. Central to all of this is whether that jobs report more recently was a one-off or not. Where do you stand on that?
Well, we certainly don't think that we're going to get in the 170K per month on an ongoing basis. But we do think that the labor market has been somewhat stronger than people had thought it was going into that report. And I think this is a clear signal that it is not as bad as people thought. So we see high 5-digit to low 6-digit prints on a regular basis later this year. That certainly looks poor compared to about 2 or 3 years ago, but it's a lot better than we got for most of 2025.
I think the central idea to all of this is that you can have a deceleration in jobs growth without an increase of slack in the labour market. And anchoring that view is the unemployment rate. Is that a good measure of the labour market? Mike gave a nod to it. What's your view on it?
Oh, yeah, we think it's a very important thing. And more importantly, irrespective of what we think the Fed thinks that it's an important measure. So it is clearly key to look at. I think especially right now, for all the problems that the unemployment rate calculation has, it is very good at dealing with the fact that demographics are changing, perhaps more sharply than people even realize right now. And so how do you evaluate a number on NFP today when the population is growing pretty slowly, if at all, versus just a few years ago when it was growing much more quickly? Well, the unemployment rate cuts through all of that. And so I think that's a key reason the Fed, especially now, is really looking at it.
Do you see inflation as taking on a greater emphasis right now, just simply because there is a sort of stasis in the labor market, and there does seem to be questions around just how strong, and certainly that it hasn't necessarily been as weak as many people expect?
I think generally speaking, the trend is really still focused on the labor market more than on inflation. Certainly a pickup in inflation would be something that the Fed would have to take notice of. We can all point out, we certainly have at Nomura, that this is going to be the 6th straight year, it looks like, where the Fed has missed to the upside on inflation. But it seems that by and large, Fed officials have, in their own way, made peace with that. They've continued to push through a bunch of cuts, even though inflation was above target. And although you do definitely see, A, a lot of Fed speakers who are pushing back on that, and B, a hawkish shift in things. I think most of what is driving changes in the narratives right now is what's happening in the labor market. And it's despite the fact that we see inflation continuing to be above target that we think that incoming Chair Warsh will be able to push through 2 cuts pretty quickly.
You know, John alluded to the questions around AI and what this would do to the labor market. And what we heard from Chris Waller yesterday, the thing with AI is it's coming at us so fast that it's easy to start seeing jobs that may go away before you see the new jobs that are going to be created. He went on to say, I either think that you'll see some return to job growth coming in the next year, or we're in a period of economic activity I've never seen before in my life. There is a question about whether we are in a sea change regime. What's the Fed response if we do see some sort of job cannibalization from artificial intelligence?
I think if we were to see, and it's a big if, I want to be clear, but if we were to see massive job losses without close to an equal number of job gains, not our central case, but if that were to happen, then I think that then a dovish response is really required here.
I don't think that's the base case.
I think that historically, you know, we've had 250, 275 years since the Industrial Revolution started. We have had breakthrough technologies throughout history. Maybe AI is going to trump them all, but time and again, we've said, oh, you know, what's going to happen to all the coal miners now that we have the steam engine? What's going to happen to all the people who take care of the horses now that we have cars? And time and again, yes, there have been segments of the population that have lost very badly with new changes, but by and large, we have, without exception, seen the economy end up not just with higher growth, but with more jobs being created that would never have been imagined without prior to that technology coming to bear. So I think that, you know, as much as it's very easy to see jobs that could be lost under AI, it's much harder and requires more imagination to figure out what jobs would be created. Doesn't mean it's not going to happen. It really has historically.
When it comes to this year and the 2 cuts that you say happened under Kevin Warsh, when do we see Kevin Warsh actually take the helm of the Federal Reserve?
I think Kevin Warsh will be there for what is scheduled to be his first meeting in June. Yes, there's a lot of wood to chop, so to speak, but the president has shown that he can get nominations through pretty quickly when he needs to. We got the Myron nomination through in about 6 weeks. So I think he'll be there in time for that. And our thought is that at his very first meeting, he will push through the first of 2 rate cuts for the year.
And when it comes to the composition of the Fed, does it mean Jay Powell leaves and Steve Myron gets nominated to that chair?
I think Steve Myron will probably have to give up his seat for Kevin Warsh. He would certainly be at the top of my list for people who are likely to get open seats under Trump.
David, it's interesting you think he'll get what he wants at the June meeting. Given the picture of things that I'm getting from the Federal Reserve right now, that does not look like a committee that's ready to reduce interest rates. How much power do you think the Fed chair still has?
Well, I think this is going to be a really interesting dynamic. And I will say that when we look a little bit further down the road, I do think that there's going to be more limitations on Kevin Warsh's Fed chair than there have been probably on any Fed chair since Volcker. So 45 years where the Fed chair is no longer a de facto dictator. That said, I don't think it's going to happen in his very first meeting. And I think it's not like flipping a switch, right? There's a lot of institutional inertia where the Fed chair is able to push
Come on,
things
David,
through.
how does this actually work in practice? And you know better than I do.
Yeah.
Just because he turns up, we all sit around a table and go, he's the new guy. Let him get what he wants for a meeting.
We still have, despite a lot of the hawkish Fed speak over the past week since the job numbers came out, we still have an FOMC that, if you look at the dot plot, makes it look like of the 19 people on there, 17 or 18 are in favor of additional cuts. And I think that if Kevin Warsh comes in and says, OK, everybody, it's time to go ahead and cut now, a lot of them are either going to just say, OK, I was on board with that, or might not have been on board with this quite this early, but I'm not going to sort of defy the new Fed chair right away. Now, if Chair Warsh is able to push through a couple of cuts and then he wants to go for more, it's a big if, but if he does want to, and inflation is still high and job growth is becoming more robust and the unemployment rate is falling, then we could start to get real votes on the FOMC, where it starts to look like, hey, wait a minute, we got to count the votes. It's not just the Fed chair gets whatever he wants.
Real votes, that's a novelty, hey?
It would be for the Fed. It sure would be.
That'll be fun. David Seif there of Nomura Securities International. Thank you, sir. It's good to see you.
My pleasure.
It's going to be an interesting 6 months. I don't think anyone really knows what we're going to get in any way, shape or form. We've got a baseline. There's another baseline for 2 cuts later this year, but around that, a lot of doubt.
Baseline is doing a lot of heavy lifting this morning. I think that Tom Tillis doesn't really know either, because there's a lot of contingencies to even have the hearing in the first place.
And it was interesting because Bob Michael of J.P. Morgan had a little bit of consternation about how quickly this will be, and he put that emphasis on nominated Fed chair. So basically saying this could be very noisy. And to your point, there's no date on the calendar yet to start that hearing.
The calendar is empty. We'll see what we get. Equity futures turning higher by 1/10% on the S&P, with an update on stories worldwide this morning with your Bloomberg Brief. Back with us. Here's Yahara. Hey, Yahara.
Hi, John. Meta announcing a blockbuster deal with AMD. Those shares up 10% in the pre-market. The Facebook owner will spend billions of dollars on AMD data center gear over the next 5 years. Meta will also receive warrants to buy 160 million AMD shares. Those shares will vest when the project and AMD stock reach certain milestones, turning Meta into a major shareholder. Last week, Meta announced a tie-up with AMD rival NVIDIA. Meanwhile, Warner Brothers Discovery confirming our story that it received a revised proposal from Paramount. The new bid improves on its $30 a share offer and addresses concerns, including certainty of financing. Warner Brothers says it's reviewing the offer, but its board continues to recommend a deal with Netflix. And President Donald Trump invited both the men's and women's gold medal hockey teams to attend the State of the Union tonight. The women's team declined, while many of the men's team are planning to attend. You can watch Bloomberg's coverage of the State of the Union starting at 8 p.m. Eastern. We'll have full coverage and analysis of the president's speech, plus the Democrats' response. That's your Bloomberg Brief. John.
Yahara, thank you. Based on the scenes we've seen, without a doubt, they're attending that hungover. Without a doubt.
Oh, my God. They were at 11 last night in Miami. Yeah.
All I can say, I think it's going to be a really interesting contrast to have the hockey team next to the Supreme Court justices.
Yeah, that
with
vibe's
President Trump
different.
talking about both. I just think it's going to be really interesting.
That vibe's going to be different, without a doubt. A well-earned hangover, that's for sure. Up next on the programme, setting you up for the day ahead, plus Matt Stuckey of Northwestern Mutual, looking for the next names to benefit from AI. From New York City, you're watching Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
I'm not worried about credit here as long as recession isn't on the horizon. And right now, recession seems a long way off. The first loss pieces of structured credit, much like that 05 to 07 period, are starting to crack. Now, history doesn't perfectly repeat, but it rhymes. It's something to keep an eye on.
The bond market guys feel good at the moment. That was Bob Michael of JP Morgan Asset Management feeling good about Treasury yields close to the lows of the year, just about unchanged. The 10-year at the moment, just north of 4%. The equity guys dazed and confused beneath the surface, particularly beneath the index level. The S&P 500 at the moment, wild sector moves, single name moves. At the index level, 2% away from all-time highs on the S&P 500. Amazing. The Nasdaq up by another 0.5% this morning. The opening bell about 41 minutes away. Going into that opening bell, here's the trading diary. The week ahead today, tons and tons of Fed speak. from Goolsby, Waller, Collins, Bostic and Cook. Then we get some consumer confidence data at 10 a.m. Look out for that ahead of this. It could set the tone for it. The President delivering a State of the Union address at 9 p.m. Eastern Time. Then tomorrow we hit the ground running. Nvidia earnings after the closing bell. Thursday, another round of jobless claims. Friday, PPI data. Let's turn back to equity. Stocks recovering slightly following another sell-off driven by AI disruption fears. Matt Stuckey of Northwestern Mutual writing, we like owning the constraints to the AI build-out and contemplating the next phase of beneficiaries. Matt joins us now for more. Matt, welcome to the program. Let's contemplate that now. What is the next phase of beneficiaries?
Well, I think in terms of the next phase of this, it's turning all the investment into returns as it relates to corporate America. We've had a lot of pilots that have been rolled out in terms of, companies testing this technology. Now it's time to probably start to see that impact the P&L, either through expense reduction or through revenue generation. And so, that's kind of, I think, how to think about 2026, and companies that can help facilitate that, to me, I think are in a prime position to see maybe some business accelerate as we look forward to this year.
Matt, is this going to be a single name story or a sector story? Should we expect lots of bifurcation or a tide that lifts all boats?
I think it's bifurcation, but at the same time, I think it's going to be a more volatile bifurcation. And let me kind of explain what that means. Certainly, there's going to be a lot of headlines, and we've seen that in spades so far this year. And, just today, we're going to get another update from Anthropic in terms of enterprise agents. And I'm sure this is going to cause some additional single stock volatility that we've seen impact software in addition to insurance and financial services names. And so diversification is paramount, I think, in these types of environments. However, underneath the surface, that broadening is continuing, and it's continuing in areas like consumer staples, which, from that perspective, would make you, cautious in terms of, why is consumer staples leading this market higher. But then you also look at the weighted S&P that's up 5.5%, similar to small cap, against a tape in the S&P 500 that's flat on the year. So there's mixed signals, and I think that just my take on that is simply just broadening away from some of the mega cap leadership that we've seen in the last few years.
It seems like, Matt, a lot of people want to avoid the volatility. They want to avoid software. They want to avoid, at this point, financials that might be subject to some sort of disruption. At what point do you go back in? At what point do you say, OK, there actually may be some dislocations here that I could take advantage of, rather than just hiding out in consumer staples?
That's a really good question. I think it's really difficult to disprove something that isn't really happening yet, right? So you have a narrative attached to these stocks, whether it's financial services names like S&P Global, where there's concerns about some of their data business, or whether it's software names where historically these businesses were systems of record. Now you have competing systems of intelligence, and who's going to win that battle back and forth. The reality is probably just going to take time. And how do you trade through those environments? I think to the point I made earlier, diversification is your best friend in those environments, along with a longer term time horizon. Just the structure of the market today, with so much more participation with the retail trader, and so much more participation in terms of pod shops, trading these names back and forth, volatility is probably to be expected to be elevated for a while. So to me, in terms of how you navigate that, I think there's a few things that you got to keep front and center in terms of what you're looking at. One is, what's the long-term business fundamentals, and how does artificial intelligence potentially change that? What's the valuation context that you're entering in? And marrying that with a reasonable time horizon is probably the best way to navigate this environment.
Is it also to just avoid the United States for now and just go elsewhere, especially given the fact that a lot of people see it as undervalued?
I don't think I would go that far. Certainly we preach diversification outside the United States as well. But if you're looking at some positive earnings revisions trends, it can be found in the United States as well. It's not just U.S. large caps anymore or tech anymore. It is small caps. It is mid caps. And in fact, if you go back to May of 2025, one of the areas of the strongest earnings revisions up and to the right is small cap stocks. And so I think that's an important part of a portfolio. And I think if you're looking at just overall kind of portfolio construction today, the U.S. has to be a major component of that.
When you see deals like this morning with Intuit and Anthropic, is it time maybe to look at some of these software companies and think they're the ones that could benefit from all these changes?
Well, I think if there's a bull case for artificial intelligence that somebody's going to win a lot longer term, I think you have to discount maybe a percentage probability that some of the incumbents are going to win a piece of that prize. And it seems like, at least so far this year, that prize has been at the expense of the incumbents and gravitating towards more of the semiconductor names and the frontier LLMs, the likes of Anthropic. The question is whether or not, these systems of record that own rich data sets that are owned by, these enterprises across the Fortune 500 can integrate AI functionality through APIs from the foundational LLMs, whether or not that can be a solution longer term to keep them front and center in terms of their ability to provide value to enterprises across the Fortune 500. I think I'm open-minded to that outcome. And the announcement this morning from Intuit might be a framework for how this goes forward. But it's just the question of sustainability, whether or not this is going to continue in terms of these types of announcements. And you certainly need those types of headlines if you're bullish on software from this point.
Hey, Matt, it's good to see you. Thanks for dropping by. Matt Stuckey there of Northwestern Mutual Wealth Management. The final point there, partner or get eaten, seems to be the theme at the moment.
Yeah, the problem is that even if you do partner, you could also still get eaten. I mean, it's sort of this interesting. So the CEO of Anthropic, there was a podcast that I found really interesting a couple of weeks ago, and he said the reason why software is getting cannibalized first is because these professionals are the most adjacent to a lot of the AI, so they're most likely to adopt it first and then get cannibalized by it. So it becomes this very sort of self-fulfilling prophecy. At what point does the machine eat you?
Well, that's a good point. I don't think we're there yet, but that's why some of these software companies are in a prime position, though. They have all the work set up to just make their software so much better using AI. I think then the bigger question is, do they need less people? And I wonder if the next wave is going to be potentially some of the layoffs at these companies.
I think that's a central question for us all at the moment, for more reasons than one. Elsewhere, the equity market positive by 0.2% on the S&P. The opening bow just around the corner, 34 minutes away. Coming up tomorrow, Julian Emmanuel of Evercore, Kate Moore of Citi, the Porter Valley Executive Director Gene Soroka, and the US Trade Representative Jameson Greer following the President's address to the nation later on this evening. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
We have 2 crises, 2 essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when We're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What a day yesterday was. We start at least with a little bit of positivity. 30 minutes ago into the start of your cash equity trade. I'm Danny Berger. Matt Miller standing close by. Bloomberg Open Interest starts right now. Coming up, it's another wave of AI anxiety rippling through markets, with Anthropic set to demonstrate Claude's latest capabilities later this hour. And a warning from Jamie Dimon. The JP Morgan chief says that he's seeing echoes of the pre-2008 crisis era, when a rush to make loans ended disastrously. Plus, a blockbuster deal between Meta and AMD signals massive spending on AI will only accelerate. All right, some of the stocks that we have our eye on this morning. Meta and AMD. Check out what's happening with the price of AMD this morning, up 10 1/3%. So Meta says that it's going to be building a 6 gigawatt factory. And then what they're going to do is use all of AMD's devices, processors, computers in order to power it. Lisa Su talked about this being worth multi-billion dollars. And they also have warrants to buy more AMD stock, too. Meanwhile, Intuit, this is also an interesting one, Matt. Intuit gaining 5.4%. It has a multi-year partnership with Anthropic to bring AI to its customers. And this I'm into because that Citrini research report talked about the idea of the companies that are in trouble, that are being disrupted, are the ones that are spending on AI. It's this crazy feedback loop that's happening.
Yeah, exactly. They fire workers and use that money in savings to buy more AI, which then allows them to fire more workers. That's at least the concern that the Citrini research note highlighted. Home Depot reported strong earnings on steady demand for housing supplies, but the company gave a cautionary outlook similar to Walmart, highlighting the challenging macroeconomic environment. As you can see, Home Depot shares right now up in the pre-market 3% change.
Let's get back to the top story, and it continues to be the AI scare. IBM shares the poster child for it yesterday, their worst day in 25 years. Anthropic yesterday saying that it could modernize a programming language that runs on IBM systems, hence you get that 13% drop. But a variety of stocks were hit yesterday. It's that report that we talked about yesterday that Matt was just laying out. The Citrini research report that talked about how AI may replace workers and disrupt the consumption-driven economy. One of the co-authors of that report joins Bloomberg TV.
I thought there was going to be a small reaction. It was definitely larger than we expected. But I think it's not that surprising when you take a step back and consider kind of where the markets are in the U.S. The AI trade has been going on for 3.5 years. It's been more or less a straight line up. And essentially, like, everyone is max long today. And so there really aren't many incremental buyers left. And so it, on the one hand, spooks people when you do consider what is negative about this. But I think specifically the market right now is trying to digest this idea that AI has gotten a lot more powerful in the last 6 months.
Jamie Dimon also expressed concerns that AI could sour the credit cycle, a cycle that he says is starting to see parallels to the era before the 2008 financial crisis.
Unfortunately, we did see this in 05, in 06, in 07, almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
Let's discuss now with Bloomberg macro strategist Michael Bawley joins us here on set. So, Michael, the note yesterday moved a lot of stocks. I mean, IBM dropped the most since 2000, so the biggest move in more than 25 years. What are people talking about on the street in terms of a rebound today?
Yeah, I think a lot of people thought it was a little overdone. But again, it goes to this idea where we weren't really given any new information. This has been a growing theme for a couple of weeks. As far as we've known, it's hit a lot of different areas. There's been a chance to degross, deleverage, and basically clear your books of this secular AI trade in all its different forms, and now to actually go short the ones that are disrupted. That's not new. That really didn't bring any information that would change that macro, longer-term kind of view. what it did do is just give an excuse to sell. And when I spoke to traders and PMs yesterday, that's basically what they were thinking. And actually, I was hearing more bullish takes with, we're finally seeing valuations now that are somewhat interesting. Staples, for example, now are more expensive than tech on a forward PE basis. That's kind of surprising when we're thinking about if we are going into a slowdown, and we're all suddenly looking at the middle class or middle income workers all disrupted. I'm not quite sure I want to be in more value-oriented areas of the market anymore. It's making that question now of the reacceleration growth story a little bit more challenging.
That's part of the thing I found interesting about yesterday, about Citrini's research, which we've talked long about on this show, that it hit on this macro note of this feedback loop where you have companies that spend more on AI. AI has more spending, so it gets better. You can lay off more companies, and the pressure continues. AI gets better. You slimline, and then it creates an issue for labor markets. Have we thought enough about the macro anxiety? It seems every day in the market we're just picking across like tax advisors or whatever that might sell off. At what point does this trickle down into not just Wall Street, but become a Main Street problem?
Right, and again, we've seen some of that hiring actually cool in the AI disrupted areas. So this is already in the data. But to your point, like, it is not at a point where we're falling off a cliff. And I honestly question whether you're going to just, you know, switch over to some kind of app developer that you've never met who has no brand and give a lot of personal information to because it's a little bit cheaper.
Yeah, but unless you're doing it via your AI platform, unless like it's OpenAI rerouting to that app developer.
And again, this stuff is moving so quick, I'm not going to be sitting in this seat telling you that's going to be a possibility. But that is the fear, and markets always price the biggest fear. And funny enough, like the real risk trade right now is that we actually accelerate through this and that the markets actually kind of shrug this off. Some of the geopolitics come off, some of the angst with the tariffs come off, and the market actually melts up higher because when I look at option position, when I look at things about defensive hedging, it's really high right now. So the market's really set up for a pain trade, and that's usually not when we get the pain trade.
Good point. Michael, thank you so much for joining. That's Bloomberg macro strategist Michael Ball. Elsewhere in tech, big news a couple hours ago, Meta will buy billions of dollars in AMD chips over a 5-year stretch as the two firms deepen ties. Bloomberg Tech's Ed Ludlow joins us to explain the arrangement. So what is it, Ed?
Yeah, it's tens of billions of dollars for AMD, you know, and some limited evidence that they're bridging the gap with NVIDIA, the #1 player in high-performance compute systems. 6 gigawatts all told is impressive, right? It's large scale. It's equivalent to the output of 6 nuclear reactors, but likely to be multi-site and phased. And now, you know, we can basically get to a discussion around is it or is it not circular financing, because almost identical to the deal that AMD did with OpenAI, there is a mechanism for Meta to become a significant shareholder in AMD, 160 million shares in the form of warrants, but those vest against both operational and financial milestones in both directions. The long and short of it is that AMD, the distant #2 player in this market, has landed a really big deal with not a hyperscaler, because Meta is not a hyperscaler, but it does operate at a hyperscale when it comes to its own data center infrastructure.
So what do we know about details, Ed? I mean, on this deal and on the deal that Meta announced with NVIDIA last week, it seems that they're being incredibly vague and also using different terms like this is for a certain amount of gigawatts of compute. The deal with NVIDIA was for millions of chips. And I don't know how many chips you need for a gigawatt of compute. And I'm assuming that that changes as the chips develop. They're not giving us the financial terms either, just saying double-digit billions. They already paid that much for chips. So what do we know about details on these things?
Yeah, in the specific case of AMD and Meta, it seems to be largely focused on inference. In other words, running AI models as opposed to some large-scale operation to train them. That probably is why AMD's reaction in the market this morning, or in the pre-market, is such as it is, because AMD does have some performance that it can point to in its MI450 system, its latest generation system, for that use case. And it's where they've tried to sort of differentiate themselves. The scale is basically equivalent. A gigawatt of capacity requires a cluster of literally hundreds of thousands of GPUs. But the evolution of this for AMD is very similar to what NVIDIA went through. They don't just sell the chip anymore. They sell an integrated system. They own more of the content proportionately of the server. And so that's probably why the market's cheering this to the effect that it is, because for AMD, it is significant revenue. You know, double-digit billions. Is it tens of billions per gigawatt, or is it 10 billion per gigawatt? You know, that will also depend on the other value-add stuff that AMD is throwing in, CPU, networking, and other engineering services with it.
All right, Ed, we'll catch up with you more later. And, of course, your show kicks off at 11. Bloomberg Tech's Ed Ludlow. Home Depot comparable sales topped estimates on steady demand for home projects, but warned of mounting macroeconomic challenges. Bloomberg Markets correspondent Nora Melinda joins us. And let's get the numbers first, Nora. They beat, and I guess despite the warning, they continue to do better.
Yeah, I mean, if you took a look at the year-to-date basis, we do see that Home Depot shares are up roughly 10%. But today we are seeing a bit of a slump. They're down about 1.4% right now as we speak. This is all due to the outlook. I mean, this is also coming after Walmart, where people were concerned. But here in particular, we are seeing that we are still seeing that a lot of companies are keeping an eye on this stock in particular based off of the idea about the outlook. Apologies, we are in pre-market trading still, so I most misspoke. We do see the shares are higher, thank you, Matt, about 2.8% in the pre-market trade. But people are really still concerned about the macroeconomic environment. And that's what you're still seeing a lot of analysts that I've been speaking to talking about. They say there's still a lot of unknowns. So we do know that home improvement appetite has still remained quite steady. We know that mortgage rates have dipped, but there's still unknowns and uncertainties being what income growth. We're still waiting for that to be a bit more clear. We're also seeing for rates to come down and also tariffs. That's something that's been in focus so much. We know just on Friday, we had the Supreme Court striking down Donald Trump's sweeping global tariffs, but there's still a lot of uncertainty as to whether or not he's going to use other avenues to still implement tariffs. And that's something that we know tends to weigh on a lot of the companies that are related to home improvement, lumber. We also have its peer Lowe's reporting tomorrow. So there's a lot of scrutiny still. Some analysts saying that it's been about 3 years that we've been in this environment. And while this isn't necessarily Home Depot's fault, they need to find more creative ways to actually strategize how to best approach it.
Nora, thank you very much. Home Depot, again, reporting earnings this morning, shares moving higher. Some of the individual movers on our radar this morning also got earnings from Hims & Hers, issuing a weak outlook as traders assess uncertainty around the company's ability to sell copycat weight loss drugs. Those shares down nearly 2%.
Yeah,
7%. Jeez.
Novo Nordisk is reportedly, this according to Wall Street Journal, cutting Ozempic and Wegovy list prices by 50%. But that starts in January of 2027, the Journal says.
Yeah, so how does that help them?
I mean, who knows what's going to happen?
We're probably going to just breathe air and get GLP-1s by that point.
Yeah,
I mean,
it's
who even knows?
So far in the future that it really doesn't matter. And you can see the shares are down in the pre-market. Intel-backed Samba Nova raised its $350 million in a new funding round and introduced a chip that's designed to run as much as 5 times faster than rival processors.
And we're going to be speaking to the CEO, by the way, of Samba Nova, Rodrigo Leong. That's going to be happening next hour. Always an excellent conversation with Rodrigo.
Coming up, Dana Dioria talks about the bearish Citrini reports about a future where AI leads to double-digit unemployment in the U.S. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've immune the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, We are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Flutterwave by empowering our customers across all our segments?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get out of high interest. Look what's making headlines around the world. At his State of the Union address tonight, President Trump will argue this economy is finally his. But voters remain skeptical that the country is enjoying the greatest economy ever, while jobs grew by 130,000 last month and unemployment sits at only 4.3%. Prices remain elevated and continue to rise beyond the Fed's 2% target rate. Housing is in a tough spot, leaving affordability the real test ahead of the midterms. Warner Brothers Discovery says its board is reviewing a new higher takeover bid from Paramount Skydance, potentially topping the prior $30 a share offer. The media giant already agreed to sell Netflix for $27.75 a share. If Paramount's bid is deemed superior and they're for different assets, Netflix has 4 days to counter. For now, Warner Brothers is urging shareholders to back the Netflix agreement, which, remember, would allow Warner Brothers to sell off its cable assets separately. Arini Capital Management says AI disruption fears are pushing up borrowing costs for heavily indebted software companies and will drive significant defaults and credit market dislocation. The firm's founder and CIO spoke to Bloomberg Television.
I think it's going to be likely a long cycle. I think it's going to take time for us to see what AI end up disrupting or not. Clearly, there will be businesses that can defend their business models, that can defend their margins, that can maybe even defend their growth. But it's also fair to say that there will be significant disruption from AI, and we will not see it next week. We will not see it next month. I think it's a theme that will play out over the next few years.
Missives for software coming from everywhere. The Citrini report yesterday spooked software and payment stocks, laying out a feedback loop with no natural break. The authors noted that as AI got better and cheaper in this world that they're imagining, companies laid off workers, then used the savings to buy more AI capability, which let them lay off more workers. Displaced workers then spent less, and companies that sell things to consumers sold fewer to them, weakening, and invested more in AI to protect margins. Let's bring in eVestnet Co-Chief Investment Officer Dana D'Auria. Dana, look, it was the report that caught Wall Street by storm yesterday. This idea of a negative feedback loop where things like central bank policy don't fix it, where spending and AI leads to more people being fired, leads to better margins, leads to more spending and more people being fired. I wonder to you, this world that the report laid out, how realistic does it seem to you?
I think it's a scenario. I mean, certainly it sort of paints a picture that we're all standing on the precipice today of a disaster. And so, if you really read that report, what's going on in the short run now, this question around, software and SaaS and, should those stocks be discounted, I think is pretty, if it were just limited to that, I think, we'd kind of all breathe a sigh of relief. I think if you worry about that Citrini report, you're thinking that the entire economy is at risk and, policy needs to be thinking about that, at least now, right, as opposed to in a few years or a couple of years that the report suggests. So, how realistic is it? It's certainly a scenario. I think it's, the good thing is that you have reports like that coming out now to sort of say, hey, can we get in front of this? And the question becomes, can we get in front of this? How realistic is, some of these success of AI kind of completely replacing? I mean, I'll speak real quickly to sort of a short run question here where you're seeing kind of these incumbent SaaS companies and other sectors get hit. It kind of belies that those companies themselves will in fact, as this report said, will in fact invest heavily in AI and sort of defend their moats. So I think, some of the reaction that you're seeing today doesn't necessarily even match with what this long run potential doomsday scenario is.
So we see, Dana, stocks selling off in some of the software and payment companies, IBM notably, a big sell-off yesterday. But I wonder if you see spreads blowing out, because I haven't heard much about that lately. And obviously, these software companies are heavily indebted.
Yeah, well, and you have to kind of split up what companies we're talking about here, right? I mean, for the longest time now, we've had this AI CapEx cycle concern, which is obviously big companies with very strong balance sheets, but increasingly becoming indebted to sort of fund AI. Then you have, sort of, I think where your question was more related, which is smaller SaaS companies that have debt on the books and therefore have to be re-rated at some point. I think there's different answers to those questions, but they are to a certain extent getting kind of melded together. Again, I think, the latter question kind of sits in more of a short run area. And I think we really haven't figured out whether, at least in the short run, right? And let's put aside the question of the long run doomsday, these companies will actually leverage AI to do better, to increase their moat, to make it increasingly hard for disruptors to really overtake because they have bigger budgets and bigger balance sheets to do that. I mean, I think when you think about disruption, I would look at just where the big money is going in, right? Again, and this is where big tech comes back into it. They're putting in such a level of CapEx into AI. There's a profit pool they're expecting, to tap into. So I worry less about, smaller parties kind of building the next AI tool that's going to disrupt a software company. I think that software company can probably step in, has the data, has the relationships, has the wherewithal to build that same thing. But I do think over time, these big investments in AI are where you have to look for disruption.
I do just wonder, again, going back to credit markets, because credit spreads, to Matt's point, have been incredibly well behaved. I've seen both in the Citrini report and others have pointed to a parallel of 2015, where the energy sector gets a huge downgrade driven by oil, massive losses. And that started its own kind of credit cycle. Dana, I wonder if software possesses the capability to create another credit cycle. It's something Jamie Dimon had talked about as well, that he's concerned we're looking at something like 2008. Do you think this credit market, that tight spreads, will eventually come to an end, maybe prompted by software?
Well, you do have to go through, obviously, the capital structure first, right? So the equity holders have to kind of get wiped out before you start worrying about, the bondholders. And so the question then becomes, how deep does the loss go? Again, back to, are these companies able to actually withstand these pressures, use AI to their own benefit in the case, to the extent that this really is disruptive in the immediate term? And so I can't say no, that wouldn't happen, but I don't think there's immediate evidence that that's going to happen, because I think, again, the structure being was what it is, and where retail investors are going to see this first and foremost is on the equity side, and they obviously are. But what you're seeing happening to these PE companies, the prices of these publicly traded PE companies, which have just cratered in the last few days, does suggest some concern that, debt they're holding, private credit debt, for example, on some of these, and a lot of it is software focused, or at least to a certain extent software focused, that is where the concern is coming from. Yep. Yeah, the market is definitely suggesting to a certain extent that there could be a follow-on problem.
That's right. I mean, the private equity companies that back these software as a service firms have to be wiped out before the private credit companies that lent them money are affected. Dana, great having you on. We're going to keep you with us. Investment Co-Chief Investment Officer Dana D'Auria. Coming up, more on the AI outlook with Samba Nova CEO Rodrigo Lang. We'll talk to him about his tie-up with Intel. This is Bloomberg Open Interest.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Up to the minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Quick check on futures after the drop in the cash trade yesterday. We're looking at a little bit of a rebound, although it looks like that's turned around as we get closer to the opening bell. That's coming up in less than 4 minutes' time. Chicago Fed President Austin Goolsbee joins the show as trading gets underway. Stay with us for that. This is Bloomberg Open Interest.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We are moments away from the start of trading on what could be a little bit of a redemption day for markets after the big drop yesterday, more than 1% on the S&P. We did see futures higher. Now you can see we're moving lower as we get closer to the open. NASDAQ futures are still higher, although only about 1 or 0.2%. You hear the opening bell on the New York Stock Exchange. It looks like a guy from the Lower East Side is ringing the opening bell.
Cool swag.
There. Yeah. Cool. He's got a red, like an Eileen Gu China jacket on. Then you go down to the NASDAQ, and you have ASP Isotopes ringing the opening bell. So not a lot of action in terms of bell ringers, but we do have a lot of action in terms of the market because we had so much momentum in futures heading up to this moment, and now it's dropped away.
It's true. I mean, there's just a lot of anxiety in this market right now. I think that's maybe even an understatement of the things that sell off. But we do have a gain this morning, a rebound. AMD having a multi-billion-dollar partnership with Meta. They're going to use it to help build their 6-gigawatt factory. So AMD shares go up 7.9%. IBM, a rebound, but I mean, Matt, like, what's 1.4% after it sees its worst drop in 25 years yesterday, all because of a new tool that Anthropic released. I mean, it is every day what is going to get hit by some AI fear, and the hits are deep and hard.
Yeah, it seems like Anthropic is killing stocks a few times a week. And by the way, Anthropic right now is holding a conference, a presentation on its COBOL tool. That's the one that investors worried yesterday could kill IBM. Yeah. So we're going to get headlines across from Anthropic, as a lot of people on the street will be paying attention to the call. Home Depot reported strong earnings on a steady demand for housing supplies, and that's why the shares are up 3%. But the company gave a cautionary outlook similar to Walmart, highlighting the challenging macroeconomic environment. And if you read that Citrini research piece, you kind of got spooked on the mortgage picture as well. Speaking of economics, let's get over to Washington, D.C. right now, where Bloomberg's Michael McKee is sitting down with a special guest. He's got the president of the Chicago Fed with him, and he'll, I'm sure, be asking Austin Goolsbee about all of the AI fear in these markets. Let's hand it over to Mike.
तो ये क्रूड ऑयल देखो डे लो के सपोर्ट पे आ रहा है. डायरेक्टली बाय मत करना, ठीक है, थोड़ा वेट करेंगे, देखते हैं प्राइस एक्शन कैसा बनता है. नहीं तो जैसा मैंने बताया, पॉसिबल है ये जितने भी सपोर्ट पे मार्केट शिफ्ट करते जा रहा है ऊपर, ये सारे एक साथ ब्रेक करेंगे, बड़ा फॉल ना हो जाए. सो वी नीड टू वेट. यहाँ पर ऐसा नहीं कि एरो लगा रखा है तो डायरेक्टली बाय करना है. आई विल मेक द लेवल, ठीक है, जैसा नेचुरल गैस में लगाया है, क्रूड ऑयल में भी लगा दूंगा अगर सपोर्ट वहाँ पर बाइंग बनेगी तब, ठीक है, नहीं बनेगी तो अननेसेसरी बाय मत करना. देखना पड़ेगा प्राइस किस तरह से आ रहा है और किस तरह से वहाँ पर कैंडल फॉर्म कर रहा है. स्टिल ऊपर पॉइंट ऑफ इंटरेस्ट इंटैक्ट है. नीचे आ जाता सपोर्ट पे तो वेल एंड गुड ही था. नीचे हमारा जो मेजर सपोर्ट था 5837, 3 दिन से रुके हुए उस लेवल पे नहीं पहुंचा. अभी भी 4 दिन हो गए ऑलमोस्ट. यूएस मार्केट भी ओपन हो गया. 8:30 पर एक डेटा है, ध्यान रखेंगे उसका, कंज्यूमर कॉन्फिडेंस और मैन्युफैक्चरिंग इंडेक्स का डेटा. फिफ्टीन मिनट के चार्ट के अकॉर्डिंग ही सपोर्ट रेजिस्टेंस लगा रखे हैं क्रूड ऑयल में. 30 मिनट का चार्ट जरूर है बट लेवल्स आ रहे हैं इस पर द 15 मिनट टाइम फ्रेम. गोल्ड ठीक ठाक गिर गया है। गुड, ठीक है, थोड़ा सा नीचे और आए गोल्ड 1 आवर टाइम फ्रेम पे 5030 20 इस रेंज में अच्छा बाइंग लेवल है। अभी भी दूरी है, 5090 लो बनाया है, 5030 20 के अराउंड इम्पोर्टेंट है 1 आवर टाइम फ्रेम के अकॉर्डिंग। सिल्वर स्टिल स्टडी, फॉरेक्स में तो स्टडी है अभी भी रेंज बाउंड। ओवरऑल देखोगे ट्रेड कम मिल रहे हैं आजकल, बट जो भी मिल रहे हैं ठीक ही मिल रहे हैं, लाइक रिस्क रिवॉर्ड बेसिस पे, एंड प्रोबेबिलिटी इज वेरी हाई। रिसेंट लेवल में पिछले 2 वीक्स में देखोगे एक ही एसएल गया है, दैट इज ऑन क्रूड ऑयल, जो सेलिंग का ट्रेड था उसके बाद ब्रेकआउट हो गया था। आफ्टर दैट अभी तक कोई एसएल गया नहीं है, ना क्रूड में ना नेचुरल गैस में। Cook says Fed may not be able to counter AI-driven unemployment.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Bit of a quiet start to the trading day on Wall Street on this Tuesday morning. That is the sound of the opening bell from the floor of the New York Stock Exchange. And at the open, it is kind of quiet. The S&P 500, little changed. 6,800 is the S&P level. The Dow Jones Industrial Average opens higher by almost 0.1%, a gain of about 10 points. And the NASDAQ Composite opens little change to the upside as well, up about 10 points there as well. We'll get to what's moving the market in a moment, but we are less than 12 hours away from the first State of the Union address of President Donald Trump's second term. For House Majority Leader Steve Scalise,
it's going to be a real sharp focus on exactly what the president has been doing, working with Congress to make life more affordable for working families. And that work also has to remind people just where they started during the Biden years.
House Republican leader Steve Scalise appeared on CBS Mornings. We get more from Bloomberg Deputy D.C. Bureau Chief Laura Davison.
The 2 issues dominating the headlines right now are, 1, tariffs. How does he address that? Does he lay out any more detailed plans for how he's going to proceed after the Supreme Court struck down his tariff plan last week?
Bloomberg's Laura Davison reports the other key issue will be Iran. Politico is reporting Secretary of State Marco Rubio will brief top lawmakers on the situation there this afternoon. Here's White House spokeswoman Caroline Leavitt.
You will hear him talk about the threats that remain abroad, but what the United States is doing to ensure that not only America is the safest country in the world, but remains the strongest country in the world.
Press Secretary Caroline Leavitt at the White House this morning. Democrats are turning to Virginia's new governor, Abigail Spanberger, to deliver their rebuttal tonight. Spanberger's affordability-focused campaign led to a double-digit victory and flipped a Republican-held office last November in Virginia. Our coverage of the State of the Union begins tonight at 8 on a special edition of Balance of Power with Joe Matthew and Kaylee Lines. You can catch it on Bloomberg Radio and Television and at Bloomberg.com/videos. Today's show host Savannah Guthrie is hoping to put new attention on the search for her mother, Nancy. Now into day 24, she is offering $1 million reward.
Someone out there knows something that can bring her home. Somebody knows. And we are begging you to please come forward now.
Savannah Guthrie announced the new award in an Instagram post this morning. The FBI is already offering $100,000 for Nancy Guthrie's return. An additional $102,500 is being offered through Tucson, Arizona Crime Stoppers. Today marks 4 years since Russia's full-scale invasion of Ukraine. NATO Secretary General Mark Rutte held an observance at the alliance headquarters in Brussels this morning.
NATO stood with Ukraine from the beginning. We stand with you today, and we will stand with you throughout the challenges ahead.
That's NATO's Mark Rutte. Other European leaders are in Kiev today showing support for President Volodymyr Zelensky with U.S.-led peace talks at a standstill. Back in the U.S., the Northeast dig-out is underway.
We're just doing a little cleanup stuff with the snowblower because we got a really large truck and some of these tight driveways are hard.
The guys in Norwich, Connecticut, some parts of that state got 2.5 feet from the late February blizzard, but it's not back to normal yet. More than 11,000 flights are canceled through today. About 500,000 power customers are still in the dark, and there's the possibility for more snow in the forecast later this week into the middle part of next week. Back to the markets, a lot's going on there this morning. We're watching shares of Advanced Micro Devices. They are up nearly 7% at the open. The chipmaker says Meta Platforms will deploy 6 gigawatts worth of data centers based on its processors over the next 5 years, starting this summer. We get more from Bloomberg Tech host Ed Ludlow.
What is interesting about this is, in particular, is it's AMD's kind of latest generation accelerator-based system, the MI450. And what they're really talking up is that you basically say to Meta, okay, let's do this together for 5 years. Your engineers come and work with our engineers, and you can help us install the systems. And that kind of projects quite a lot of confidence for the market toward AMD in particular.
It's Bloomberg's Ed Ludlow reporting. We're also watching shares of Paramount Skydance. They're little change to the upside this morning, but Warner Brothers Discovery says it has received the studio's latest takeover offer. The terms aren't specified, but Bloomberg News has reported it is higher than Paramount's earlier $30 a share all-cash proposal. Paramount rival Netflix, those shares are down nearly 1%. As President Trump looks to refine his trade agenda following the Supreme Court's decision last week, the European Union thinks the U.S. will streamline its broad tariffs on steel and aluminum and reduce the amount of so-called derivative products subject to 50% duties. Sources tell Bloomberg News the EU's trade chief Maros Sefcovic has been in contact with the U.S. multiple times in recent days and briefed U.S. ambassadors about this yesterday. That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
The news doesn't stop on the weekends.
Context changes constantly. And now Bloomberg is the place to stay on top of it all.
Hi, I'm David Gura. Join us every Saturday and Sunday for the new Bloomberg This Weekend.
I'm Christina Ruffini. We'll bring you the latest headlines, in-depth analysis, and big interviews. All the stories that hit home on your days off. And I'm Lisa Mateo. Watch it.
Announcing a big deal with Anthropic to intertwine not only using Anthropic's platform, for example, itself to make itself more efficient, but also then to be able that you can use QuickBooks, you can be able to use your tax AI future within Anthropic and plug in automatically to the Intuit offerings. All of this is just showing that Intuit then bounces on the day. Remember, this is the worst performing stock on the S&P 500 so far this year. So there's a software name that has been beaten up by AI and now is collaborating with AI. You're seeing them name check LegalZoom, shares extending 6% on the fact that they're going to be using and interweaving these companies within their offerings. You get LegalZoom, not only them, but also you're hearing, well, take a check on what's happened. DocuSign, Figma shares are up almost 9%. All these companies get name checked, sort of have a bit of a reprieve. But the question mark still remains. How much is this going to be Anthropic working within an enterprise to help you go between all of the software you already have, the Microsoft, the PowerPoints, the Excels, or at some point, do you no longer need these software offerings either? That's the question mark that many investors are trying to do right now.
And I think it's such an important one. And there's this great irony, too. By the way, I was listening to the presentation. They didn't even need to talk about partnerships. They were like, oh, Spotify did something, and it really made their employees more efficient. And then Spotify is up like a rocket. It's crazy how sensitive it is. But Caroline, is there a sense that the very companies who are at risk of being disrupted are the ones that are throwing Anthropic money, that they're kind of funding their own demise?
Do you mean more the ones like the Amazons and the companies? They're the ones that are giving the chunk of change to Anthropic. It's more these partnerships that are being struck.
Yeah, I was going to say Intuit feels like a perfect poster child where AI could easily disrupt a lot of what they do, yet they're giving them money, and it's a complete...
Are they giving them money? I say the question mark is whether they're giving them access.
Okay.
Giving them their customer
Well, because
base.
I was saying this to Matt, if all of a sudden Intuit, and I know this is so heady and impossible to answer, but if Intuit, let's say they are a customer, and then Claude replaces them, then who's the customer for Claude? What happens to the business model if they do start to disrupt all these software companies that had been partnering with them to begin with?
I think you're basically doing the work of all the financial analysts out there at the moment. And I might add that there's also a plugin for equity research that's being announced today. Look, this is the great question mark at the moment, and why Citrini Research yesterday upended so many parts of the market, why everyone's trying to understand whether AI doom is AI gloom, or whether or not actually AI does give us the productivity that we need, and companies can rework themselves from within, can partner from within, and can make themselves deeply relevant. How important is CRM? How important is Salesforce? And the fact that it's already got a lock-in with its customers? And are you therefore just going to use Claude and Anthropic to interweave with the platforms that you already have? Or at some point you're going to say, look, I could potentially build this software myself. Just the threat of that might mean that these companies are going to have to rework what their pricing is.
Right.
And then what does that mean for the future revenue flows of these businesses?
That's a great point. It's only the threat that's needed, right? It's only a few people that have to believe this in order to give the customer more bargaining power with, say, a Salesforce.
Or ruin the credit of these companies because they start selling off, and then the cost of capital gets more expensive, which is the point Irini made.
But one of the many questions that I have on this is AI really far enough along? Is the technology that advanced that it could be used to make a Salesforce clone that would work without bugs and be useful to a small or medium-sized company?
Well, I think this is why we're suddenly hearing from Dario Amodei with the adolescence of technology in his piece that he wrote in January, why you're getting Matt Schumer's piece being so well read about there's something big happening. People are suddenly thinking that the general curve at which generative AI was improving has suddenly spiked. It's basically gone vertical, is what many people are trying to say.
The hype has gone vertical for sure.
It certainly has, and the volatility in the market has gone vertical on the back of it. How much have we started to see agentic AI actually really work? How much we managed to get rid of some of the details that were made up in the past? The idea that these generally you couldn't depend, that you spent about half the time working and productivity gains, you spent again reworking the work that you were given. Claude is now today, and Anthropic more broadly, are trying to say this is now dependable. And you can intertwine us within your enterprise, and it's a good decision for your business. We'll see whether they can sign more clients.
And we'll see what other names they name drop and what the reaction of the stock will be. Caroline, gosh, what a great show it's going to be today, as it is every day. Bloomberg Tech, 11 a.m., which, of course, Caroline co-anchors. Coming up in the next hour, speaking of AI, Samba Nova CEO Rodrigo Leong discusses his company's collaboration with Intel. Stay with us for that. That will happen at 10:15 a.m. New York time. You are watching Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are indeed getting a rebound from yesterday's sell-off. You can see the S&P here up 0.2%, the Nasdaq up 0.5%. Coming up in the next hour, Goldman Sachs' Catherine Bordelmay joins us on her bullishness in the industrial sector. Obviously, we're going to ask her about software and tech as well. And then we're going to hone in on AI with SambaNova CEO Rodrigo Lang joins us, as well as the Baker Hughes CEO on oil. This is Bloomberg Open Interest.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. A new plea from the Guthries.
We still believe in a miracle.
The Today Show's Savannah Guthrie posted a new video last hour offering a reward of up to $1 million from the family for their 84-year-old mother's recovery. As the search enters its 24th day, her tearful daughter acknowledges
she may be lost. She may already be gone. She may have already gone home to the Lord that she loves and is dancing in heaven with her mom and her dad and with her beloved brother Pierce and with our daddy.
People in the Northeast are still digging out from a fierce winter snowstorm. Crews in Philadelphia clearing streets and sidewalks from more than a foot of snow. This man helped a neighbor in Norwich, Connecticut.
We're just doing a little cleanup stuff with the snowblower because we got a really large truck and some of these tight driveways are hard.
Hardest hit, Providence, Rhode Island, which got about 3 feet of snow. WPRI TV's Kristen Burnell is there.
The only sounds out here this morning are plows and shovels. 195 is clear, but many side streets are still buried this morning, making it nearly impossible to get around the capital city.
President Trump is prepping for his address to a joint session of Congress. Correspondent Nancy Cordes is at the White House.
About 35 million Americans watch the State of the Union every year. So this one speech might be President Trump's biggest chance to shape the Republican message ahead of this year's midterm elections, where control of the House is going to be up for grabs. So you're going to hear a lot tonight about the economy, about the stock market going up, gas prices going down.
A suspect's now been charged in the death of a young woman aboard a cruise ship. Correspondent Christopher Cruz has the details.
Court documents obtained by CBS News show a 16-year-old stepbrother of Anna Kepner has been charged with homicide. The 18-year-old Kepner was on a Caribbean cruise with her father, stepmother, and 3 step-siblings on the Carnival Horizon. Her body was found by a housekeeper under the bed in her room. A law enforcement source says investigators believe Kepner may have been strangled during a fight and that the suspect may have drunk alcohol.
Ford is recalling 413,000 SUVs because the steering may give out. WWJ's Jeff Gilbert.
There have been 2 crashes, but no injuries connected to the issue with 2017 through 19 Ford Explorers. Corrosion can cause the rear suspension toe link to fracture. Owners would notice a loud noise or unusual handling.
The Dow is up 401 points in early trading. This is CBS News. Law enforcement officials say they've arrested a 12-year-old girl who was planning a mass shooting at her school near Orlando.
Investigators say a fellow student discovered the girl's plan online.
This was a well-thought-out plan.
Volusia County, Florida Sheriff Mike Chitwood.
It talks about where to hide in a ditch. It talks about how to bring the guns into the school. It talks about who to target.
In all, Chitwood says there were 13 steps on how she planned to carry out her plot at her middle school in DeLand, shooting herself when she was done. The plan also identifies students she said had been bullying her. The girl faces several charges, including written threats to kill. Peter King, CBS News, Orlando.
Team USA partied like the gold medal champs they are in Miami. The beer and bubbly flowed freely at 11 nightclub, where the Olympic winners partied in red, white, and blue outfits accessorized with their new gold hardware. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, And we're streaming live on Bloomberg.com, so check us out there. To Scarlett Fu and Paul Sweeney, this is the Bloomberg Intelligence Program. Coming up, we're going to check in with Dana Peterson, chief economist at the Conference Board. We did get some consumer confidence data. John Tucker's going to bring it to you in just a moment. Ed Ludlow, B-Tech co-anchor, talking about Meta spending billions of dollars on AMD gear and taking an potential equity stake in AMD. Wow, that's a big deal. Julia Beal, chief market strategist and portfolio manager, Kane Anderson Rudd, and get her thoughts on these markets. It is State of the Union tonight. We're going to check in with Henrietta Triz, managing partner at Veda Partners, get her thoughts on what President Trump may try to get across in his message this evening. And Michael Shaw, Bloomberg Intelligence senior pharma biotech analyst, talked to us about some more news on Novo slashing U.S. list prices for Wegovy and Ozempic next year. So that's a good news for folks on those weight loss drugs. We got a lot coming up over the next couple hours. Let's kick it off with John Tucker and a Bloomberg Business Flash. John.
All right, guys. This report being brought to you by IBKR. In 2025, IBKR retail clients averaged a 19.2% return, beating the S&P 500 17.9%. The broker you choose matters. Visit ibkr.com/2025. Well, yeah, we're data dependent, so let's start there real quick. Consumer confidence from the Conference Board. Pretty good. 91.2, the expectation 87.1, and we're going to break that down in just a moment. Most active stocks this morning, you mentioned it, Paul. Advanced Micro Devices right now up just about 7%. This deal's so circular, I'm getting dizzy, but Christine's going to break it down a little more just in a second here. Wednesday, NVIDIA reporting after the close of regular trading. Ahead of that, shares right now, they're down just about 0.5%. After yesterday's market sell-off, Amanda Agati at PNC Bank looking for bargains.
To the extent that we see a little bit more of a slide here, I think it's a real opportunity for investors to pick up some exposures here on a relatively cheaper basis.
And when does it end? Warner Brothers Discovery considering a new takeover proposal from Paramount, a Skydance. This morning, the S&P 500, 7 points higher, 68.46 on the index. The Dow up 244 points. NASDAQ 100 right now, 99 points higher. I'd be nervous, I think, to get in one of these. Waymo is going to start offering commercial robo-taxi service in the three biggest cities in Texas. Rollout of rides, no safety driver, starts today in Houston, Dallas, San Antonio. And then, of course, they suffered a blow last week in New York when Governor Hochul here said, outside of New York City, not just yet. Okay. Right. Anyway, we checked the
They ran over a
markets.
cat in San Francisco, and that created a lot of consternation.
Oh, boy.
Among the cat people?
The neighborhood where the cat was irregular.
Well, yeah, no, I can see that.
cat, yeah.
I like cats. Don't run them over. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett,
And how would
Paul
it do it
Sweeney?
in the snow? You couldn't
I have
see the
no
lines.
idea. No idea.
This
But
is all just coming to
I
me
get in a
right
car every morning with a dude I've never met before in my life. How's it different getting in a robo-taxi? That's
You
kind
could
of what
talk to the dude.
Yeah, well, sometimes.
Paul?
Yeah, yeah, me, exactly.
That ain't happening.
All right, JT, thank you so much. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live at Bloomberg.com/video. Let's see what's happening out there in the world with stocks are moving higher. Let's take a look at some of the movers here today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at?
Let's take a look at AMD, Paul. Big news today, of course, given that Meta deal. And of course, that is doing well for its shares. Ticker AMD, those shares are up now more than 7%, so extending the opening gains that we've already seen. And so the deal is this. Meta will buy AMD chips and computers designed to run their artificial intelligence models over a 5-year stretch beginning in the second half of 2026. There's also a share purchase component of this deal. And the series of transactions, according to AMD CEO Lisa Su, will be worth, quote, double-digit billions of dollars. So that's going to be a big deal for AMD, being reflected in their shares. Now, if there were any concerns over circular funding here, that is not evident because it seems like markets really just want a little bit of a break from the tech downer narrative that we've been dealing with the last couple of weeks. And so, and again, for Meta, this is part of their push to aggressively front load computing capacity per CEO Mark Zuckerberg.
And I guess the circular funding story is no longer so concentrated to just NVIDIA. Now it's expanded.
Well, here's the thing I don't get. I mean, in this U.S. economy, in this U.S. stock market, Company A does not buy a stake in Company B.
They just make investments in each other.
I mean, they don't take equity stakes. But we see that in Asia. We see that in lots of other economies, but not here. But that's changing.
Does that become messier, you think?
I don't like it. There's a reason we don't do it here. You don't buy stakes in your competitors, your customers, your things like that. I'm not sure it's good governance, but we'll see. But again, other parts of the world, they do it. So here we go.
There you go.
All right,
what's next?
Let's take a look at Warner Brothers. Again, in the news, given the latest developments there. So ticker WBD, those shares are up just 0.7%, so extending small gains as well. And so the latest is that, yes, Warner Brothers is indeed considering a new takeover proposal from Paramount Skydance. They didn't specify what the new terms are, but we did report that it was going to be higher than the $30 a share that Paramount offered previously. And so the kicker is that if Warner Brothers deems this superior to the one that it has already accepted from Netflix, then Netflix will have 4 days to make a counter offers. Just a reminder, Netflix is still offering $27.75 a share for Warner Brothers Studios and streaming businesses, and they're still looking for a spinoff of some of its other businesses there. So it's not going to be the whole company. So we'll see how that's going to be received by the board and investors.
This feels like the slowest moving M&A deal ever.
Yeah, I was telling Tom Keene earlier on
really
surveillance, there's no juice around it, and there should be a ton of juice for these juicy companies, I think, but it was ever running this process for Warner Brothers Discovery. They're just not into the whole, let's have some fun with it,
It's very deliberate.
Exactly, very deliberate.
What are the odds we're going to still be talking about this 2027?
But I think, Netflix, if Netflix really wants it, they have a much better capital position to do it. So we'll see. Okay, one more.
All right, let's talk about Eli Lilly. So ticker LLY. Those shares not doing too well this morning, down 1.2%. Though it was down a lot earlier, about 3%. So pairing some of those opening losses. And really the news comes from its rival, Novo Nordisk, saying that it will slash its U.S. list prices for Wegovy and Ozempic next year by as much as 50%. And so the read across for Lilly is initially negative. Though Citigroup analyst Jeff Meacham saying that the price reduction that could bring back price war concerns, but at the same time, the main beneficiaries of this are likely going to be people with high deductible plans or those who pay co-insurance, which really represents a relatively small proportion of new starts. But, bad for Lilly stocks today. Let's see what they're going to answer back with.
All right, good stuff. Christina Aquino, thank you so much. She is our Bloomberg Managing Editor for Markets Live. And for more conversations like what you just heard, be sure to subscribe to our Stock Movers Reports, where we give you 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to it on Apple Podcasts, Spotify, or anywhere you listen. All right, John Tucker gave us the economic data about consumer confidence rising in the month of February, more than expected, on upbeat prospects for the economy, incomes, and job market. Dana Peterson is chief economist at the Conference Board and joins us now. So Dana, we got a read of 91.2. Economists were looking for an increase to 87.1. And we did get a revision higher as well for the preceding month. It all sounds pretty good, but then when I look at it on a chart, we're kind of bumping along these pretty low levels.
We are. From our perspective, we only saw a little bit of an uptick in confidence. And a lot of that was focused on people being a little less morose about the labor market currently, as well as expectations for business conditions 6 months forward, as well as the labor market and incomes.
So this data was taken before we had the Supreme Court ruling, and then President Trump coming back with some more tariffs. To what extent historically have tariffs kind of impacted consumer confidence? What has your data shown?
Well, I can just look at the data over the last 12 months, and basically as soon as tariffs were announced or mentioned, we saw consumer confidence start to fall. And over the last 12 to 13 months, we've seen a trend downward in confidence, again, because consumers do understand that tariffs can lead to inflation and higher prices for them.
Talk a little bit about the expectations and what that measure really captures, because there's so much that's uncertainty, including what we're just discussing, tariffs and how they, the legality of it, how it all plays out.
Well, I mean, that's the thing. It's like consumers didn't have the benefit of IEEPA being struck down. So at that point, when we did take the survey, consumers were still anticipating that the worst of the tariffs have not happened and that there's still going to be an uptick in inflation. And indeed, the inflation expectations measure was still very elevated in the month. Nonetheless, consumers just seem to be just a little bit more optimistic that in the future, 6 months, 12 months from now, things will be somewhat better. We'll be over the tariffs, and that will probably uh, perhaps get back to some sort of normalcy.
Dana Peterson, thanks so much. We appreciate it. Dana Peterson, Chief Economist for the Conference Board, giving us some of the lowdown there. Again, the headline number, Conference Board consumer confidence came in at 91.2. The consensus was 87.1, so beat consensus. The revision from last period was a big revision upward to 89. So again, a bump up from last period and better than expectations. But still, if you kind of eyeball the last 4 or 5 years, consumer confidence, that number needs to be like around 100 plus. And we're sitting here at 91 and change, so still lower than the historical average.
Absolutely. It's really notable that if you chart it out, it doesn't look like, we've made a lot of progress. And in fact, it's kind of bumping along the lows that we saw in April of 2025, which of course was right after the president announced his tariffs, the first go round. And then before that, you go back to 2020 when consumer confidence was definitely in the doghouse because of COVID.
Yeah, it'll be really interesting. I mean, tonight's going to be really interesting with the State of the Union, or State of the Onion, as Tom Keene refers to it. President Trump saying, hey, it's going to be a long speech because he has a lot to talk about.
And he might very well go off script, which he's
may well
want to
go
do.
off script, but it'll be interesting to see how he positions tariffs now in a post-Supreme Court ruling world. But from all his rhetoric since then, he's been doubling down on tariffs. So that
Right, he went from 10% to 15%.
Yep.
We'll see if that changes again this time around.
Absolutely. Looking at the markets here, we got a little bit of a green on the screen here today. The S&P up 14 points. That's 0.2%. The Dow's up about 300 points, 0.6%. And the NASDAQ is up about 82 points. That is 0.3%. We'll have more coming up. This is Bloomberg. Good morning.
ओके गाइस, ये क्रूड ऑयल में देखो एक बाइंग का ट्रेड यहाँ पर प्लान किया हुआ है। ध्यान रखना इसमें ज़्यादा बड़ा ऐसा लेना मत। रीज़न क्या है? रीज़न वेरी सिंपल, ये भी सपोर्ट है, ये भी सपोर्ट है नीचे, और ये भी सपोर्ट है। तो लॉजिकली देखो इतने पास पास सपोर्ट बनने नहीं चाहिए थे, बड़े बन गए हैं। तो मुझे ऐसा पॉसिबिलिटी लग रहा है कि अगर एक एसएल गया तो हो सकता है नंबर लग जाए नीचे तक पूरा प्राइस का। तो एक तो रेंज है बहुत ही स्मॉल सी है 85 पॉइंट की, ऊपर पॉइंट ऑफ इंटरेस्ट निकला नहीं है, उसके ऊपर जब तक जाएगा नहीं बड़ा बुलिश मार्केट अभी हो नहीं सकता। सो इन दैट केस देखो यहाँ पर कम ही क्वांटिटी से ट्रेड करना, फिर रिपीट कर रहा हूँ, ठीक है। ये क्रूड ऑयल के इस लेवल पे कम क्वांटिटी करना, अगर इसमें एसएल जाता है तो निकलेंगे। नीचे एक और सपोर्ट है, बहुत पास पास सपोर्ट है, ज़्यादा डिफरेंस नहीं है, ठीक है। लेवल पे देखोगे ज़्यादा डिफरेंस नहीं है पॉइंट वाइज, जिस तरह का प्राइस एक्शन बना हुआ है। तो एक पॉसिबिलिटी ये बनती है कि प्राइस दोनों जगह पे आके लिक्विडिटी ले ले, ऊपर से और नीचे से, और फिर ऊपर जाए। मतलब इसका भी एसएल हिट कर दे, नीचे से लिक्विडिटी ले और ऊपर चला जाए, तो यहाँ से भी सपोर्ट हो जाएगा और ये फेक ब्रेकडाउन हो जाएगा। सो एक ये पॉसिबिलिटी यहाँ पर बन सकती है, विच इज़ वेरी हाई। सो यहाँ पर अगर ले रहे हो तो क्वांटिटी बहुत कम रखना, नहीं तो एक सेफ अगर प्ले करना चाह रहे हो आई विल सजेस्ट, ठीक है। नीचे वाले लेवल पे आएगा और यहाँ पर प्राइस एक्शन बनेगा तो सपोर्ट पे तब बाइंग करने में थोड़ा सा, एक तो रिस्क रिवॉर्ड बेटर हो जाएगा इस केस में देखोगे यहाँ पर अगर, तो रिस्क रिवॉर्ड थोड़ा सा ज़्यादा ठीक है कंपेयर टू दिस। एंड उस केस में ये दोनों ही साइड पे मार्केट लिक्विडिटी एक साथ ले लेगा, तो वो थोड़ा सा ज़्यादा सेफ रहेगा। बट इट माइट पॉसिबल कि प्राइस यहाँ से नीचे आए ना, इसी लेवल पे रुक जाए और फिर इसी लेवल पे घूमता रहे, उस केस में हो सकता है एक छोटी सी अपॉर्चुनिटी मिस हो सकती है, ठीक है। क्योंकि यहाँ पर भी कोई बहुत बड़ा टारगेट नहीं है, अगर मैं पॉइंट ऑफ इंटरेस्ट तक भी देखूँ तो सिर्फ 90 पॉइंट ही है फ्यूचर में। सो इट इज़ अ सपोर्ट, प्राइस ऑन द सपोर्ट, सेफ प्ले करना है तो थोड़ा सा लोअर एंड का वेट कर सकते हो इस एरिया के अराउंड, ठीक है, इन क्रूड ऑयल। और अगर यहीं से प्लान कर रहे हो बाइंग का फ्रॉम दिस पर्टिकुलर जोन, थोड़ी क्वांटिटी कम रखना, ठीक है। एसएल जाएगा तो उस छोटे से क्वांटिटी में निकल जाना, फिर लोअर एंड से अगर बाइंग आती है ठीक है, जरूरी नहीं है आएगी, आती है तो तब हम बाई करेंगे, इवन दो इट इज़ ऑल्सो सपोर्ट में, फिर रिपीट कर रहा हूँ। आज का लो भी सपोर्ट है, ऐसे कल का लो सपोर्ट बना हुआ है, आज का लो भी फिलहाल के लिए तो सपोर्ट ही बना हुआ है जब तक ब्रेक नहीं होता 15 मिनट टाइम फ्रेम पर। ओके लुक एट दिस मुझे लग ही रहा था ऐसा होगा डेफिनेटली। दो सपोर्ट पास में है, आज का डेलो ब्रेक किया है। नाउ देयर इज अ पॉसिबिलिटी कि ये नीचे वाले सपोर्ट एरिया पे आए और फिर वहां से सपोर्ट लेके जाए। उस केस में ये लेवल ब्रेक भी नहीं होगा प्रॉपरली, ब्रेक नहीं होगा इन द सेंस ऑफ सपोर्ट इंटैक्ट रहेगा या फिर रिमूव कर देंगे, रिटेस्ट के तौर पे काम नहीं आएगा। सडनली कैंडल बनी है, आने का वेट करना, डायरेक्टली मत ले लेना। डोंट एंटर डायरेक्टली इन बाइंग ट्रेड इन क्रूड ऑयल, ठीक है, थोड़ा वेट करना। ठीक है, ये भी एक सपोर्ट है, ये भी एक सपोर्ट है, ये भी सपोर्ट है। ऐसा ना हो तीनों ब्रेक कर दे, दो तो ये पास में ही है सपोर्ट, तो पॉसिबिलिटी वेरी हाई है कि ये लोअर इस लेवल को भी ब्रेक करे और फिर यहाँ से दोनों से एक साथ सपोर्ट लेके चला जाए जितना जा सकता है। दैट इज अ बेस्ट केस सिनेरियो। लॉजिकली बहुत पास में सपोर्ट रेजिस्टेंस बन जाते हैं, तो जैसा हमने नेचुरल गैस में भी किया है, नेचुरल गैस में भी सेम ही चीज़ हुई थी। ये सपोर्ट जोन था यहाँ पर और ये रेजिस्टेंस बनता जा रहा था, दोनों में फाइट हुई, किसी एक साइड निकलने दिया, एक साइड निकल गया, नीचे सपोर्ट कैसल चले गए कह सकते हो, बाहर निकल चुके हैं, तो वो रेजिस्टेंस ऊपर इंटैक्ट रहा, तो फिर वहाँ से सेल करना ज़्यादा सेफ है। सिमिलरली अगर दो सपोर्ट पास में आ गए, लाइक ये एक सपोर्ट है और ये भी एक सपोर्ट है, तो प्राइस सिर्फ यहाँ से सपोर्ट लेके जाएगा, चांसेस कम रहते हैं। नीचे जितने सपोर्ट पास में रहते हैं सब एक साथ ही मार्केट निकालने की कोशिश करता है। और ये लेवल तो हमारे पास मेजर सपोर्ट एरिया है, ये तो अभी इंटैक्ट है, काफ़ी दूर है यहाँ पर आना। मेजरली इस लेवल को देखते हैं, कल का लो, इट इज़ इम्पॉर्टेंट वेरी। ठीक है, बाकी अगर ये यहाँ से सपोर्ट लेता हुआ दिखाई देगा, अगर लेता है तो फिर ये जो पॉइंट ऑफ इंटरेस्ट से सेल ऑफ ट्रेड चल रहा है, इस पे यहीं निकल जाएंगे। इसका वैसे टारगेट तो यहीं तक था, बिकॉज बीच में कोई सपोर्ट बने नहीं थे, बट अभी फिलहाल के लिए थोड़ा बहुत प्राइस रुकने की कोशिश जरूर कर रहा है। ओपन इक्वल टू हाई कैंडल, करंट कैंडल इज ओपन इक्वल टू हाई। ओके, ओपन इक्वल टू हाई टेकन आउट। प्राइस एक रेंज के अंदर ही है, 3 दिनों से 4 दिन हो गए सॉरी, इट इज़ इन अ रेंज, कंप्लीट रेंज। ठीक है, इस लेवल पे भी आना पेंडिंग है, कब आएगा वी डोंट नो, रुकेगा नहीं रुकेगा वो भी नहीं कह सकते, बट या इट इज अ सपोर्ट एज वेल। नेचुरल गैस में भी वॉल्यूम डाउन हो गया कंप्लीट। US Senator Ted Cruz on Iran. If the Ayatollah is removed from the power, it will make America much safer. This is the leading state sponsor of terrorism in the world. Harvard-led study says AI can predict 71% of active fund trades. Wow. US consumer confidence rise on a stronger perspective for jobs. Iran Deputy Foreign Minister Majid Takht Ravanchi has said Tehran is prepared to take necessary steps to reach a deal with the United States on its nuclear program. News is bearish for crude oil. वैसे देखा जाए अगर ऐसा हो जाता है तो क्रूड ऑयल वापस $5,000 के नीचे चला जाएगा मोस्टली, अगर कुछ नहीं होता यूएस और ईरान के बीच में, जिसके चांसेस कम है बाय द वे.
Nuclear facilities was the single most important national security decision of the president.
Some serious.
It took enormous cojones, as Cubans would say.
Exactly.
Look, and it was a spectacular success. We're at a moment, Joe, where in the next 6 months we could realistically see the regimes in Iran, Venezuela, and Cuba all fall, and we could see them replaced with governments that want to be friends with America. Now let me be clear. There are 1,000 ways that can go wrong. So
how would you approach Iran? What is it? Another limited strike to try to prevent nuclear enrichment and to say we're serious? Do you go beyond that? Do you hope that somehow organically it happens? Because when you break it, when you own it and you break it, we know what's happened in the past. It's not.
So I talked to the president last week about this, and what I urged the president, I said, listen, the regime has never been weaker. They are teetering. There are real-world consequences to losing a war. The Ayatollah lost to Israel in the 12-day war. They are weaker. The regime is weaker than it ever has been. And what I've urged the president, do not miss this opportunity. If the Ayatollah is removed from power, it will make America much safer. This is the leading state sponsor of terrorism in the world. The Iranian regime is responsible for murdering hundreds of American servicemen and women. They fund terrorists all over the world. And so what I've urged the president is, number one, support the protesters and arm the protesters. Let the people of Iran, give them the ability to overthrow their government. And number two, I think there's a very real possibility we will see, potentially in a matter of days, limited strikes. What we're not going to see is boots on the ground. We're not going to see a ground presence of American troops there, but I think there's a real possibility of targeted strikes that are designed to support the Iranian people who are protesting, not designed to put America in the middle of it, but designed this regime, the Ayatollah, when he chants death to America, I believe him.
देखो जी थोड़ी देर पहले स्टेटमेंट आया है ईरान के डिप्यूटी फॉरेन मिनिस्टर की ओर से. It looks like they are ready for the deal with the United States. अगर ऐसा होता है क्रूड ऑयल के प्राइस गिर सकते हैं. We don't know yet. होगा नहीं होगा. परसों मीटिंग है शायद, आई थिंक कल इंडियन प्राइम मिनिस्टर पहुंच जाएंगे. परसों आई थिंक यूएस की और ईरान की मीटिंग है जेनेवा में. सो नीड टू सी परसों क्या होता है, परसों किस तरह से मीटिंग में कुछ निकलता भी है या नहीं, क्योंकि अगर ऐसा नहीं होता तो इज अ वेरी हाई चांसेस इस वीक के एंड पे या फिर नेक्स्ट वीक के स्टार्टिंग में मार्केट रिएक्शन दे सकता है उस केस में. बाकी आज एक बार देखेंगे स्टेट ऑफ द यूनियन यूएस प्रेसिडेंट की स्पीच भी है, दैट इज आल्सो इम्पोर्टेंट फॉर टुडे. क्या कोई सिग्नल देते हैं वहां से कि कब कुछ अटैक करने वाले हैं. कि टाइमिंग की बात करें तो 9 PM ईस्टर्न टाइम के अकॉर्डिंग आज शेड्यूल है डोनाल्ड ट्रंप की स्टेट ऑफ द यूनियन एड्रेस. इंडियन टाइम के अकॉर्डिंग कितना हुआ? 9 PM ET. uh, 7:30 AM IST. मतलब कल सुबह होगी क्या ये? इंडियन टाइम के अकॉर्डिंग कल सुबह 7:30 पर यूएस प्रेसिडेंट स्टेट ऑफ द यूनियन अपना संबोधन करेंगे, कह सकते हो, यूएस कांग्रेस में. तो कल अर्ली मॉर्निंग होगा ये, ठीक है. कल यूएस इंडियन टाइम के अकॉर्डिंग कल सुबह है. नीड टू सी क्या इम्पैक्ट डालता है तब तक मार्केट. फिलहाल के लिए तो मैक्रो न्यूज़ पर ही मार्केट रिएक्शन दे रहा है. ओवरऑल देखोगे क्रूड ऑयल स्टिल इन अ रेंज, कोई बहुत बड़ा मोमेंटम नहीं हो रहा है. रेंज है, नीचे सपोर्ट जोन है. एक बड़ी न्यूज़ मार्केट को कोर्स करेक्शन करा सकते हैं एक पर्टिकुलर डायरेक्शन पे, क्योंकि इस पर्टिकुलर रेंज में कोई बहुत बड़े सपोर्ट भी नहीं है. इंट्राडे सपोर्ट जहाँ पर प्राइस होल्ड कर रहा है. इसमें भी याद रखना ये ब्लू कलर की लाइन पहला टारगेट होगा, इसके ऊपर सस्टेन करता है तो फिर डे हाई सेकंड टारगेट रहेगा इन क्रूड ऑयल। डेटा आना था, आ चुका है, और कोई न्यूज़ तो नहीं है फिलहाल के लिए अभी। ठीक है, टारगेट थोड़ा बड़ा है ये 165 पॉइंट का, तो इतना पूरा टारगेट मत रखना। 1:5 है तो 1:5.1:6 ही मानो इसको। 1:6 का टारगेट है तो 1:3 में डिवाइड कर सकते हैं। ओके, अप्रोक्सीमेटली दिस इज द फर्स्ट टारगेट, इसके ऊपर सस्टेन होता है। सेम लेवल हो गया वो आपका ब्लू कलर की लाइन, उसके ऊपर सस्टेन होता है तो सेकंड टारगेट के लिए जाएंगे, विच इज 1:6। दिस इज 1:3 एंड अगेन दिस इज 1:3, 1:6 टोटल। तो इसको इस तरह से डिवाइड करके चलना टारगेट को। ये इंपॉर्टेंट लेवल है अभी 6045, इसके ऊपर सस्टेन होना जरूरी है वापस डे हाई गेन करने के लिए।
to the tariffs. They don't like the tariffs even more than they dislike the economy, even more than they dislike immigration. So I think that's probably the root of it. And the reason I say that is because this administration has been extraordinarily aggressive in trying to redistrict, into trying to hold on to the House. We know that last week they held a all cabinet, all hands on deck briefing about how to orchestrate the midterm election cycle. Speaker Johnson is struggling with a 1-seat majority right now. They cannot afford to lose anything. Otherwise, every member of the president's cabinet is going to be hauled up before the committees on the House side throughout the rest of his term to talk about, any kind of infraction that they might have seen, most of all, probably ICE, and then second all, the tariffs. So I think there's a lot coming the president's way that he would be well advised to try to avoid. And he's shown that he cares very deeply about the midterms with the redistricting efforts, even deploying J.D. Vance to Indiana repeatedly, for example. But nonetheless, the message is not resonating in terms of what policy shifts he should make, especially on the tariff front.
So it sounds like in many ways his staff is failing him by not ensuring that he hears this and he gets that feedback, to kind of push forward. What are you expecting to hear when it comes to trade policy? I know there's the tariffs angle to it, but we've been waiting for some kind of resolution to an updated USMCA, which President Trump negotiated in his first term. And given the anger he feels towards Canada, Mark Carney, it feels like it's just kind of DOA at this point.
I am very on the lookout for anything the president can do that's not tariff specific. So now we know that he lost his sort of favorite cudgel in the IEEPA tariff, which he could just announce on a whim, 200% tariffs on French wine, tariffs on Canadian jets. That's gone now. In the next couple of months, he'll get that back in a little bit with the Section 301 tariffs, but it'll be 4 or 5 months, I think, until we get there. So in the interim, I encourage clients to look at the other trade-related moves he can make, like exactly what you're laying out right now, which is, hey, I'm going to withdraw from the USMCA on July 1st when we're due to renew. I'm out. I don't like it. Canada's given us the short end of the stick. Mexico's not doing enough. We're going to go bilateral. That is a very, very powerful statement that the president can make without triggering tariffs, since he no longer has that authority. So I'm on the lookout for that kind of action as soon as tonight. I think it's perfect for a State of the Union address. I am also on the lookout for more sanctions. So that could be against really any nation for any reason. And he would not need Congress or a trade remedy in order to go through that. So both of those things, I think, are messaging points, a lot of bark that the president should be expected to deliver over the next couple of months. Now, for the investment community, though, I do not think he will actually be able to pull out of the USMCA, for example, or otherwise impose draconian sanctions or even put these tariffs back on. I think we've passed peak tariff and now we're just in headline risk mode. We're not going to see, for example, the rise in these 122 tariffs up from 10% to 15%, like the president telegraphed via social media. They don't have the votes for it. They don't have the support for it. They don't have the ability to renege on the Japan, the South Korea, the EU, or the UK trade deals. I don't think he has a lot of bandwidth to actually move on trade. So he has to message around it. And that's what we should be expecting for the next couple months.
Henrietta, 30 seconds left. Immigration, he could take a victory lap there. It seems like it's completely stopped. How's the administration viewing that policy?
Yeah, focus on the southern border all day. The president arguably was so successful so early on that he lost a really valuable messaging tool that he was able to deliver all throughout the 2024 campaign. Now what's happened is Americans have a really negative view of the immigration policies, especially Hispanic voters. If you're following the Texas early turnout data, it's crazy. Young and Hispanic voters are turning out in record numbers that we have literally never seen before, exceeding their past performance. And so the immigration narrative was a really good one, and maybe for the first 6 or 7 months of his term, but now it's toxic, especially since Minnesota and the shootings there from ICE.
Okay. Henrietta, thank you so much. We always appreciate getting your insight. Henrietta Trez, Managing Partner and Director of Economic Policy at Veda Partners. And you can catch extended coverage of the State of the Union tonight with a special edition of Balance of Power. Coverage begins at 8 p.m. Wall Street time with Joe Matthew and Kaylee Lyons on Bloomberg Radio and television. This could be a very, well, they always are eventful, I think, with President Trump, his States of the Union.
Right, because you just don't know what he's going to do.
You don't know what he's going to say. And he did tweet out earlier, or out on social media, get ready for a long speech because he has a lot to talk about.
Yeah, there's some popular State of the Union bets on prediction markets. What will he say? Who will attend? Who will Trump name? What places will Trump mention?
Yep.
Will all of Trump's children attend?
Interesting. Okay, so yeah, prediction markets covers everything. S&P up 40 points at 0.6%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, streaming live on that Bloomberg.com/video. And that's where you'll find all our stuff there. Novo Nordisk plans to slash U.S. list prices for its medicines Wegovy and Ozempic next year. We are a Wegovy household, so this is good news there. Michael Shaw, senior pharma biotech analyst for Bloomberg Intelligence, joins us from London. Mikey, what's Novo doing here? Are they going for market share? What's the plan here?
Yeah, I think that, the slashing of the list price would essentially improve access. I think in terms of the price cut, so 50% on the list, so it's bringing down the monthly cost down from $1,350 to about $675 per month. You won't see that sort of discount translate to the net price. So I think it's important to kind of make that distinction between the list and the net. What it does mean is, Novo will be essentially negotiating with insurers off a lower base, and then you'll probably see, some adjustment in the discount or rebate offered. But I don't think that 50% is going to translate down to the net price. I think what's also important to note is, it's going to benefit, patients here with high deductibles, insurance plans, or patients that have co-insurance plans where they're paying a percentage of the list price, but it doesn't affect kind of pricing in the direct to patient channel or the self-pay prices, which are obviously a key driver of sales and volume at the moment. So the floor here is effectively set by Trump RX, where the drugs are available at about $350 per month.
How do patients decide whether they want the Eli Lilly pill versus the Novo pill? Is it just whatever their doctor prescribes them, or are people going out in and actively saying, I want this one over that one?
Well, the Lilly pill hasn't been
or injection at this point,
yet.
yeah.
But in terms of the injectables, so Zepbound versus Wegovy, I think in general, based on our the prescribers that we've spoken to, and also based on the clinical data that's out there, Lilly's got the superior product. I think that was clear in head-to-head studies. There's a Redefine 4 trial that read out a couple of days ago, and the base case there was for Novo's Wegovy to show non-inferiority versus Zepbound. Didn't meet its primary endpoint. The weight loss actually looked inferior. There are a few caveats there. So in general, I think doctors, well, the ones we've spoken to, prefer Zepbound. In reality, it comes down to essentially cost and whatever the patient can access, either through what they can afford or their insurance plan.
Mike, I know you guys, since the beginning of all this, have kind of scoped out the size of the market here, and the numbers are just huge. What does the introduction of an oral dosage mean for maybe growing a number of patients that may be attracted here?
Yeah, so we still see a place for orals and injectables. Orals obviously helps improve access. They're cheaper. They don't face the same fill and finish constraints of an injectable treatment. And then in terms of kind of positioning, whether they're going to use for weight loss induction or weight loss maintenance, I think that the jury's still out on that. Different people we've spoken to and different companies that we've spoken to have different views on the positioning of an oral versus an injectable. But I think there's going to be room for both, and both formulations are going to be utilized.
What's the next real, I guess, big move here in this part of the market? I think getting the oral dosage is big. What's the next big thing? Is it just improving it, maybe lowering the side effects? What are you looking for next?
Yeah, so when we look at, we've done our analysis into the pipeline for obesity. So there's more than 190 assets in clinic. It's heavily dominated by GLP-1. So there's going to be a need for new mechanisms outside of GLP-1. One of the key ones coming through the pipeline at the moment, and is going to be in focus this year, is going to be amylin. So the idea here is to have I mean, it's a non-encredited mechanism. It's an injection, a weekly injection. But the idea here is to basically have GLP-1 like weight loss, but with better tolerability. So as you know, one of the main drawbacks at the moment of GLP-1 therapy is the GI side effects, so the gastrointestinal side effects,
Yep.
which
No doubt.
leads to discontinuations. So Amylin aims to solve that problem. We don't need to see kind of more than 20% weight loss. So Amylin drugs are generally targeting 15 to 20% weight loss
Right.
over a year. But we do want to see that improvement in tolerability. If it can show improvements in body composition, so that's fat mass loss versus muscle mass loss, that's going to be considered a bonus. So that's really going to be, the next focus or the next wave of innovation in obesity.
All right, Mikey. Great stuff. Mikey Shaw, Senior Pharma Biotech Analyst, Bloomberg Intelligence. Folks, he was one of our first analysts at BI. We hired him. He didn't even know it was anything. Now he's one of the top pharma biotech analysts in the city of London.
That's what we
It's
do at Bloomberg.
amazing. It's just amazing how Mikey's done such a phenomenal job becoming one of the go-to voices on global pharma. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metal. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence begins in just a moment with green on the screen. The S&P is up about almost 0.5%. The Dow's up 0.7%. And the NASDAQ up 0.8%. 10-year Treasury yield's pretty steady. Call it 4.03%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube, and you can check us out on Bloomberg.com/video. This is Bloomberg Intelligence with Paul Sweeney, John Tucker, and Scarlett Fu. And we have a lot coming up on the second hour of our program. We're going to check in with Drew Redding. He is our U.S. home building analyst on Home Depot's latest results. Sales topped estimates, and the company does see steady housing demand, but affordability remains top of mind. Shelby McFadden is the senior analyst at Motley Fool Asset Management. She'll give us her outlook on the markets, whether she's worried about private credit at all. Manish Jain is CEO of Metsy. And of course, he's building out an AI wealth platform, and we're going to hear from him why this is better than paying financial advisors or using a robo-advisor. And Geeta Ranganathan, our senior analyst on media here at Bloomberg Intelligence, will join us to give us her latest on the incremental news coming out on the Warner Brothers bidding war from Paramount and from Netflix. Paramount is set to submit a higher offer. We don't know how much it is, but we had heard that it would be at least $31. That was at least the reporting. A lot to come in this next hour of Bloomberg Intelligence, so let's get John Tucker to set us all up first with our Bloomberg Business Flash.
Well, it is a bounce after yesterday's AI disruption sell-off, and right now the S&P 500, 34 points higher, up 0.5%, 68.72 on the index. The Dow Jones Industrial Average right now up 355 points, and the NASDAQ 100, 238 points higher. That is up just about 1%. And right now, traders are looking ahead to tomorrow after the close of regular trading. And that's when we get results from NVIDIA. This could either calm or exacerbate fears about artificial intelligence, I guess. Speaking of which, Anthropic said it's expanding the reach of its Claude chatbot into new sectors like human resources, investment banking, and design. Mona Mahajan of Edward Jones, she sees a cyclical rotation in stocks continuing.
Parts of the market that are holding up better, cyclical, but more namely capital intensive and what we call old economy sectors are certainly holding up better. And we think that trade likely has some legs here.
And then you were mentioning Novo Nordisk, the price cuts there. So its impact on competitor Eli Lilly right now. Lilly shares are down 0.7%. So I guess this is good news. Saks says hundreds of brands, including Burberry and other luxury houses, they have resumed shipping to the retailer. The company, which runs Saks Fifth Avenue, Neiman Marcus, Bergdorf, is said to receive about $1.2 billion in new merchandise over the next few months. Positive turn as they're trying to emerge from bankruptcy.
Yeah, I went there over the holidays or right after the holidays, and it was slim pickings. Not a whole lot to choose from.
Because you had a gift certificate somebody
I
gave
had
you?
a store credit that I needed to use up, and I wanted to make sure I used up in case, for some reason, it wasn't going to be honored.
All right. So there you go. Scarlett trying to do her part.
Yep. To support the economy.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well as also on Bloomberg.com/video, and that's where you'll find us there. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg Television's markets correspondent, Nora Melinda. Nora, what are you looking at today?
Well, I'm looking at shares of Home Depot, ticker HD. I've always got my eyes on real estate, but we did see that this company in particular reported. Of course, we're seeing that they did have a pretty good report, a pretty beats across the board. But what people are really nervous about is the cautious outlook that they did present through the report. People are really just talking about the fact that we're still in this macro environment that still continues to pressure the company. But we do see shares right now up about 2.6% on the day and up about 13% year to date. But there's still a bit of speculation about what that outlook could mean, especially as we got that after Walmart, just a concern for the consumer more broadly.
Yeah, absolutely. It's one measure of looking at the state of the consumer and the state of housing and the state of the economy. Let's move to something in tech land. What do you have?
I'm looking at AMD. Can't stop keeping an eye on these tech names. Advanced Micro Devices, we do see up about 7%. This is after Meta said that it would buy the company's chips and computers designed to run AI models. The deal overall will be worth double-digit billions of dollars per gigawatt. That's according to AMD specifically. So as you can imagine, you do see Wall Street really celebratory about this news as they think about this, really having AMD taking a step forward. Shares of the company, though, so far this year, down about 2%.
Intuit?
Yes, Intuit. So this is ticker INTU. We're also seeing shares higher, up about 1.8%. This is after the announcement of a multi-year partnership with Anthropic to bring custom AI agents to mid-market businesses and deliver personalized experiences for consumers and businesses. So as you can imagine, this really is a tailwind for the company. People saying that this is really great news for Intuit, whose stock has really been battered. I mean, we're in toward the end of February, and this stock has lost 45% so far this year.
All right, good stuff. Norma Linda, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Earnings still kind of have trickling in here. We had Home Depot reported some numbers today. Some pretty good numbers, pretty good outlook. Stock's up about 2.9% today. It's up about 13% year to date. It's got a market cap of $386 billion. Let's check in with Drew Redding. He covers all the home builders and all the related stocks there, including the Home Depots of the world. Drew, what'd you make from the earnings coming out of Home Depot?
Yeah, it was a solid print for Home Depot, beat on same-store sales with a little bit of weather impact. I think importantly, they maintained their full-year guidance that they issued at their December Analyst Day, calling for comp sales of 0 to 2%. Quite frankly, when you think about Home Depot, it's really been steady as she goes for several quarters. If you strip out all the weather impacts that we've seen over the last couple of years, they're really growing demand at about a 1% comp range. So their customer has been resilient. As you heard on the call, though, the problem is there's just not really a catalyst for a significant next leg of growth. And a lot of that has to do with what we're seeing in the housing market.
Right. Affordability still remains a big issue, although mortgage rates have come down. So that should be a positive for Home Depot, no?
Yeah, of course. Lower mortgage rates we do expect will stimulate demand throughout the year. it should also encourage more refinancing activity, which could support bigger ticket spending. The issue is we just haven't seen it yet. If you look at existing home sales in December, they were below a 4 million annualized rate. That's about 25% below kind of what a normalized market would look like. One of the big issues that's out there, we heard it from Home Depot and we hear it from all of the builders that we talk to, is that there's just a lack of confidence at the moment, whether it's the direction of the economy or the outlook for employment. There's just a lack of urgency among buyers. And if you think about it, there's a lot of people sitting on the fence, looking at the headlines, saying to themselves, look, maybe home prices are going to come down. Maybe mortgage rates are going to come down further. So they're taking more of a wait and see approach. So I think until, we could kind of rebuild that confidence, lower rates aren't having much of an impact.
Drew, just in the last several days, the tariffs story and narrative has kind of reared its ugly head again. Just refresh our memory. How did the Home Depots of the world, how have they dealt with tariffs over the last year or so?
Sure. So for some context, Home Depot sources about 50% to 60% of the products they sell from North America. So those aren't subject to tariffs. The remaining portion, comes from, a number of countries. They've done well to diversify their supply chain. What they told us today is that they've pretty much implemented all of the pricing in terms of tariffs that they're going to do. It's about a 3% increase. We've seen it in average ticket this quarter, and they expect that to drive average ticket in 2026. As it relates to, the comments we heard Friday and over the weekend, as you would expect, given it's, happening in real time in a fluid situation, they said they're still analyzing the impact.
And very quickly, Drew, before we let you go, Home Depot's smaller rival Lowe's will be reporting earnings tomorrow morning. Are we expecting a similar story from Lowe's?
Yeah, I would expect to hear from Lowe's the strength of their professional customer. They've done well to invest in a space where they've kind of ignored for, a couple of years. That's really driven the outperformance of Home Depot. So we expect to hear relative strength there, a pickup from weather, but big picture, I do expect to continue to hear that big ticket discretionary spending remains challenged by those same things that we discussed, whether it's related to housing or overall sentiment from the consumer.
All right, it's safe to say I rarely go to a Home Depot or a Lowe's. Let's just be clear about this. So I have no idea what these
Well, you order over Amazon? Or you just don't?
I got people.
He's got people. Don't look at me. I'm not doing it. I've discovered I can fit 15 2x4s in the Subaru.
Okay.
That's the max.
Are you a Home Depot guy or a local hardware store guy?
No, I'm the local. I go to the local lumber yard. I think it's better quality. But if I'm going home and Home Depot's right there, it's more convenient.
All right. Drew Redding, he does that for a business. Drew Redding, that's his job. Home building analyst for Bloomberg Intelligence. We appreciate getting a few minutes of his time. AI, everybody's talking about it, even the big mucky mucks on Wall Street. Speaking at the firm's Investor Day, JP Morgan CEO James Dimon said fears about AI sweeping through markets are overblown. When asked about fierce competition across the financial industry, he said he's starting to see parallels to the era before the 2008 financial crisis. Let's take a listen.
Unfortunately, we did see this in 05, and 06, and 07. Almost the same thing. The rising tide was lifting all boats. Everyone was making a lot of money. I don't know how long it's going to be great for everybody. I see a couple of people doing some dumb things. They're just doing dumb things to create NII or say they're, winning in the markets business, something like that.
All right, that was JP Morgan CEO Jamie Dimon addressing the issue of AI and its impact on some of these markets here. More reporting on this. We're joined by Catherine Chiglinski, U.S. Finance Team Leader for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. What do you make of Jamie's take of AI and its impact on financial markets recently?
Well, it's obviously interesting given what we've been seeing in the market, right? There's been these sort of AI scare trades that are coming for almost every industry, each day. And so, I think Jamie obviously was expressing some caution around the different parts of the sector, but he also did note, JP Morgan is using AI. They're trying to figure out how best they can use it at the bank so that they can make things faster for their clients. And he was even talking about how they're having to think about using what they can do job-wise for their employees that are being sort of, in a way, AI is sort of encroaching on their territory.
So there's the AI angle, and then there's what Jamie Dimon has said about private credit as well. When you saw Tricolor and First Brands blow up last year, he was talking about cockroaches. If you see one, there's likely to be others. What is JP Morgan's exposure to private credit? What has the bank done on private credit so far?
Well, they are a big lender overall, so I think he does caution that, they're not totally immune from any credit cycle that will come around. But, I think they're trying to be careful. And it's interesting because you see different banks take different approaches. You've seen Morgan Stanley be very active in sort of underwriting of data centers and some of these big projects. I think JP Morgan has been a bit more cautious in some of these businesses, but it's hitting everything these days. I mean, AI really does play into every industry, but I also think he's also getting at the sentiment in the market, right? Things are highly valued. Like, there is really this feeling that, like, you have to be on guard about where the risk might come next. And yeah, just in case it is a big crisis again.
Jamie Dimon expressed that he thinks JP Morgan will be a winner in the AI race. I liked how he framed it here. Expecting to win in 75 out of 100 areas and lose in 25. Did he expound on that at all?
Yeah, I thought that was funny because he's right. There's a lot of businesses that will pick a niche and they will dig deep into that. So they will make sure that they're very good in one thing. And I think that was him acknowledging that, like, JP Morgan's going to go hard in many of the different businesses, but there are going to be competitors who pick off certain segments of the market and do it, extremely well. So I think that was some acknowledgement of, like, you can't always, you could try your hardest, but if you want to be the best in so many different markets, you're going to have to sort of pick your battles in a way.
Right. That goes back to the idea where he sees a couple of people doing some dumb things and the parallels to the era before the great financial crisis. Did he at any point say anything that suggested what some of those dumb things are?
Well, he mentioned, obviously, things that would boost your net interest income. So I think it's, a sort of aggressive lending that we might be seeing. He did mention, obviously, sort of the risks with AI and software and those companies. So, I think he's being a little cautious on exactly where he thinks, the strain is. But he did bring up a couple points where it's like, you got to be careful about AI. You got to be careful on credit. You have to pick your battles. You have to make sure you're really underwriting stuff in a way that, if something bad does happen, you understand your risk exposure and sort of you're being a little more cautious there.
While we're talking Jamie Dimon, I always feel like I always have to ask, what's the latest that he's been saying about succession?
Yes, it's always the famous.
Although, I tell you what, he looks as good as he's looked in 10 years.
Yeah,
I mean,
yeah.
And
he clarified for the audience he had a cast, but it was merely because he had necessary hand surgery. So no, things look good for Jamie Dimon. I mean, obviously, he did. The question was asked at this investor day yesterday, and he did clarify that obviously he will remain as long as him and the board are in agreement of that. He expects years to be CEO and then maybe executive chairman after that. So I would say it's not much clarity, frankly. I think it's kind of his repeated line of he's around for the next 5.
I think if you're shareholders, you're like, dude, stay as long as you want, right? I mean,
there doesn't appear to be clamoring from shareholders for, any defined line of succession, although he has said that, he's made changes and he's put people in place. It's still a pretty big stable of people.
Yeah, they have a deep bench, honestly, and I think that will always draw analysts and investors' concern is just making sure that deep bench stays around, despite the fact that Jamie is also staying around. But yeah, I would agree that obviously shareholders seem pretty.
Well, he's about to turn 70 in March 13th.
He's the longest-serving CEO among the big banks?
Of the big banks, yes. Yeah.
So longer than Brian Moynihan because he was there before the financial crisis, right?
Yes.
I mean, I'm just looking at his bio on the Bloomberg terminal. He's got a net worth of $3.9 billion with a B. That's pretty darn good for not owning
not
equity,
being a founder.
Not being a founder. Just that's just
Paid
salary
employee.
bonus. Yes, and put a lot of stock awards. All right, so Catherine, thank you so much. We appreciate that as always. Catherine Linsky, U.S. Finance team leader for Bloomberg News, joining us here in our studio. I forgot he graduated undergrad from Tufts. A lot of good, smart people came out of Tufts, and then
he's a New York City guy, right? Through and through.
Through and through.
Yep. So, all right, good for him. Yeah, and I mean, I followed his career because I was at Citi and the Old Travelers when they bought Salomon Brothers.
Right.
So he's been around, and he's just, had just extraordinary, world class. I mean, it's almost JP Morgan like. That's how big his tenure is.
Have you been to the new building, by the way?
No, but I noticed walking down Park Avenue last night after dinner, boy, has it changed the skyline of Park Avenue. You barely can even make out the Pan Am building or whatever it's called now.
Right. You just have this big towering hulk that looks like a fortress. Like
it is.
JP Morgan's fortress.
I'm not sure I like it.
You
have to get used to it because it has dramatically changed how Park Avenue skyline looks. It is. Anyway, amazing building. Well, more coming up. This is it.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages pushing higher, but as Scarlett pointed out, they've paired some of the earlier gains. I'll break down the sectors. You have 7 of the 11 major industry groups in the S&P 500. They're higher. Consumer discretionary, that's in the lead. Energy is the worst performing sector as the price of oil is declining today. You have WTI 66.12 a barrel, Brent 71.29. So that right now is down about 0.2 0.1%. And advanced micro devices among the individual leaders in the S&P 500, up about 7% after that blockbuster deal with Meta. The announcement signals that AMD is keeping pace with NVIDIA, which actually
गाइस क्रूड ऑयल में यहाँ पर लगभग हाफ प्रॉफिट बुक करना, ठीक है, इस एरिया के जोन पे अप्रॉक्सीमेटली हाफ प्रॉफिट बुक करना, इसके ऊपर निकलता है तो फिर सेकंड टारगेट देखते हैं 1:6 का. दिस इज द सेकंड टारगेट 1:6 अप्रॉक्सीमेटली, बट फॉर दैट एटलीस्ट बुक द हाफ प्रॉफिट. ऐसा ना हो कि मार्केट इसी रेंज में घूमता रह जाए अभी क्लोजिंग बेसिस पे. 2 घंटे और हैं, देखते हैं कितना मूव करता है, बट बुक द हाफ प्रॉफिट एंड ट्रेल द रिमेनिंग क्वांटिटी इन क्रूड ऑयल. थोड़ा सा अगर ये निकल जाता ना क्लोजिंग बेसिस पे 6050 के ऊपर तो फिर सेकंड टारगेट के लिए इजी रहता. बट टिल देन बुक द हाफ प्रॉफिट एंड ट्रेल द रिमेनिंग क्वांटिटी ट्रेल करते हुए चलना. फाइनल टारगेट लगा रखा है, वहीं तक रहेगा. साइडवेज गया तो इस रेंज में फिर कुछ मिलेगा नहीं ट्रेड करने के लिए. ओवरऑल टारगेट देखोगे तो वो थोड़ा सा बड़ा ही है, अप्रॉक्सीमेटली 1:6 देखूं अगर मैं. इट इज़ अराउंड 187 पॉइंट, ऑब्वियसली इतना ऊपर नहीं जाने वाला अभी. तो लगभग 90 टू 100 पॉइंट का एक पहला टारगेट, एंड देन उसके ऊपर गया तो 180 पॉइंट है ना, तो लगभग 80 टू 90 पॉइंट का फर्स्ट टारगेट है. और कोई न्यूज़ भी नहीं है फिलहाल के लिए. देयर इज़ नो सच मेजर न्यूज़ राइट नाउ रिगार्डिंग द मार्केट. वो एक न्यूज़ ही थी, स्टेटमेंट डिप्यूटी फॉरेन मिनिस्टर ऑफ ईरान, जिसमें उन्होंने कहा है कि हम यूएस के साथ कोई भी डील करने के लिए रेडी हैं. सो दैट इज़ अ बेरियस न्यूज़ ओवरऑल देखा जाए तो क्रूड ऑयल के लिए, बट अभी देखना पड़ेगा एग्जैक्टली होता क्या है, क्या मार्केट इस पर रिएक्शन देता है या फिर नहीं देता है. दैट इज़ इम्पॉर्टेंट एक्चुअली. The CIA has released a message in Persian addressed directly to the Iranian people. Hello, the Central Intelligence Agency CIA hears your voice and wants to help you. Below are the necessary instructions on how to stabilize secure virtual contact with us. Coinbase launches 24 by 5 stock and ETF trading for all US users. What is that? 24 by 5 stock and ETF trading for all US users. Okay, 24 hours, 5 days a week. Stocks and ETF trading. Coinbase. टू सी नेचुरल गैस कैसे रिएक्शन देता है. रिजेक्शन मिल तो रहा है, ऐसा ना हो क्लोजिंग होते होते यहीं पर क्लोज हो जाए मार्केट.
You went, whatever. Elena, thanks so much for joining us here. Talk to us about what's happening with the price of steaks, and people need protein, presumably.
Yes, absolutely. So the situation with beef prices is that they've just been going up straight up because supply is really tight. But when you talk to people in the industry, demand hasn't gone down.
Nope.
Which is really surprising. I know when prices first started rising, everyone was like, oh, there's going to be demand destruction, demand destruction. And largely all of the demand shifts we've seen have been happening in terms of like trading in between the beef categories. So overall consumption continues to stay super strong. And a lot of that goes down to Americans want more protein and the taste of beef is somehow still preferred.
Yeah, it's all American, right? I mean, we're Americans, we eat meat, we eat beef specifically. So of course, with prices the way they are, not everyone can afford to eat filet mignon the way they were able to before. So there are different cuts of beef that are now becoming more common, more popular. What are some of those cuts?
Yeah, the top sirloin is one that we've been hearing a lot as a swap for filet mignon. Omaha Steaks, which supplies a lot of the grocery stores and retailers, they've been going through like this dry aging process, which is like really hard for a consumer to do because it takes up a lot of space, takes up a lot of meat. So they've been doing that for 35 days, and then they got that USDA certified as like very tender, specifically with the intent of competing against a grocery store filet mignon. But beyond that, like we're also seeing a lot of consumers at home experiment with like slow cooking or other strategies.
Using that Instant Pot.
Yes, exactly. Like a 24-hour sous vide, just so they can use a cheaper cut of meat.
See, when we had the problem early in the pandemic with not enough eggs, my solution, I said, make more chickens. They did. Problem solved. It's a little bit different here with beef, isn't it? Because there is, I guess, the herd in the U.S. is very low right now, very small. Is there a plan to increase the number of cows out there?
That's what everyone's waiting for. Everyone's waiting for that herd retention. It's going to be a long process. Everyone keeps waiting for it to happen. I think right now people are saying probably this year we'll see some rebuilding, but that won't make it to the grocery store until 2027 or so. It's a hard situation for ranchers because they started paring back the size of their herds like several years ago at a time when there were a lot of droughts and the interest rates were really high. Because it just makes it very expensive to raise animals. And now, right now, with the beef herd being at the size that it is, the animals they do have are worth so much that it's still profitable for them to keep selling them for meat, as opposed to saying, I'm going to keep this animal, I'm going to raise it for it to have more calves later on to be sold into a market that like they don't really know what that market will look like that far out.
So it's harder than my chicken.
Yes,
strategy.
it is, unfortunately. It takes more time, for sure. How are restaurants responding to this? I mean, they can't not offer beef on their menu, so they need to do it, but are they also just kind of picking up the other cuts or being more innovative in their menu selection, menu
All of
offerings?
the above. Yeah, all of the above. I think they're picking up some other cuts. They're being more creative with what they're promoting. We're seeing a lot more hamburgers, appetizers in the form of like meatballs or other ground beef products that are a little bit cheaper. And we are also seeing, like especially on the fast food side, a little bit of the promotional spend shifting towards other proteins like chicken. So it's like you still have beef on the menu, but if you're trying to bring in a consumer, you're advertising the cheaper chicken option.
How often? I don't eat beef or steak very much.
But do you eat beef overall?
Yes.
Okay.
But I mean, the steak on the grill, I guess in the summer, that's a thing we do pretty often. But,
yeah.
You know,
John Tucker just had a hamburger last night.
I had one as well last night.
It was $35, no bun,
Because
and it
he
wasn't
bought it
very
in
good.
Midtown Manhattan.
I went to J.G. Mellon's, had a same bacon cheeseburger I had back in 1986.
Well, I was just sitting there by myself. You don't have a phone? You didn't call?
I mean, people are still eating beef, but I'll go chicken. Happy as a clam with chicken.
You know, one thing that you can't find in the grocery stores, like at ShopRite, for instance, is beef shank, which Asians use to make beef stew.
Really?
Yeah, you slow cook that, you know, and...
Is that a new phenomenon?
No, it's
Or just
something
not
that,
beef
like,
shank
I would
candy?
go to H Mart, I'd go to an Asian grocery store.
Okay,
I wouldn't get it in the regular supermarket,
All right.
but
Well,
maybe
bring
that'll
some-
become a thing.
Bring some in. We'll check. John and I'll check it
Bring
out.
it in.
We had a cow growing up on the farm.
I'm sure you
It's
did.
Just
You lived
nasty
a different
animal.
life than me.
Yeah, I mean it was a dairy cow, but
In Jersey.
They were.
All right. Elena Pang, thanks so much for joining us. Elena is the agricultural reporter for Bloomberg News. Her job is to make more cattle out there to bring down the price.
It's going to take time, Paul.
I know. That's what I heard. I watched, what was that show about the ranchers? I watched all that. All right, catch our new show, folks. Bloomberg this weekend. David Gura, Christina Ruffini, and Lisa Mateo. They bring you unique conversations and in-depth interviews on news, politics, lifestyle, and culture. Watch and listen on Bloomberg TV, Bloomberg Radio, and Bloomberg Business App Saturdays and Sundays starting at 7 a.m. Eastern. So that's going to be across all of the Bloomberg TV distribution. Good stuff. David Gura and Christina Ruffini and Lisa Mateo. So that's every weekend, Saturday, Sunday, in the 7 a.m. block. 3 hours of new programming. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with the two main stories that we're following today. This is a deal worth tens of billions. Meta going to buy AMD chips and computers designed to run AI models over a 5-year stretch. This starts in the second half of this year. And they're also going to receive warrants to buy 160 million AMD shares as well. AMD, 7% higher in today's trading. And then you have Anthropic expanding the reach of its Claude chatbot into new sectors. Just weeks after the startup sparked that market meltdown with the release of tools that raise questions about AI's potential to render entire businesses obsolete. The company unveiling new AI tools today for its Claude Co-work agent software designed to automate work in fields including human resources, investment banking, and design. And then, of course, after the close of regular trading tomorrow, we're waiting for NVIDIA results. Beth Kindig, the IO fund, bullish of the stock.
This stock is dirt cheap because it continued to put up strong quarters. And now the market kept it range bound. So personally, the way I look at this is it's a valuation story going into tomorrow night.
Right now, we are higher. All the major averages, S&P 500, 38 points higher. That's up about 0.6%. 68.76 on the index. The Dow up 340 points, and the Nasdaq 100 up 237 points. That is up just about 1%. I don't know how we missed this. It is National Tortilla Day.
Really?
So Chipotle is offering free chips. You have to buy a full price entree on the app to get the chips. So just
the chips is the cheapest part of anything they sell. So no
chips.
free guac or no free salsa?
Well, why don't you take it up with Chipotle and their management? We check the markets for you. You know,
hey, shout out to Chipotle, because there was nothing open in New York City yesterday for lunch. I mean, you had to.
That's why I had to eat that overpriced hamburger.
But what was open was a Chipotle down on 3rd Avenue, like 54th Street.
Shout out to Chipotle's employees.
Exactly. I did. I mean, they did a great job. So anyway, there you go. Everything's kind of back to normal today, I think.
All right.
More or less.
Have a good trip. I'm
Thank
going to
you.
go. Let's see if I can make it home to the
luck.
Jersey Shore.
Good
If
luck.
not, we'll see you later on.
Yes.
You'll see me back here in a matter of hours. All right. We check the markets view all day long right here on Bloomberg Radio. I'm John Tucker, Scarlett and Paul.
All right, very good. We got Scarlett, Phil, and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and on Bloomberg.com. I'm old school in a lot of things, including how I manage my money. I have a financial advisor, like a real person.
You pay him the fees.
At an existing investment bank. I've been with her for 20 years. He's my guy, Tony O.C., but that's not how the kids are doing it. And that's not how a lot of other people are doing it. And there's a lot of different financial platforms out there to help you manage your money. And our next guest has one of them as well. Manish Jain, CEO, and the firm is called Mezi, I believe, from San Francisco. Manish, thanks so much for joining us here. Could you explain to us what you guys do at Mezi and how that might be different from what some of our listeners and viewers do with their financial services?
Yeah, thanks for having me. Well, Mezi is a financial advisor. The only difference is that all of the advice is delivered through AI. And it's available 24/7, whether you have a question at 3 p.m. during a coffee break or at 3 a.m. when you have a burning finance question. It's just instant advice on demand without a human in the loop.
Okay, so why not use ChatGPT or why not use Claude, which seems to have supplanted ChatGPT as the answer to all things AI?
Yeah, it's interesting. We've seen a lot of our customers actually come from using Claude or using ChatGPT. And really, they run into certain limitations with those platforms. Huge fans of them myself. I'm using them all day long. But what they don't support is real-time connections to your brokerage and bank accounts. They require uploading financial statements. And then LLMs, large language models, are really good at natural language. But if you could look at all of the benchmarking, they're not great at math. And so we really try to make sure that we are delivering accurate advice through AI by solving for a lot of those issues, whether it's the real time or whether it's the accurate math that's needed for financial advice.
What type of, so how long has your company been around? How many, I guess, clients do you have or users? I'm not sure how you term it.
Yeah. We've been around for 2.5 years, and we have around 4 billion of assets connected to our platform across thousands of customers.
And what's a typical type of, I don't know, service you provide? I mean, you're not going to take me to a Yankees game like Tony O.C. will, but so what are you doing there?
Well, it's funny because you mentioned, all of the young kids, or that's not how the young kids are doing it these days. What's been really interesting to see is that, customers generally, our members come to us for three main reasons. It's retirement planning, tax optimization, and managing their portfolio. And so it actually lends itself to an age group that is around 40 to 75. I myself fall in that age group. I've got 2 kids, I'm married. And so complexity has entered my financial life over time. And so that's, those are generally that's the type of individual that's generally coming to our platform. It also lends itself to someone who is, pretty affluent, pretty wealthy at this stage in their life. They've been earning a good salary for a couple of decades.
So if someone wants to use Mezi, they would need to provide all of their financial information. I assume that means uploading everything from your 401k statements to your personal accounts to your Roth IRAs to your checking account. That's a lot of information to house with Mezi. What does your security look like?
Yeah, it's funny. We rely on data providers or data aggregators, Plaid, Finicity, Snaptrade, and these services are collectively used by the majority of Americans, whether they realize it or not. Venmo is one of the most common examples out there. And so we actually have no access to any individual's customer's account. We have no way to move funds in their accounts. We really, on a read-only basis, just pull in their holdings, the type of account they have, whether it's a tax-advantaged account or a tax-free account, and then go to work on providing them with advice across those accounts, whether it's proactively pushing them advice or whether they are asking for advice using our chat feature.
Manish, what are you finding so far that AI does well, and maybe that AI doesn't do well, needs to improve based upon your experience?
Yeah, we've spent a lot of time on the data actually underlying the AI so that we can really serve up advice. And AI is amazing because you can get in a natural language conversational format any answer that you're looking for, whether it's ChatGPT, Claude, or a finance specific one when you're coming to Mezi. The great thing is that it's on demand. The challenge, particularly with data intensive applications, is the speed. And if you're really investing in the data, then drawing upon that data in real time with a high degree of accuracy can be quite time consuming. So, one of the drawbacks with Mezi is a question on ChatGPT, you might get it back, in less than a second. In Mezi, a data intensive calculation could take 5 seconds or 10 seconds. And so there's that, but that is going to ultimately get much better. In even just the next month, it's going to get much better. And we're seeing significant improvement in models in just the past couple of months.
Your business model is to charge a flat subscription fee. It can be annually or semi-annually. There are 3 pricing tiers. Walk us through what is the difference between White Glove for almost $1,500 a year versus the basic $299 a year. I mean, most people, Paul Sweeney, I'm guessing, has a pretty complex financial portfolio, and he has very specific needs.
Yeah, one of the things that I didn't mention was people come to us for retirement, tax, and asset allocation. But if you actually talk to a lot of wealthy folks, they work with a financial advisor for a portion of their assets, and then they self-manage the rest on their own. And that might just be because they have an employer 401k, or maybe their partner's assets, so their full household, their partner's assets might be held elsewhere, or maybe they have a child's 529 account. And not all financial advisors are equipped to see the full picture, or even if they are, a lot of people are just hesitant to hand over all of their assets to someone else. And so you have this fragmentation. And so one of the draws or reasons people come to Mezi is for the holistic side of things, so that they can see the full picture. And so we do see all of those different accounts connected to Mezi, and that's really important for being able to deliver the advice. The difference in those pricing tiers is fundamentally at the level of AI how intense you are going to be as an AI user. And then at the $14.99 level, where it's interesting, we've seen a lot of folks that are relatively new to AI, just started using ChatGPT in the last couple of months, and they're not that well versed in how to prompt the AI. And so what we offer with the $14.99 feature, the $14.99 plan, the white glove, is basically hands-on AI coaching. How do you get value out of Mezi? How do you get value out of the AI?
And Manish, thanks so much for joining us. We really appreciate getting a few minutes of your time. Really a fascinating story, another application of AI. People ask, what are the applications of AI? All these billions that are being spent by the hyperscalers. Well, financial services is another one. Manish Jain, he's the CEO. The firm is called Mezi, M-E-Z-Z-I, based out there in San Francisco. Fascinating discussion. Well, Chicago Fed President Austin Goolsbee, he says that the Supreme Court's decision to strike down many of President Donald Trump's sweeping global tariffs may cause more uncertainty for businesses, but could also help cool inflation. Earlier, Goolsbee spoke with Bloomberg's Michael McKee. He began this portion of the conversation by discussing interest rates and then just interest rates and emphasizing that we must get inflation down. Let's take a listen.
I'm a little more concerned about inflation right now because I think the job market is pretty steady. I think growth is pretty steady. I think there's some promising stuff in the inflation reports, but there's also some warning signs. So, as I say, I'm not hawkish about rates. I'm pretty optimistic that we can get rates down further, multiple cuts in 2026, as long as we see the progress on inflation that forecasters have been forecasting, that it's supposed to start coming down. And I just want us to see some progress on that front and not get ahead of ourselves.
Well, you talked about that a little bit, and it's a question I asked Jay Powell once, is it seems like every time you put out a summary of economic projections, the economic outlook by the various members of the Open Market Committee, the 2% target gets hit 2 years from now.
Yeah,
the next one, it's 2 years from now.
That's exactly what
So what goes wrong?
That's a lot of things can go wrong. In this case, what I want to make sure is not going wrong is that we need inflation not to be persistent. When the part of inflation that has come from tariffs is supposed to go away, is supposed to be transitory, and when you see things like the forecasts say inflation's going to peak out and then start falling by the end of 2025, and then that moves the goalpost, well, maybe it'll be the first quarter of 26, and now they're saying, well, maybe it will be the second quarter of 26. That's not a great sign. We need to see, we should see, especially on the good side, if the tariff inflation is transitory, it's supposed to start going away. And as soon as we start getting some evidence that we're back on the path to 2%, as I say, I think rates can still keep going down. And if you look at the SEP dot plot, a large group of the committee thinks that where rates will eventually settle is still well below where we are today. It's just we must get inflation down from this 3% level that we've been stalled out at for now a year or more.
All right, that was Chicago Fed President Austin Goolsbee speaking with Bloomberg's Michael McKee. So that was from earlier. So one of the things we're keeping an eye on is this big M&A trade in the media space, Warner Brothers Discovery. All right, what do we know? We know that it's for sale. We know that Netflix has an offer that's been accepted by Warner Brothers Discovery. That's a good thing. But we also know that Paramount Skydance is very interested and has made repeated bids for this company. And it's been reported most recently that Paramount's actually raised its bid a little bit. But I don't know where we are. It's been hanging on for such a long time here. Somebody is following this stuff very closely, and that's Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence. She follows all of the media companies out there. Geetha, I guess Paramount's coming up with a higher offer. Do we have any details of what this new offer for Warner Brothers Discovery is?
Yeah, thanks, Paul. So we don't have the dollar amount. We know that it's above $30 a share. That's the tender offer that they launched a few months ago for all of Warner Brothers Discovery, they had informally agreed to take the number up to $31 or above $31, but we still do not have clarity on the number that they have revised it to. And, we're still kind of, I think at least the Warner Brothers shareholders, Warner Brothers Discovery shareholders are still kind of waiting for that best and final offer. So still, a lot of details not really disclosed. We have to wait to hear back and see what the Warner Brothers Discovery board decides.
I'm just looking at Netflix's stock. It's down 17% this year. It's down 22% on the trailing 12 months. This is a stock that did nothing but go up for years and years. Do Netflix shareholders, how are they viewing this potential deal for Warner Brothers?
Yeah, so, at this point, I think majority of the investors really view it as a distraction, at least in the near term. I mean, we've seen this happen time and time again when, winning an M&A, there's always this kind of cloud with M&A. You just don't know whether the deal is actually going to work. Execution risk is there, integration risk is there. For Netflix, there is the added complexity of, a long regulatory road. One doesn't really know how any of that scrutiny is going to play out on the regulatory side, on the antitrust side. So there's just a lot of uncertainty at this time, Paul. And, we do know that the underlying story, the underlying business economics for Netflix is working. I mean, they have subscriber growth, they have pricing power, they have a new lever in the form of advertising, which is expected to take off in a big way this year. So all of the underlying drivers are in place. Does the Warner Brothers deal help? Absolutely. It is a nice to have, but it is not a must have. And I think what the Netflix shareholders have been really afraid of is Netflix overpaying for this asset. We know that at the current offer, they're already paying 25 times EBITDA. Is Warner Brothers worth that? One can argue that yes, it is. It does have some global great franchises, but going above